All right, good morning. Okay. So those put flies will be doing well this morning. Looking for a bounce. Morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 9:24 a.m. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. The market's sharply lower.
Welcome back to Squawk on the Street. We've been talking so much about the violent rotations within the market. Momentum melting down over the last month. Semiconductors 20% off their high. So how does the market stay within 1% of an all-time high on the S&P 500? Take a look here at the Momentum ETF relative to Apple. Wanted this on a one-year basis. You have to see it come together. Actually, you've seen momentum coming down to meet Apple. So Apple is now on the verge of becoming the largest S&P 500 company once again. And the question now is it actually overbought? And can it do more work if, in fact, the momentum strategies decline? So Apple is now kind of stretched relative to its own 50-day moving average. If you look at the spread between the stock and this longer-term trend line, that doesn't get too much higher than that. So the question is, can you expect more out of it? Similarly, Mag 7, rest of it. Microsoft have been strong upside contributor this year, as have Alphabet and Amazon, and all of them now are coming up against this kind of potential resistance of their 50-day moving average, which in their cases are either flat or declining. So the question is, have we kind of maxed out the potential for the rest of the Mag 7 to take up the slack? Obviously, healthcare has been strong. You've had other parts of the market like financials that are working. But that's basically the setup as we get into the final day of the week. We're going to be back in a minute.
All right, looking good. Okay. Let's get ready for the opening bell. Okay. Got about 3 minutes to go. That's not right. That's not right. Let's go back here. Refresh that. Okay, 2 minutes, 40 seconds to go. All right. So I'll be taking some of these put flies off that I took that expired today. I have some for August as well. Maybe I'll exit those, look for a bounce, and re-enter. Okay, let's go check. Let's check VIX. I have VIX 22s for August. VIX, 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 VIX. Okay, we're getting close. All right, so those should do well. I did add to those, by the way. The VIX I was talking about adding yesterday And what's today? Friday. Also talking Wednesday all week about VIX 22s, and last week, while we suggested reducing your risk into strength where you could, that is paying off today because you'll have cash to buy a dip. I don't suggest doing anything today unless we get some sort of huge reversal.
SpaceX this morning trading further below that IPO price of 135. Of course, they did have to scrub yesterday's planned launch after the engines failed to ignite. We knew that things like this would happen.
SpaceX is on the move right now, off the low. Last night, Apple was up quite a bit, trading near, what was it? 330, almost got to 335 last night. Apple overnight. So that's turning back down. I was tempted to buy something after hours. I said, you know what? I trade enough during the day. I don't need to do anything after hours. As it starts to fade a bit, I would give the markets a few minutes. Like Santoli just said, markets are going to find its levels. Oh, we are open. That was quick. Okay, so today's... okay, so the SPY... what was that? What was that? What did I just sell? Filled orders. Okay, that was today's. Okay, I wasn't quick enough to catch the limit order I had in, so I gave up about $1, unfortunately, on these SPY put flies. It's okay. They serve their purpose. Let's see. VIX, nice spike in the VIX. VIX still pushing a bit higher. Okay, I'm going to take some profits in VIX. I'll take half off here. Okay, VIX 22s. I just took a little bit off. S&P is not moving anywhere because so many people just own the market, and that's a measure of the aggregate wealth being created and destroyed. But so far, it's a similar pattern where the average stock working, S&P not able to really make much headway. Keep an eye on the RSP, I guess, is the one to watch. RSP is the ETF version of that, yeah. And as I said, it did make a new high last week. Yeah. I think for stocks of the week, IBM is down. Okay. Almost at the bottom of the S&P, 25% week to date. Really hasn't caught a bid since it. Okay, SPY put flies, nice little profit there. Could have made more if I was quick enough. I was too busy. I gave up about $1 profit. That's never pleasant, but it is what it is. Still made a nice profit. Okay, VIX. Okay, so I got out of VIX at a good level. SPY. Okay, looking for a bounce in the SPY. And it just hit the 204 yesterday, intraday. It did send a message, at least to some, that look,
corporate budgets are not unlimited, and they have to make.
All right, so it was more like 80 cents, $80, not a dollar. That limit I had the July 17th, 740, 735, 730s. Okay, we're right at 740. So it was almost touching a wing on the put flies. I added these. We're right down near the middle of the fly at this point. Looking for a bounce. Okay, Netflix with a bounce. Netflix.
So, it's not unlimited, but that there was, room up to, maybe the higher 60s, mid 60s, something like that. I think there was also antitrust worries too in that report. Sure, that could be an issue as well. But 60-50 was, I think, the number that they were talking about as potential buying. I mean, the stock traded at $70 as recently as the third quarter of last year. So
okay, Apple starting to bounce. Okay, Apple.
Fertilizer names once again toward the top.
I'm going to wait until 10 o'clock for the opening range and see how these stocks fare. We could see more of a fade.
In the past 24 hours, 7 of those were Iranian, so that's not going the right way. And now we got Iran targeting desalination in Kuwait, which like 90% of the population relies on that kind of technology to get their water. So you got oil almost back to 82. That's going to take you back to June 15th or so. But the other thing that's happening in the background, and I know this is not an immediate solution to what's happening with Strait of Hormuz.
Snowflake turning back up. Okay, Snowflake had pulled back yesterday. Okay, we're still in this uptrend. Shifting a little bit more, broadening out now. That upper band and the lower, the 21-day there, we're right at the 9 EMA, not shown. Snowflake. All right, let's see. We got a decent amount of stocks higher. Yesterday, we had 350 stocks advancing. So that's telling you there's rotation underneath the surface. Money coming out of tech and anything related to AI, which affects a lot of stocks actually. Currently, we got 260 stocks advancing. That's pretty good. So SPY should bounce here shortly. Netflix with a bounce. That one's down a bit this morning.
Deflationary numbers on the headline monthly numbers, both in CPI and PPI, because oil prices had come down so much. So how much stomach is the administration going to have for high oil prices? President Trump lately has dismissed it. He says he's playing for something bigger here when it comes to Iran.
Microsoft with a nice bounce. Microsoft. That was trying to stay above the 50-day yesterday. So considering the volume, it looks like their institutions have been buying for the last few weeks. We'll know shortly. If we continue to move and we take out the 50-day, we close above the 50-day, that would be a good sign for Microsoft for next week as well. Apple turning back up. Apple made it all the way to almost to 335 last night.
If it's a defensive play, it's becoming increasingly an expensive one. It's an expensive defense. It's mid to high 30s PE. and it basically is getting the benefit of the fact that they are actually producing free cash flow. And the rest of the
just taking a few things off this morning. Microsoft's still going here. Microsoft. Okay, Microsoft. What do we have on Microsoft again? We sold some yesterday. Microsoft. Let's see. Okay, we got some 420s. Microsoft, some 420s. Those are for August, 420s. It has a September 410s as well. September 410, 415s on Microsoft. A little closer. Those are a 40 Delta. Okay, Amazon's on the move. Apple on the move here. Apple's bouncing. Okay, Microsoft, let's see what Apple looks like. Apple turning back up. Last night, we had a high here at 337. Okay, that was last night's high.
Somebody has to be selling. I was going to say, but you know, retail has been incredibly strong. In July, especially, even in some of these drawdowns and with some of these, rotations that we've seen in the markets, it's been really strong demand and appetite from retail persistently.
Okay, so there we go. Apple.
I mean, look, it gets extreme, right? Early 2021 was the peak of retail mania, and most of the stocks they own were not ones you wanted to kind of buy and hold. But
Apple after hours high.
For demand, there's been a ton of supply out there. We've absorbed a lot of supply pretty well. So that was AMC, that was right, sure, Viacom. It was also the whole stay-at-home trade, if you remember Peloton and the rest. But no, I mean, right now, if you look at the biggest holdings and things like a Robinhood, it's going to be in video.
All right, S&P is starting to turn back up. Let me see what I'm going to do with these put flies I have for August. I might exit as it starts to rise. Okay, so these are at, okay, that looks good. Okay, Kat, I got you. Stop bugging me right now. All right.
Margin calls and fall in South Korea larger than the GFC, larger than the Asian financial crisis. Netflix is at the bottom of the market. It's getting slammed on top of an already pretty weak performance so far. It's down 10.5%. I mean, this was a company, so it's where are we now? 66. The all-time high was
Okay, Snowflake got smacked back down. Microsoft and Apple looking okay.
How far it's the time where it was going to play in Warner Brothers Discovery, and now I guess there are questions about slower growth. Like what we got from the earnings with the guidance was disappointing on that front. Yeah, it's getting revalued as something more mature. And the signal for WBD was maybe a little bit of narrative dissonance about do they really need something else? And we've been through periods before where they incrementally withdrew data or metrics, right, on sub-guidance. Now it's these measurement semi-annual to annual. Right. I mean, it's not the greatest look, I guess, is what the tape would argue. No, they're trying to reorient, obviously, investors' attention just toward the financials. And they think they have a financial algorithm that can still convert into decent growth. Well, they had 13% revenue growth for the quarter, 9% earnings growth. But I guess forecast to be it's not bad. A little slower. I read in some of the notes overnight that Netflix is being used as a funding, basically a funding currency for the mega caps because it just doesn't have the same kind of AI to tell a story. Well, you pointed out. I mean, we're talking about a year in which we're doing 20+% earnings growth. In the category of traditional growth, compound.
Okay, S&P probably going to bounce around down here. Let's see what hedge flows look like. Okay, so early, this is Gamma. Notice the difference in Gamma to start the day. Starting the day, we have a lot of red overhead. So prices could accelerate back into this area. Purple down below. There is some support. NVIDIA pulling back. Okay, so it looks like it was just shorts covering for now. Okay, we got to wait for the opening range. At this point, shorts have covered. Last night we got all the way up to this high, 337-ish. Apple's market cap are surpassing NVIDIA at this point, according to CNBC.
What they don't like, how do they feel about this? How they feel about that? Like, there's a responsibility as a Nike athlete to rule supreme, because that's all I grew up on. That's all I know. That's all I've been a part of for 2 decades, being a part of Nike. And there's a responsibility that I feel responsible for.
Okay, XII, the ARC Institutional Index. This is what institutions hold in their core portfolios, about 75 stocks, give or take. Got another red stick on the move lower. So we're looking for a bounce in this area. We bounced here before. What are we talking about? Nike. Okay, we're looking for this to break higher. Nike. SoFi was down yesterday too, right? SoFi. Some of the regionals look good. SoFi gapping down. SoFi. What was it? KRE regionals. Inside day. Regionals holding up very well. Okay, we should get a bounce here, I would think. S&P.
What's amazing is a 10-year on Nike down 23%. No, it's back to where it was 15-ish years ago. And the valuation and earnings are too.
Okay, we're below the 50-day. Looking for a bounce.
We've been making jokes, Mike, about the VIX and what it would take to get back to 20. Awfully close today. We're getting close. Yeah, that's why the rotations, you have some slippage here. The S&P did kind of crack below its own 50-day moving average. It's done that a few times along this sideways period, but because we've been kind of going nowhere for a couple of months, that trend is sort of, feeling some wear and tear. So, 20s, actually 20 or low 20s has been a tactical buy when we get there. If nothing too big is going wrong on the macro, and right now you can't say anything is.
Well, I was gonna say, if you're looking for reasons, for encouragement, like financial conditions have eased a little bit. You can look at the 2-year yield, for instance, this week, and what we've seen is inflation stops going up. That's less urgency for the Federal Reserve to raise interest rates. Now, we don't know exactly what they're going to do, but they do have a meeting the week after next. They're going to quiet period now, and there's just less urgency for them to raise interest rates. So odds have dropped a lot. I mean, there's barely any chance in the market that they're going to raise in July, 50-50 on September. But again, if we see good encouraging inflation reports, we see lower yields.
Yeah. Logan didn't sound too convinced.
No, she's hawkish. She's a voter, Dallas Fed president. She thinks inflation is too hot. Jefferson was kind of on the fence.
To Sarah's point on bonds, watch the 2-year 411 today, more or less. It's going to take you back to July 6th. The best stock in the NASDAQ 100 is Kraft Heinz, and the Dow being led by Travelers, Merck, UNH. We're back in a minute.
Okay, markets are still looking for support. Looks like we might bounce here, S&P. Okay, you can see all the red on the screen. A lot different than what we've seen recently over the last couple of weeks. This has been purple, mostly purple. Now we've got a lot of red in here. Higher volatility picking up, VIX big spike. I did take some VIX off, took half off of the VIX. Nearly top tick this, pulling back in now. When it pulls back a bit more, I'll buy some more. I don't think this is over with by any shape of the imagination. S&P is starting to climb. I just saw the 35 deltas jump $3 on the S&P. S&P 7530. Let's see, S&P 7520s, 7500s.
And it's going to be a year or two before we know if they make it. So I think it will stay under pressure. And it's only, even if it goes at a 52-week low, it can go lower.
Victoria, is this a Oracle-specific problem, or what is happening with Oracle stock price should happen to most of the Mag 7 even further? Look, I get all the names have underperformed except Google this year, but do people need to rotate even faster out of, let's say, the Mag 7? If Oracle is sending a negative signal, why can't that happen to some of these other hyperscalers?
Okay, let's see if S&P, we're looking for a nice bounce.
$20 billion, $25 billion. We've had some up to $35 billion that have come so far this year. So I think it comes down to the balance sheet. And when you have free cash flow issues like you are seeing.
All right. Got a few minutes to go for the opening range. I'm your host, Cousin Benny, coming to you from theclosingprint.com. Preparing for this day, OPEX all week. We've been taking profits off into strength. Hopefully you followed suit. A lot of times I talk out loud about things that I'm doing and with the idea that you look at your portfolio or your trades and see what you might need to do as well. Taking profits off. We were pretty extended in many cases. Many of the semis had already started pulling back from the highs. I think, let's see what Taiwan Semi is doing right now. Taiwan Semi down a lot, and they beat. So overvalued.
Take a look at SK Hynix here, down about 1.5%.
Keep an eye on S&P for now.
Falling below the 149 listing price for the first time. We'll keep an eye on that as Korea did have their holiday. NDX, though, down, session low down 2.7. Just a stone's throw from the lowest since May 5th. Back in a moment.
Okay, S&P climbing a bit. Let's see what hedge. Okay, so you can see hedge flows are starting to turn up. Let me just zoom into this. Okay, hedge flows starting to turn up. 0 day. Let's see, non-zero day. Okay, all of this red in here just means prices can move fast up into there. We got 74.70. That's where volume. That's where resistance starts to pick up a bit. Okay, sorry for the quiet here. I got to turn this back on. So hopefully you took some of that off, some of your profits off into strength, collected some cash. I'm not going to be putting money back to work for another few minutes at least. Waiting for the opening range.
Yeah, when you look at things that are idiosyncratic like this, okay, it's shredded lettuce that's coming from a supplier. It looks like they've narrowed it down now. They know where it's coming from. They can stop using it and move on. And maybe the stock is taking a little bit too much of a hit. But as a consumer, we know that we don't change on a dime. We're probably going to avoid some of that, thinking how long is, could there be some issues there at these restaurants from there? So I would be a little bit careful on these stocks yet. I would want to wait and actually see them start to turn around before I went into them. And perhaps you play a little bit differently. I mean, we own like Kroger or General Mills. Maybe you go more that area of food instead of going on the restaurant side, at least for the near term.
Drinking with energy drinks with the Celsius, publicly traded company, and everything you drink there. I mean, it basically just protects your stomach from getting sick.
Okay, nice bounce so far, S&P.
Their traffic was under pressure. People are balking at high fast food prices. Like, none of these fast food names just strike me as attractive to getting.
Where? Oh, there you are. Okay.
Like you mentioned, Thomas or Micron down double digits from the highs instead of trying to come here and pick a bottom at McDonald's.
Yeah, it's interesting with the fast food price. You're really seeing the case we talked about for months now about vacation for similar.
Nice retracement back towards 7,500.
Income under pressure as well. So that does affect the fast food restaurants in terms of their traffic. And I think it's more an economic point in time.
We were talking about higher oil prices. WTI crude is up more than 14% for the week. Sixth day of clashes here between the U.S. and Iran as they battle to control the Strait of Hormuz. Pippa Stevens joins us from headquarters with more. Pippa. Good morning, Sarah. So it is the best week for WTI in more than 4 months as traffic through the strait drops with the reimposition of the U.S. blockade, also taking Iranian oil off the market. Their loadings at the start of the month had been around 1.3 million barrels per day and ramping.
Sorry about the double broadcast there.
Never want to be in this position again. And today at the U.S.-Iraq Business Summit in D.C., some $60 billion in deals will be announced, including around pipelines. Goldman estimating that by the end of 2028, more than 60% of Gulf producers' exports will be able to be routed via pipeline.
All right, we're back to the fifth today.
It's easier to build single-country pipelines. Now, traders are closely watching developments with the Houthis and whether they step up attacks, especially in Bab el-Mandab at the south of the Red Sea. Saudi Arabia has kept oil flowing via that waterway, which could now potentially be at risk. And diesel futures are having an even bigger week than oil itself, adding 15% and topping $4 as Russia's ban on exports strains the market. The 3-2-1 crack spread hitting a record $70, speaking to how tight fuel markets are relative to oil itself. Between the Middle East and Russia, the world is now losing about 8% of demand. Guys? What is the thinking about what happens in the strait?
Can we make it to 7,500?
The U.S. can
What do you guys think?
Guide these ships through.
You think we can make it to 7,500?
Well, we did see the step up on attack on some of those ship-to-ship transfers, and that does seem to mark a little bit of a turning point.
I'd like to see a little dip here.
The death of a crew member there. And so that then brings up the question of, with that type of escalation, do ship owners really want to send their ships through, even if they are guaranteed passage by
7,500 is a 25 delta at this point.
Seen a resumption of flows yet. That is one thing we
I'd wait for a dip to buy it.
Especially which
Opening range, waiting for the opening range.
Some dark trends is continuing through the Iranian route, but not so much happening on the southern Omani route. So that will be one thing to kind of gauge the appetite for ship owners, but also insurance has now gone up to about 6% of the overall hull cargo. So clearly in a pause moment for right now, with owners waiting to see kind of if there's another escalation or a de-escalation to determine whether or not they opt to send their ships through.
Pippa, thanks for that. Pippa Stevens, Watching Energy. Can't take your eyes off that. We should mention some of the rebound in the Dow, now down only about 80 points. Travelers doing a lot of work, up almost 8% on their earnings.
Keep an eye on Trace. All right, so we're into this little pocket of positive gamma. There's going to be a little bit of resistance right here. If we get above 74.70, we could rip this thing a bit more. Okay, you can see where resistance is, 74.95. Above 7,500.
Overall is not positive yet, but obviously mitigating the damage by going into defensives.
And some cyclicals, though. Financials and industrials materials are all higher, too. So that kind of...
Financials is Berkshire Hathaway, which is like one of the most defensive things. But you're right. No, it's absolutely more broad than just...
They've had a good week. They've had a 2% up week, financials.
Yeah, it was a nice start to the week anyway on bank earnings. Take a break here. Don't go away.
R1 is right overhead, R1. Okay, if we get through here, could be pretty interesting. Do they save the day? R1 is just overhead. Okay, keep going. Keep going. Most people, most new traders are probably flat-footed, afraid to do anything, which is not a bad thing, I guess. But we got a little bit of resistance right here. Let's see, that is at little resistance right there. Okay, so 74.70. 74.70. 7,500. Okay, Apple turned back down. Okay, let's go S&P. Okay, S&P climbing. Okay. Let's go some more. Let's rip this. Wow. Pretty impressive move so far. I'll probably reload on VIX calls shortly. This isn't over with, folks. SK Hynix on the bounce. SKHY. Momentum traders are all over this.
Good Friday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and Mike Santoli. We are live.
Okay, I might buy some longer dated SKHY. SKHY.
Leads declines for the major indices on pace for its first negative week in 3. Apollo's Torsten Slot will join us in a few minutes to break down just how
Let's
much
see. Where's the open interest at?
Netflix also getting hit hard. It's the biggest laggard on the S&P after disappointing guidance. We'll talk to an analyst who says this is a great buying opportunity for the stock. And with
What about March of next year? There's not a whole lot of open interest there.
Traders are navigating the weakness.
Let's get some Umish here, just crossing the tape with Rick Santelli after a busy week. Hey, Rick.
Good morning, Carl. Indeed, a busy weekend. There's some surprises here, folks. Now, this is our July preliminary read on University of Michigan sentiment. And do remember, the headline number hasn't been above 50 since March. But boy, we're expecting it to be 51, 54.4, well above expectations. And that would be the best reading since 56.6 in February of this year. If we look at current conditions, very similar. We're expecting a number a bit below 49. Hasn't been above 50 since April. 54.9. That would be the best read since March of this year.
Okay, SK Hynix.
It was the only one
looking at that one.
That was above 50. We're expecting 51.9. It comes in at
as a potential trade. All right, so S&P flagging right now. S&P
Now the inflation
still going.
4.2 is the 1 year, 0.2 less than expectations, 0.4 less than a 4.6 in the rearview mirror. 4.2 be the lightest since March when it was under 4%. And finally, the long read on inflation, 5 to 10 year, expecting 3.3. It is 3.3, and last month was 3.3. And those reads, well, we also had January and February. So the low read of the year was March at 3.2. We're getting a bit close. If you look at yields, they're down across the board and curve flattening. So the steepening cycle, which was so aggressive from 624's 24 basis points to earlier in the week touching almost 42, seems to be over. We dip below 40. And do remember, both maturities are down for the week in terms of yield. minus 9 basis points at 412 for a 2-year, and at 452 down 4 basis points for a 10-year. A 10-year hasn't closed under 4.5% since July 6th. Sarah, back to you.
Okay, S&P
Okay,
still
thank you for the
climbing.
news on consumer sentiment, and the survey says it was pervasive across the population, age group, income, wealth, and even political party. So a lift in sentiment, probably due to the lower oil prices we've seen over the last few weeks. But guys, today I wanted to, with the AI trade very much in focus, the weakness in tech again.
Okay, 74, 75, 74, 80s. I'm taking profits.
Use of cash from the hyperscalers, the Googles and Microsofts and Amazons, the big spenders on AI. I think this chart is pretty stunning from Big America, which just shows the 12-month forward free cash flows and just how much of a shift we have seen. The hyperscalers in orange, they're the ones spending on the data centers, billions and billions, trillions of dollars. And where a lot of that money is going is right into the semiconductor companies. Look at how much their cash flow has gone up. But this is, I think, one of the sort of defining charts right now of the AI trade. The problem is, you know, the money is so intense and the scale of the capital expenditures, the capex, is so strong that now these companies are relying on the debt markets to finance the AI build out as well. And, you know, that is it could be a risky thing. This chart from Wolf Research, I think, shows you just how much these debt loads are growing because CapEx has now surpassed the cash flows that are on the balance sheets, the cash positions that are on the balance sheets of these companies, whether it's Google, Meta, Microsoft, Amazon, and Oracle. They just keep going up. We'll wait to see what we get in guidance, which is opportunities, and the market loves it. But on the other hand, the debt loads go up as well. They have to rely on external sources.
Okay, nice rally.
It's been a thing.
Need some high ticks, more high. We need some high ticks.
It's gone okay, but you know, Bloomberg had a report today that some of the debt is underperforming actually, and we're seeing a little bit wider spreads than we had in the beginning of the sort of revolution around AI. So let's watch that. I mean, if the Fed does raise interest rates, you know, this could be sort of a riskier proposition, or if there's any hiccup in the bond market.
Yeah, tech has definitely become a little bit more rate sensitive, kind of financially flush, and cash flow shift that's happened almost overnight. It's taken money from companies that were given a 25 to 30 forward PE multiple, because they had reliable growth and free cash flow, to hardware companies that almost all trade much cheaper.
Okay, let's keep an eye on.
Free cash flow is not getting reflected at the
okay, resistance coming up.
As much as it had before. On the debt
okay,
side,
7,500.
Microsoft, Alphabet, Amazon, they have no problem.
Okay, Netflix climbing. I did take some. I did take some iron condors. Those are looking better now. SK Hynix.
And that's really why it is kind of like a bet company type of thing for Oracle. Whereas for the others, they can handle it, but the individual debt sales there are so big that if you're a fixed income manager, I mean, how concentrated do you want to get even in a very solid name? So I think that is why they've traded soft, because they're kind of testing the appetite of bond managers to just take them down.
And just how much higher can they go? Because there's no sign of let up, which is also, you know, a bullish sign for the AI trade. But look at this Jeffries chart as far as just how much AI is spending as a percent of GDP. We have now surpassed the levels of the dot-com boom in the internet. And it's why this is becoming a bigger macro risk.
Okay, NVIDIA on the move.
In U.S. information processing equipment and software as a percentage of nominal GDP is at a record 5% in 2026. The prior peak was 4.46%, and that was in the fourth
okay,
quarter.
chips getting bought.
So
okay, that looks good. Thank you, Captain.
And it's why it presents, you know, either tailwinds or headwinds.
Some great.
Keep in mind just the size and scale of not just the investment, but now the debt load that's being taken on to fund it.
For more on this, let's bring in Apollo's chief economist, Torsten Slok, who joins us here at Post 9 on this Friday. T, it's great to have you back.
Thanks for having me.
When you see charts like the one Sarah shared, do you think about liabilities for the economy?
Well, what's really important about that chart is that has just been going up steadily for literally decades. And it used to be the case that the cyclical parts of the economy were housing and
some great posts there in, folks. Making my job a lot easier, being able to look at the room and see exactly where The markets are moving as well as what I usually do. All right, so the S&P getting close to 7,500 now.
In capex on the AI trade, it will begin to have a more meaningful impact on the economy because this has suddenly become an important factor. Before it was not, and now for the first time really ever, we're now having that this is mattering for how we think about the GDP forecast.
There is, I mean, hyperscaler UBS today, hyperscaler capex growth, they seek slowing to 25 and then to 6 and 28. Are you in that camp?
Well, the risk is, of course, that if the AI trade runs out of steam in the sense that if there is a risk that the revenues may not be coming as quickly as markets are pricing, that will have a number of spillover effects, not only to markets and the pricing of assets like we're seeing at the moment, but also to GDP, because AI has been such a critical component. AI spending in total has added about 1 percentage point to GDP growth this year.
And we're running 2 and change.
Exactly. GDP is normally 2, and now roughly half of growth is coming
SK Hynix, SK Hynix.
in the stock market that comes from consumers.
Okay, opening range breakout so far. Let's see if we follow through. I think we probably will. You can see where we are building a range now. There's your low. There's your high. Okay, so we're ping-ponging in this area. 50% retracement back up in here makes sense. SK Hynix. Netflix continues to climb. Netflix continues to climb.
This is exactly why this is a part of also the family fight at the Fed. Namely, what is your view on what is the impact of this? Certainly at this point, of the 18 dots in the last FOMC meeting, 9 were saying, literally half were saying, we need to hike this year. So this split, and therefore the famous family fight here, is not only about inflation and what's going on with oil prices in the Middle East, it is also the very important view on what is your view on is the AI spending boom going to continue or not?
No, but I guess I'm saying is, are there risks on the fact that they're borrowing, that these companies, Microsoft and Google and Meta, are borrowing so much more?
Absolutely, and as we speak, spreads are widening out for hyperscalers, and also CDS is widening out quite substantially.
Is that a problem?
So, of course, CDS for Oracle is at the same level it was at in 2008, and at the same time, CDS also for the hyperscalers has gone off the bottom. They're not up significantly, but the trend is certainly not your
Okay, I'm going to take these. I'm going to take these iron condors that I sold on Netflix. I'm going to take it off at 50 cents. Limit 50 cents. Good till cancel. These expire at the end of the month. Chose end of the month because the IB was still pretty high. And that'll give me about 75 cents per contract profit. $750. I got 10 of these. Let's see. Make sure this is right. Don't want to be too quick. 50 cents. Yeah, okay. Limit 50 cents.
There was a sense of we have to have this investment search to get the models built and get this stuff to scale. And then after that, we reap the rewards. And it becomes this kind of lower friction type of world. I guess it's unclear if that's going to be the case or if this is going to be just the ongoing. There's going to be asset-heavy companies now, these tech companies.
So that's why markets are now saying, show me the money, show me the returns of all the investments you have done. And that's why we look at profit margins for the Magnificent Seven. For the last 5 years, they have done incredibly well. But profit margins for the S&P 493 have literally done nothing for the last 10 years. So what we're really waiting for is to begin to see profit margins increase, not in the Magnificent Seven, they have done well, and the hyperscalers, but in the rest of the economy. And this is the inflection point. When will that come? Is that coming soon? Does the market have the patience to wait for that? If it takes 6 more months, that becomes the whole issue at the moment, whether the innovation comes quickly.
Which is why we talk.
Okay, Netflix still climbing. Okay, I might actually move this up a bit more. My limit order to close.
Unfortunately not, and that's why this is also part of the Fed's debate, of course. Again, it doesn't become more clear than when you have half of the FOMC members saying,
Keep going, Netflix. Just keep going. All right, Broadcom, nice bounce. Looking for SK Hynix to continue. Apple off. Okay, Netflix. Nice move on Netflix off the low.
There's some other risks now from the downside from the AI trade, or should we, on the other hand, hike rates just like the Europeans did, basically go against the inflation trends that we're seeing?
So is the easiest call now to say they stay pat? What's your call?
Sarah and I were in Sintra here a few weeks ago, and the Europeans have a very strong view on this, and they said, no, we got to go against inflation going higher, no matter what else is going on. Of course, the Fed has a dual mandate, so they don't only look at inflation. They can also begin to say, well, maybe the labor market gets a bit weaker, so let's see what happens.
At 208.
I know, but that's why
And
for
Roche
them.
has not said that.
No, but that's why they are really leaning more. They are the ones that should be hiking rates because they also have a strong labor market. So the bottom line is, it is very clear that the FOMC is really stuck in a difficult spot because they had so many arguments that they should begin to hike rates soon.
I mean, the story this week is
Netflix.
Certainly at the short end and the 2-year, because
Okay, those looks good. We continue to rally up. Okay, so we're getting close to my limit order. I might actually move this to 40 cents or 35 cents. If I move it to 35 cents, that'll be $1 profit per contract. Nice little overnight profit. I don't want to get too greedy. Netflix still moving. I'd like to see Microsoft and Apple bounce. S&P starting to flag out. Consider taking some profits off, reload, give it a few minutes.
Do you think the market is wrong about what the Fed's going to do?
So the market is still pricing that we'll get a Fed hike later this year. So it is still the case, yeah. So I still think that the biggest risk is that the market is underappreciating that rates will stay higher for longer because inflation is higher.
It's a pretty
looking good. S&P. Okay, still got the trend for now. Let's see what time. Oh, it's 10:14. Let's see what stocks on the top of the list. What is Hona? Never heard of it. Hona, Honeywell Aerospace. Oh, there you go. Oh, that's the spinoff, right? Honeywell Aerospace. Okay. Okay, we got opening range breakout on Honeywell Aerospace. What else? Let's see. NBIS. Sounds like a TV program. NCIS, I guess. NCIS, NBIS, NBIS. Opening range breakout. Okay. Don't like the pattern on the daily, but the short time frame looks good. Nebius Group. Diamondback Energy. All right, that one pulled back way off of its opening range high. Okay. Palo Alto Networks, PANW. Okay. Wow, what the relative strength, PANW? Talk about relative strength. What is CrowdStrike doing? CrowdStrike 2. And Zscaler. Let's see Zscaler. Even Zscaler. They didn't drop with the market. Okay. Watch the banks. Banks look good too. Thank you, Corey. Okay. What a nice profitable morning, huh? Both on the put flies and VIX calls. I'm going to reload the VIX calls, by the way. We're back down here. Okay, let's see how far we can go. Maybe we get down to the 50-day moving average on the VIX. Could start to scale back in. Captain, did you take profits on your VIX calls? All right, I'm going to reload SEPs this time. Oh, beautiful, beautiful. Good. That's what we got them for. We got them for the spike. Not for a trend trade. All right, S&P continues to climb, looking really sharp here. Okay, watch going short just yet. Okay, they continue to buy this up. Okay, almost at 7,500. I need to take these 7500s off.
Welcome back. Netflix shares tumbling this morning after some disappointing guidance issued yesterday after the bell.
Okay, let me see if Netflix. Everything's working today. Everything's working. Thank you.
Over what engagement actually says about the business, as analysts cut price targets on concerns that slowing engagement is beginning to weigh on revenue growth. But co-CEO Greg Peters arguing that more viewing hours don't necessarily translate into greater revenue or profit. Live programming, for example, accounts for only 1% of viewing, but has driven more than half of its biggest sign-up days in the last 5 years, meaning that an hour of live sports can be worth more than an hour of library viewing because it does more to drive acquisition, monetization, and ad revenue. But investors, they are not fully buying that yet. I've counted at least 17 price target cuts this morning. Wolf calling the quarter a win for the Bears. Barclays says Netflix is losing narrative control, with analysts really focused on softer Q3 guidance, slowing revenue growth for 3 consecutive quarters, and the decision to disclose viewing hours only once a year. But this also is not a wave of downgrades. Most firms remain at buy or overweight, pointing to scale and ad business set to double this year and record buybacks. Now on consolidation and whether Netflix could consider a deal to buy NBC Universal, co-CEO Ted Sarandos had this to say.
We're primarily builders, not buyers, and that remains the case today. So others will speculate about our intent to, here because they have their own reasons for that. But our track record is clear that we have a very high bar to do any big M&A.
So from here, the focus is on whether partnerships, vertical video, podcasts, live programming, including that TF1 deal in France, as well as AI-driven production savings.
Netflix, a lot of short covering. All right, Apple's starting to turn back up now. Apple. Short covering, Apple. Okay, let's see what is actually working. LITE. We're looking for opening range breakouts. LITE.
Exactly. Really, the bull case from here is that Netflix says viewing can still grow.
PANW.
And they are chalking that up to the fact that, hey, we in the back half of this year have a stronger slate of lineup that's going to help engagement improve as that competition fades from competitive sports.
Okay, Diamondback, CrowdStrike.
Very much pushing. Okay,
we're going for an orb here. CrowdStrike, chasing Palo Alto.
Having their own set of vertical videos and more of the shorter form content. They're also fighting with the likes of Tubi for free lean back television, and that really helps.
Let's see, Cisco. Cisco was a friend of mine. Cisco, opening range high.
But there is a world in which we see other live channels offered through Netflix as more of that, because keep in mind that opens up the real estate for its ad business as well, which is on track to double to $3 billion this year.
I appreciate that big story, and as we pointed out, down 50% from those 130 highs not too long ago. Mackenzie Segalos.
Okay, looks like Cisco wants to go here.
SpaceX rocket with the stock now below the 135 IPO price. Jamie Dimon weighing in on this week's inflation numbers and the impact of the
Cisco.
That's when we come right back.
Cisco kid was a friend of mine. Wow. Okay, we've got a descending wedge. This is generally considered bullish. On the break, if it breaks above that upper trend line, for now we just got to get back above the 50-day. Cisco looking pretty good. Opening range high. I don't see a burst in volume, so that's a little susceptible to failure. SNDK, many of you talking SNDK. Okay, SNDK, opening range breakout, SNDK. Okay, some of you were talking SNDK much earlier. I believe, John, you were talking SNDK, right? Okay, looks good. All right, Netflix. Nike. LeBron was talking Nike this morning, and it didn't help it much, did it, Nike? Continuing on with the stocks that are seeing Rocket Labs, RKLB. This was active the other day, but it did drop below the 200-day. Rocket Labs looking for a push back up. On Tuesday, we were looking for this to bounce. It faded. So we got an opening range breakout on Rocket Labs, RKLB, opening range breakout. Okay, Honeywell spun off Hona, Hona. Sounds like a Hawaiian island, Hona, right next to Kona. Hona, Honeywell Aerospace looks good. What do some of the other names look like? Boeing, Lockheed Martin. Well, it's like the market's completely ignoring what's going on over in the Middle East. Today's pullback or the gap down or the weakness has very little to do with, I'm sure there's some of it, but very little to do with Iran and the conflict over there. It has more to do with extended price action in stocks like Micron. Micron got a opening range breakout signal. Orb. What's SK Hynix looks like? SK Hynix. Okay, SK Hynix has an opening range breakout. SKHY, Orb. Okay, so I'm going to buy some of this SK Hynix. Okay.
SpaceX though will try again in a few days. And for more on how the market is thinking about SpaceX right now, below that.
Okay, I might shift my limit order to close Netflix at 65 cents. So still it's 75 cents, 70 cents profit, 70 cents profit, $700. That's nice overnight dinner money. If you go to Ruth Chris, you can easily drop $400 on two people. Okay, let's see. SK.
Including the stabilization agents at the banks that took SpaceX public. As a result, SpaceX options volume isn't quite as bombastic these days. Right now, it's least traded among the top 5 today.
Oh man, SpaceX down to 126.
Including 8 of the top 10 contracts by volume. Now,
might start to add to SpaceX down here.
Do look like they're mostly being sold this morning, so keep your eyes on that level. As one bearish narrative that was looking decent now is that these IPOs
let me say something about SpaceX. All right, SpaceX. I did buy some shares. They're down. Okay, but that's the one. That's why I scale in. Okay, that's why I scale in. You know, taking like a 10th or a 5th or a half or a quarter of what you would normally take. Like I'd like to have 1,000 shares of this. But, you know, starting with 50 shares is fine, which is what I've been doing, 50 at a time. So my average is closer to 140 right now. This could stay down here for, you know, several months. I mean, it's dead money for now. Could continue to move lower. Putting in a hammer is a good sign. So scaling in, you know, you never want to go 100% on anything because we have, every time we take a trade, we got a 50% probability of success, right? We can either go up, we can go down. Of course, we can stay flat, but you got a 50% probability of doing whatever it is you're thinking is going to happen. Move up, move down. Now we can start to weigh probabilities by addressing, you know, what's the trend, etc. Looking at the 60-minute, the trend. What about CBRS? Trend is still down somewhat, sideways range. CBRS, NVIDIA. Okay, down below the 20 EMA on the 60-minute. So right now, there's no trade on NVIDIA unless it gives you an opening range breakout. SK Hynix, opening range breakout for now. Let's see, NVIDIA. It's above the opening range, but it did gap down. Probably going to be a doji day. Okay, so I'm not eager to do anything with this one. SK Hynix, SKHY. Okay, we got a big range. Let's see, AMD below the 50-day. Is it going to be enough? We're above the opening range high. Okay, so you basically got some support here. Could be you can see that it could be a head and shoulders top with the left shoulder right there, the head right in this area, and potentially a bounce back to this area, and maybe a move lower into August. This is a period where midterm elections affect price. Okay, August tends to be a seasonally weak time of the year. We've already had a pretty decent pullback, so you're going to have people, momentum traders like everybody in the trading room. Most of the traders in the trading room are trading momentum right now. We had a deep discount that we got a nice bounce out of. Okay, I'd be taking profits. I'm out of the 7,500s, by the way. I'm out of the 7,500s. Took the 74. What was the early morning trade? Let me just look at my trade journal here. All right, so that was nice. That was a $2,500 morning on S&P. All right, so that was nice. Thank you very much. 2250, sorry, 2250. I fudged a little bit. 74.75, 74.80s at the open. 7,500s with the profits. Now we're starting to fade a bit. So I think we could still see another bounce here. It all depends. We're running up against resistance. I don't think we're done yet, but we're running up against some resistance. We could bounce here, head up to 75.15. Okay, Apple turning back up. Apple's turning. All right, so these are the kind of things I'm watching for. Out of sight, out of mind. People, Apple's off. Keep in mind, Apple had an overnight or after hours high way up here. Yep, don't want that. Okay, after hours high. Okay, so I'm thinking that we got to test that at least. Okay, Apple turning back up. A lot of volume coming in. Still got time for an opening range breakout. Netflix pushing higher.
At the moment, long-dated government bonds.
All right, I got filled at 65 cents. Netflix, I'm out. Netflix.
The thing about numbers, dig into these numbers. I mean, really dig into them. And I wouldn't give them too much credence. They kind of have some consistency month by month. But the actual numbers themselves, I think Kevin Morse is right to say, let's look at how all these things get calculated, which ones react to, and how you weigh and balance them. I would not be a buyer, and part of it is interest rates, inflation. I mean, even if inflation was 2%.
Okay, I got filled.
Should probably be at 4.5, 4 to 4.5, and the short rate should be 3.25 or 3.5, and they're almost there today. So I don't understand what the upside is, even if the inflation could have 2%, and it's been over 3% for almost 5 years, and went up to 4 now recently.
Okay, nice pop there.
It may very well tick down, but
Jamie Dimon speaking. Let me just listen to him for a minute.
I can't take out of my mind what happened after the Great Recession of '74. Deficits were less. Guns and butter because the Vietnam War was over, was away, and it climbed, from 3.5% to 5%.
He reminds me of a buddy of mine. He looks so much like Jamie Dimon. It's just crazy. Or Jamie Dimon looks so much like my buddy.
Yes, that is true. You just were more powerful.
He almost dated my wife. They used to hang out. They used to hang out together. I saw her. I was like, holy shit, I got to date this lady. I got to steal her away. Steal her away. And I did. I was successful. More persistent.
Sky News anchor, CNBC contributor, longtime partner. We miss you. We're so happy to have you back.
Thank you for having me,
Welcome.
guys. Honestly, it always feels like coming home.
Yeah, so you talked to Jamie Dimon.
Apple
Indeed.
climbing. Okay, watch Apple here.
That theme, that line that he said last week after is
Done for now.
These blowout earnings. I think he applied to
One
the
sec.
equity market as a whole, but also the bond market, as we heard in that clip, that we're kind of last chance saloon in this sort of moment in time. And on the S&P 500 broadly, I kind of try to push him on that. It wasn't as explicit a kind of line as we got on the bond market there. And he said, look, there's lots of great individual companies, but when pushed, it was a similar theme, as he was with earnings, as he was clearly there on the bond market.
Yeah, I tend to think that he goes for the negative.
All right, let's look at Netflix.
About, things like private credit, and you always have to pay attention.
Netflix. You're looking for some rally? Netflix.
On storm clouds, he's warned about the bond market for a long time, and about the effects of.
Don't think it's going to make it much more.
And stuff like that, the high debt loads. Some of it's come true, not all of it.
Yeah, for sure. I think that there was a particular moment in time, I think, with that big call on bond markets a few years back, because no one quite expected COVID to come around. So I think that undid that pledge a little bit. Look, on top of that, we talked a little bit specifically about the SpaceX IPO. I pushed him a little bit on the valuation there, and then on the long term as well. As you said, I had 60 minutes with him. I've interviewed him 6 or 7 times, but never at such length.
You've interviewed him 67 times.
6 or 7 times. Sorry, 6, 7.
Yes.
Yeah. Lots on leadership. Lots also a bit on the UK as well, and New York, and what the leaders there are doing in light of course, a new prime minister in the UK. And you talk a little bit about the loneliness of leadership as well, which I've never heard him open up about, as well as what flashed before his eyes.
Okay, I'm not going to add any more shares to Netflix. I bought some yesterday. Those are down. But the Iron Condor sure helped out a lot on the overall position. All right, looks like we might bounce, folks. So what I'm looking for is a little dip, a little profit taking, and then a resumption of the trend. Looks like that's what's going to happen. Let me take a look at Trace. Okay, so we see the resistance overhead. All right, so we're starting to move here.
She would very much still be in the running. Don't forget, he didn't rule her out, as essentially he's done with Marianne Lake. She did, and I don't think that means she's 100% out if something happens soon. If not, clearly it's going to be Troy or Doug going forward.
Of course, they just posted the best quarterly profit in the history of banking. And a lot of that's due to their investments in efficiencies and AIs. I mean, this quarter, there was no blow-up headline about expenses, for example. Did he go into how that's all 1,000 use cases beginning to take fruit?
The bottom line on earnings is, as he said, that it's kind of perfect situation at the moment for banking, and how much longer can that go on? To your point, he wasn't super bearish. He's not saying sell everything right now. I think he's cautious about where things can go from here when everything's essentially firing on all cylinders at the moment.
So while we have you have a new prime minister.
We will on Monday.
Right.
Yeah.
So what do we need to know about him?
So the big question we are all also trying to work out is how far to the left of Keir Starmer is he? Is he, in fact, similar position, or is he further?
Okay, nice bounce.
Appealed to the Labour Party to win the leadership. Under the expectation.
Okay, Broadcom trying to go some more. Apple, S&P. Okay, we're above the opening range high. Okay. We're above the opening range high.
Will it be a centrist, Shabana Mahmood, who's currently the Home Secretary trying to tackle immigration, or will it be someone further to the left, Ed Miliband, currently Energy Secretary, currently making sure no drilling in the North Sea takes place, and that sort of example? And the very fact we don't know the answer to that question yet, we'll know on Monday afternoon, highlights how little we know more broadly about his agenda, apart from one point. He's been very clear on one point on his agenda, which he said this morning in this speech that we're watching pictures of. It's not about who governs Britain, how Britain is governed. It's obviously formerly the Manchester mayor, and he wants to see more devolution going forward. But there are a lot of unanswered questions, and we'll wait to see exactly what he does. I think for the US,
I don't think you'll see a big change on the.
Okay, let's see where the levels are here. 75.15. That's a 99 percentile. 75.15. 75.15 new 99% level.
You know, people say he's a bit of a guy's guy. He loves his sport, but he's also quite self-deprecating, quite funny, and I think there'll be more of an ability to have a personal relationship than perhaps there was with Storm.
Speaking of sport, was there heartbreak or did you?
Amazon breaking higher. Amazon about to go. Amazon's about to go. Watch Amazon here. Amazon's about to go. Okay, opening range.
And yeah, look, we had them where we wanted them, where we needed them. I think we made some errors, you know, in those substitutions, but I will say this, you know, I think hindsight's 20.
There we go. Amazon's going. Let me see. I got Amazon. Oh man, what a day! It's like knocking these out of the park. Okay.
When you make these judgments, I was surprised when you sat down here. We said it's like coming home. I didn't want to rub it in, but
This is because I've been that phrase has been in my head.
I guess so.
Do you know what that song for my whole childhood was the football song? But
Amazon going.
Replaced by Wonderwall this time. I don't know.
Yes.
Like
You see the streams for Wonderwall?
Yeah.
They're off the charts.
I know. Unbelievable.
That's what they play at the end of the games.
Yeah. Which anyway, now we have to get a new song. But it's
those guys are getting a break.
All I'll say was I'm going to the final on Sunday. It was good that I hedged this trip with a nice bit of work as well. So otherwise I'd be completely gutted.
Yeah.
No, you have
news.
News. You have interviews. And we'll have you anytime.
Yeah. Thank you very much.
We always love
Great to
having
see you guys.
Thank you.
Thank you, Will. All right, when we come back, will AI revenue eventually justify unprecedented?
Whoa, Cadence Design is down 12%. Synopsis down 12%. Intuitive Surgical down 12%.
Next hour, don't miss UFC President Dana White. We'll talk the UFC business.
Okay, it looks like Amazon wants to run here. Can we get an expansion day? A bullish engulfing would be awesome to see. Amazon, I almost want to sell some premium rather than buy. Given the state of the markets, I almost want to sell some premium, but I'm just gonna keep taking profits off. Gonna day trade a little bit more right now. These mean reversion rallies are really sharp. Amazon. Let's see. That has 35 days. Amazon. Do I want to sell premium? 165 is okay. 170 is a 50 delta. Can we get the? No, what am I looking at here? Oh, that's SK Hynix. I got to pay attention here, Penny. Amazon. Okay, August. What's a 50 delta? 50 delta is a 255. Okay, it looks good. 255. Okay, 255 looking interesting. 255, 260s. Taking a little bit more profit off. I'm all out of the 7500s now. All out. The S&P 7500s. 0 day. I might start doing some spreads. I don't know. I'm thinking we could bounce a little bit more. 2 good trades on S&P. I know better than to do it again because I'll probably give some money back. So I don't want to give any money back. Let's see what the SPY put flies look like. I had those for defense. I took the VIX calls. I'm completely out of the VIX 22s from this morning. I had the August 22 call. I want to get back into VIX. Let's see how far we go here. All right, we're starting to hold this area. All right, so let me see the VIX. That was okay, $70 per contract profit on the VIX for a spread. Not bad. Okay, so cool. VIX. Do I want to buy some more VIX calls? for over the weekend. September. Let me see what Septembers are going for. September's, how far did we make it? 1950. Okay, so 20s maybe for September. Captain, what did you wind up buying? Did you buy the 20s or the 25s? I think you said you put in a spread, right? VIX.
Welcome back to Squawk on the Street. Names like SanDisk, Marvell, and Western Digital all among
September.
the top Nasdaq 100 this week as the index gets set to post its first negative week in the last three. Our next guest fund has significant exposure to
Maybe a spread. Maybe a spread. I see what you were looking at. 20.
Tony, it's great to have you this morning. Big debate, obviously, about this pullback in semis and broader tech, and whether, in fact, it's largely a mechanical, technical adjustment to an overheated sector, or there's real questions about, the staying power of this capex and earnings boom. What do you think is most relevant here?
Yeah, I mean, you always have to respect the market, right? When there's good results from companies and the stocks are not reacting well. But I think what really matters here is hyperscale earnings. And, I think that at this point, the companies have to raise the next leg of the AI move from the capital markets. And so I think that what makes the most sense to me is that the market's been looking for big revenue beats.
All right, VIX.
How much more capex they can spend, and issue equity and debt from there. So that's kind of how I'm thinking about it here.
There's a line of thinking that there's really a lot of incentive for the hyperscalers to start to get pretty specific about paybacks they're seeing, revenue enhancements that they might envision from all the investments so far, because that has been, one of the things that they've pointed to. They're sold out in terms of cloud services and things like that. So I suppose you're expecting to see some of that, and how might it make sense to position ahead of it?
Yeah, I think a lot of this, spending has been training these models, and so it's very capital intensive, and now they have to be more front-footed about monetizing and showing progress and showing the productization, I would say, of the frontier models. And so I think that is essentially what is going to be the main theme of this earnings period. And so I think you're going to have to show us
I have a low bid in.
And as a result, think about the mechanics of capital raising. If you're growing revenue, really well, it falls down to free cash flow really well, and then pay back on debt as well. So I think it's a virtuous cycle if you can get it right.
I'm looking at your top 10 holdings. It seems like you've had a good run. Micron, AMD, SanDisk, Broadcom, Marvell, NVIDIA, Intel. I guess the story today, Tony, is that if China, we already knew China could do it cheaper. But if China can do it cheaper and better with their open source models, which was the story of this Kimi 3 today, then what happens to not just the margins at the OpenAI and Anthropics, but all the...
Okay, Amazon's still going here. All right, VIX is turned back up. Okay, I don't think I got filled here. Did I get filled? No, I did not get filled on my VIX call spread. Let me see. Working orders. Okay. Let me go to 92 cents.
I think what the market's struggling with is do the frontier model players have to pull back, or do they see it as kind of like DeepSeek, where they actually are going to spend more because of what's going on? It's more competitive now. I think a lot of it is
okay, Amazon climbing. Okay, filled at 92 cents. The VIX.
Where the economics improve, it is at the frontier bleeding edge of technology is where it's all kind of where you earn the most value creation. And then all the kind of smaller commoditization models, I would say that those will be around. There's maybe usage of those, but I think that it's going to be less likely that those will earn the value of the whole TAM.
Tony, did the IBM warning lead you to rethink anything here, whether it's software or overall?
Okay, VIX, I just got filled at 92 cents. Call spreads for September. Okay, my plan is to have about 25.
And I think that there's probably a little bit of an overreaction to some extent. To me, it probably is just, I don't think that their business is going away. over the long term, and it probably is just like a near-term temporary thing.
And then when it comes to software, I mean, are you finding things that seem like they've been de-risked enough, they look cheap enough, they're better positioned, or are you still thinking that they're going to remain under pressure?
I mean, I think you have to be.
Yeah, VIX is a hedge only, folks. It's not a trade.
But at the same time,
All right, Netflix starting to fade. Netflix is starting to fade.
And so I think that not all software companies are positioned similarly, and I think that if you're entrenched in the enterprise, enterprise is also they do need to go to the existing software players to implement AI.
Okay, Palantir. Let's see what Palantir looks like. Palantir, PLTR, Palantir. That held up very well, all things considered. Palantir, decent.
So valuation sentiment in software may be bottoming, and so I think we're always on the lookout
Whoops.
for those leading indicators.
All right, Tony, really appreciate the time this morning. Thank you.
Thanks.
When we come back this morning, a new CNBC survey with some surprising results about how Americans are reacting to higher prices and the areas they're cutting back on. And we're back in 2.
Microsoft. What's Microsoft doing? Palantir looking good. Microsoft is a low. Apple looking for more upside. Apple. Okay, I have nothing on the S&P at the moment. Okay, so I'm not watching that. What happened here? Okay, I don't know what happened there. I don't know how long I was off. Wasn't paying attention. Apple. Okay, pulling back. Apple. S&P. I have no S&P at the moment. Okay, I had the 7500s. I took those off. Took those off around 10:15-ish. 10:18, something like that. Uber, Home Depot down. Nike's down a little bit. Nike tried to get above 45. That was the opening range high. Nvidia's stacking it up right now. Nvidia. Okay, Nvidia looking pretty good. It did gap down, but relative strength was okay. Nvidia watching for now. SK Hynix, watching SK Hynix as well. SKHY. Okay. What else? Amazon just off the high. Okay, you got to be very quick. You got to watch these things. All right. What are these guys doing? Let me switch to Bloomberg, see what Bloomberg's got going on here. Okay, I don't think the markets are done. We're going to have a lot more volatility, obviously. What's going on? Bloomberg. There we go. Oh, boy. Hope everyone's having a good day. I'm your host, Cousin Benny, coming to you from closingprint.com. It is Friday, the 17th.
Some interesting results here from the CNBC All-America Economic Survey about how Americans are reacting to higher prices. Senior economics reporter Steve Leisman joins us with the results. Morning, Steve.
Hey, good morning, Sarah. Despite the decline in gas prices and better inflation numbers we've had, ordinary Americans have kept watching their spending in even greater numbers and say they are cutting back in response to those higher prices. Take a look. The CNBC All-America Economic Survey, the survey of 1,000 voters around the country, find that 47%
Microsoft's still fading a bit. Looked pretty good this morning. Faded from the opening range high.
Let's look at spending on out-of-home entertainment.
A lot of momentum.
6%. That's up 5%.
Yeah, me too.
Despite these better numbers we've had.
Me too, dollar. All right, so let's put Nvidia here. Nvidia.
It's still a high number. women 18 to 49, 60% of them. The lowest income Americans, 60%. And you can see these two tiles here, there's a partisan part to this thing.
Oh, bullshit.
Democrats, 36%
Bullshit, CNBC.
This age group as well, the 18 to 34.
That's the dumbest thing.
Power and spending. We keep talking about
I call bullshit.
earnings from the retailers. Well, 35% of those with 100,000, very low number relatively. Looking at which party Americans feel best address their pressing concerns. Well, Democrats have
shut up. Why do they have to be so damn political on CNBC and Bloomberg? Just stick to the task at hand. We're talking stocks, bonds, investments. Really bugs me. All right, Nvidia, excuse me. Nvidia trying to push through this level here.
Yeah, Sam, I was pretty sad after that AFL match, but at the same time, Netflix, a lot of investors sad, hitting nearly 2-year lows in today's session. That lack of
Netflix is starting to go here, starting to turn up.
I think the culprit here and the lack of growth moving forward. So we'll continue to watch that. But like I said, the stock is oversold on a technical basis at this point, hitting those lows. So I looked at a strategy instead of maybe buying the shares. We do something that's super bullish by using two different call and a put that are both bullish in nature. We call this a combination trade, or as I like to look at it, a bullish risk reversal here, where I went out to the September monthly option. So this is 63 days till expiration. You got 2 months in this position, where I'm going to sell it out of the money 65 strike put. That you collect a credit on that, and that's going to help pay for part of the call that you're buying in September, the September 68 strike call. So you're buying the 68 call, selling the 65 put. Both are bullish. You're paying roughly about $1.60 debit for this combo trade. So that'll take your break even up to 69.60 to the upside. That's about 2.5%.
All right, Nvidia is trying to go here. Nvidia.
This risk profile that anything above that break.
Okay, watch Nvidia. Let me see. How much Nvidia do I have left? I think I have.
The key thing here is that you have to remember that if the stock does fall back below 65, you're going to
Nvidia, where'd you go? There you are. Okay, Nvidia. Okay, I got September options on Nvidia. 215s. Okay, so we're $10 out of the money now because of the gap down. We were looking for a break above 215 yesterday. We faded all day. All right, so I'm not going to do anything else with Nvidia. I have 215s right now.
Yeah, absolutely. And look, Morgan Stanley kept an overweight rating on the share.
Okay, I'm going to take a couple minutes break. I'll be right back.
Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context. From inflation data to sector rotations, earnings to policy, it's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Schwab Bank Investor Checking. The checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network, where real-time market coverage meets expert strategy. From the opening bell to the closing bell, we've got you covered. Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute. With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand. Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Good morning. We're 90 minutes into the final trading day of the week. Welcome to Trading 360. I'm Alex Coffey in for Marley Caden. Here's what's coming up on today's show. Software industry, as our guest talks about how this obituary regarding software as a service is a bit premature as AI continues to advance, and that those concerns around AI and the impact on enterprise software companies might be just a bit overstated. We'll dive into the state of the manufacturing industry with the CEO of Parsec Automation. The company just released its 2026 industry survey, and we'll dive into the continuing digital transformation that is happening in manufacturing. And then finally, in our 360 round, our panel will examine Netflix's sell-off today with a softer than expected outlook weighing on the stock. Shares opened at a 52-week low this morning after Thursday's earnings report. Speaking of markets and earnings and all things that are going on, let's take a look at where things sit. Now, there is red on the screen. There's some big numbers on the screen. But believe it or not, if you're just tuning into the markets, things have improved quite a bit off the lows of today's session. Now, we did rally quite a bit closer to unchanged, in the last 30 minutes or so. We did see a little bit more weakness spill into the market, but a unique day. S&Ps right now are down 66 points. It's about, let's call it 85 basis points to the downside. The NASDAQ 100 down 494 is 1.7 points to percentage points to the downside. Russell 2000 8 points lower. That's 30 basis points, and the Dow Jones down 70. It's actually pretty close to unchanged. Now, interestingly enough, when we opened, equal weight was higher, and you had some decent breadth under the surface. Not the case now, closer to 50-50 advanced declines to the S&P. A couple other things on our board here. 10-year yield actually plunging quite a bit here today, as you do see treasuries getting purchased in response, maybe a little bit of a risk-off tone there, despite crude oil rallying in the September contract, $2 in the WTI crude. Bitcoin under pressure, and the divergence between gold and Bitcoin is notable today, as gold and Bitcoin have largely moved in the same direction. And a lot of times that's been tied to the movement of the dollar. Well, the dollar is pretty unchanged today, as some of the data maybe not really giving us reason to be concerned around inflation, but at the same time, the crude oil spike maybe is. So the dollar sort of been locked in place here around 155.
Bring in our first guest of the show, though, and you know him well. It's Mr. Kevin Hinks. Kevin's joining us here on this Friday morning, live from the SIBO. Kevin, I'm sure it's been a little bit louder there today, a little bit more action this morning.
Yes, it has, Alex. A little uptick in activity, but you know it's tricky to look at the S&P 500 right now, down about 0.8%. Look at the Nasdaq, down about 1 2/3%. It seems like an extremely weak day, and it is. But 7 of the 11 sectors in the S&P 500 are actually higher. But the big ones: information technology, communication services, consumer discretionary. Throw in the financials that are down small, and that's a lion's share in terms of the weighted S&P. That's why you're seeing that index so heavy. But there is some promising things. You mentioned yields are lower. And, you know, overall this week in terms of economic data, if you're worried about inflation, your worries dissipated this week. But then there's crude oil, and there's tensions in the Middle East with the U.S. and Iran. And some of the reasons that inflation were to come down is because crude oil prices and energy came lower. That, well, let's call it a 12% spike this week could disrupt some of that, Alex. So there's a lot of good, a lot of bad this week. Right now, we're finishing the week, at least so far today, on a pretty red note.
Yeah, and some of the market's horses out in front, the Nvidias and the Apples of the world, sort of jostling for that first position today. Apple quietly has had a wonderful week. Now, I know it's kind of unchanged today. It's certainly off its highs. But, Kev, all-time high for Apple earlier on today, closed at a high yesterday. Really kind of quietly sneaking into that first spot. I think NVIDIA maybe reclaimed it, but what do you make of what's going on there between Apple and NVIDIA today?
Yeah, Apple has shown real strength. Even, remember, if your stock is unchanged or up very small and a down day, that's a pretty positive day for your stock. So I think Apple upgraded today at HSBC. Pretty strong. Their comments about Apple were very strong. Here's the problem, Alex. You're talking about upgrading Apple today at a 40 PE. That is historic. Whether you should be upgrading Apple at a 40 PE, but HSBC doesn't. They think this next round of Apple, what they're doing with AI, how they're integrating.
Okay, so stocks are fading a bit. All right, so the initial run up dissipating. It's really not a reason to do much of anything today. You don't have to trade every single day. NVIDIA is still fading. Let's see, SK Hynix. Okay, that also faded. Let's see what the banks look like. Let's see what the banks look like. KRE. KRE inside day for now. You can see over there on the right. KRE. All right, so pause. Let's see what's actually moving the markets right now. Okay, notice all the market factors are red, except for large value, and that's like flat. Also notice what is in play: real estate, utilities, energy, healthcare, consumer staples. These are mostly defensive. Real estate, let's see what that looks like. Real estate breaking out, XLRE breaking out.
Those are some of the areas that we really like in terms of the way artificial intelligence can actually now be used profitably, hopefully, in some of these other areas. So it's not just a story about the...
All right, so Airbnb, let's see, XLRE, real estate, Airbnb. No. What about Vornado? VNO. Okay. CB Richard Ellis was active yesterday and Wednesday. What else? Boston Properties. BXP looks the best. BXP best in the group. XLRE breakout. What else? Jones Lang LaSalle. Not so much. DLR Digital Realty. Bouncing at the 200-day. What about the actual builders? DRI. That's I always get these backwards. DRI, DHI. Toll Brothers. Pulte Homes. Beazer. Okay, that one looks okay. KB Homes. KBH. KB Homes. LGI Homes. LGIH. All right, so it's mostly this. What's the biggest? Let's see, what is the biggest? The top stocks in XLRE. XLRE. Top stocks. They're in.
Existing shareholders, right? So you would expect there to be some perhaps negative price reaction.
Welltower.
Investors think that there's some bigger payoffs.
Senior housing. That makes sense. Let's see. Welltower. Okay, WELL, WELL. Welltower breaking out.
With the chips and the memory, the announcements from companies like Apple, Microsoft, Sony about consumer electronic prices, those going up. We did see some evidence of that in the most recent consumer price index report that came out. If you dig into the details, you can look at a line in there about information technology. Basically, it's like, the consumer electronics. Those prices were
breaking out. Welltower. What is it? PLD. Prologis. PLD. Large distribution centers and warehouses. PLD. Okay, PLD. PLD as well. PLD. Large warehouses. Okay, PLD looks good. PLD, you can see breaking out. Does it mean chase these? No, but keep an eye on them. Might be some decent trades in the short term. American Tower, obviously AMT. That's okay. Simon Properties. Oh yeah, I forgot about Simon. They do a lot of mall real estate. Simon Properties. Holy shit! Look at Simon Properties. SPG. Simon Properties. Well.
Yeah, well, it's so true because we are in that midterm election year, and last night President Trump, with his speech, I think it really shows that this is going to be a very hot and heated election season. And oftentimes, what we see in the data in these midterm election years is it's this period of time, the summer.
Okay, does look good.
October, where it becomes perhaps a little bit clearer about what the outcome might look like. You get a lot more chop in the markets, and oftentimes that chop is towards the downside, probably because of the rhetoric, the uncertainty. Add on top of that the new chair of the Fed. When I was listening to what he was saying with his testimony before Congress, it sounds like he is indeed serious about bringing inflation under control. And even though he doesn't really want to come out and say it, I think that any other period of time in history, he would be like, yes, let's actually hike rates here because inflation is still above our target. Now, I don't think he's actually going to come out and say that because he wants to see how much of this energy-driven inflation can fade before, not the next meeting, which is July 29th.
Okay, these look pretty good.
Probably by the September meeting. So
Office Realty.
Now, but he does seem to have a bias towards hiking as opposed to
Realty Income.
cutting.
That gapped up and faded.
I think that's a really
Digital Realty, we just talked about PSA storage. All these people moving. We're talking we're talking millions of people leaving blue states and moving to red states. South Carolina alone, I think it was like 68,000 people in the last short time period. I see so many New York plates, New Jersey plates, Virginia, even West Coast. I see West Coast plates coming over. North Carolina has a research triangle just north of us. Research Triangle in Duke, North Carolina. Was it Trinity? I'm not sure. There's a whole bunch of colleges there. Duke is a beautiful campus. I like to get my son to go there. Duke. I love it. I'd love to go visit up there. I actually like to move up there. Wouldn't be bad.
Wonderful weekend, and thanks for taking the time this Friday morning and joining us here on Trading 360. It's Brian Jacobson, the Chief Economic Strategist at NX Wealth. All right, plenty more to come on Trading 360.
KRE fading a bit. Inside day. XLRE real estate doing the best today. Okay. Followed by energy's taking over the number one spot now. Energy gapping up but fading. Energy is trending. What's USO doing? USO is trending. Maybe it fades. The 10-year yield, we need that to back off. The 10-year gap down. Okay, that's good. 10-year gapping down. That's good for IWM, small caps, and for technology stocks. Okay, Apple catching an upgrade from HSBC. Let's see. I don't believe everything I hear on these talking heads. Let's see. Apple. What is the current PE and forward PE? Okay, let's see what Apple. Double check get Gemini and ChatGPT and whatever else you use, Grok. Double check them because they're not always right. I catch them all the time. All right, so Apple has a current PE of 37 times to 39 times. Forward PE is what I'm more interested in, 32 times. It's still a little rich, but HSBC upgrading Apple. I believe Apple's probably got a lot more runway given the news recently that China, given China is
And our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
All right, so regulatory approval for Apple Intelligence. Chinese regulators have officially cleared Apple Intelligence for domestic use in China. That's a huge deal. That's a major operational hurdle, all right, allowing Apple to roll out generative AI features such as upgraded Siri functions across devices. I don't think Siri is a really good thing, but the partnership with Alibaba is a big deal as well. Baidu also involved in the implementation. Let's go take a look at those two stocks. Let's look at Alibaba, and Baidu, BIDU. Okay, so the deal with Chinese stocks is I like to buy them on dips, not on rips, because they do tend to gap up and down a lot. See that? Okay, so if you got excited about Baidu or Baba on Monday or last week, I mean, this is gapped down several times. Very gappy ADRs, okay? Very gappy. Baba doing a little bit better, but it gapped down today. It could come back all the way to the 21 day before turning back up. So if you're going to trade these, I wouldn't be in a big hurry. NVIDIA is starting to turn back up right now. NVIDIA. Okay. All right, so we're breaking this downtrend now, back above the opening range high. You see that dollar? I'm sure you're watching it. Let's see if we get some momentum here. Apple.
I stayed consistent, and I'm like, bubble, we're just getting started.
Yeah, whatever.
Up of already a pretty weak year. Laura, does
Actually, let me listen to what that guy had to say. What was he talking about? AI?
You're not participating in. You know, everyone that's not participating in the run screams bubble, bubble, bubble because they missed it. Okay. So that being said, you know, with some of the shakiness in the
He's had a little bit of coffee too. All right, Apple looks like it wants to break out here. Watch Apple. Opening range high is overhead. Apple.
And, you know, I just don't look at these momentary blips as a reason to panic. I look at them as opportunities.
Apple, NVIDIA.
That maybe missed some of those entries, you know, over the last couple of years. I mean, I've got the chart of SanDisk up right now and just looks like a bottomless pit. Well, that's great for the people that maybe were the people saying bubble and not participating in the run. Because what we do with technicals, and this is where Rick is the maestro, is, you know, we look for the chart to tell us when the bottom is in. Right now, they look bottomless. But at some point, probably next week, the week after, they're going to start to firm up and offer opportunities for people that missed them in the beginning. Now, I know I'm kind of like maybe one of the most bullish when it comes to AI. I mean, it's a game changer in my trading, in my life. I mean, I literally use it all day long. But I have been consistent that this is just a game-changing technology. What I love about it is it's really a democratization of technology. You know, you look at all of these massive technologies through the years, you know, railroads and all, you know, all these things.
Okay, so with an opening range breakout, you need catalysts. You need catalysts, whether they're upgrades from tier 1 firms. I would categorize HSBC as a tier 2 firm. Goldman Sachs, JP Morgan, Morgan Stanley, those are considered tier 1 firms. Okay, Apple breaking above this pivot right here. Watch Apple right here.
I know I throw out Princess Bride references a lot, but never get involved in a land.
Okay, NVIDIA. Any news on NVIDIA? Let's see. Let's see.
A lot there, Tim. I mean, I think the biggest question we got to know if you got that computer you were talking about last time. But jokes aside, I know you're looking at Apple for sort of the same reason here today as the Mac Minis have been a really big part of some of these, you know, open source stories and using some of these technologies to kind of elevate not only trading, but other things as well for individuals.
Yeah, so Apple actually, you know, I shared it on the Big Three back in March.
Okay, so the momentum is clearly dissipated from the bounce. Okay, so trying any bounces now are going to be more susceptible to failure. So like any time, you want to scale into positions and double up as the position starts to work in your favor. Let's see. All right, so NVIDIA does have earnings coming up. Okay, so with NVIDIA's upcoming earnings, participants will be very particularly interested in data center revenue and guidance. Okay, the street is looking for 83 to 85 billion. If we beat headlines, if the numbers come in, if the guidance comes in above 85 billion, the high number, that could send NVIDIA higher. Apple's pushing up. Oh, you know what? I need to enable Discord. Sorry. It's a Friday, so you're not really missing much. The early morning run's done with. So chasing anything right now is susceptible to failure. little bit more than earlier this morning. Let's see. Pulse audio. Wow. Okay.
Very narrow, very steep, two trend lines, both pointing upward but converging toward each other. Typically, this can be suggestive, more of a bearish type of outlook, but really it can go either way. You're not looking for
Amazon. We got Amazon Pulse alerts here. Let's see what else.
those two boundaries here. So, considering our other studies here, we have our moving averages, 5-day EMA in dark blue, 327, fairly close to our trend line. Not too much else nearby until we get to our 21-day EMA representing 1 quarter in teal. 311 is where that one comes in. RSI, kind of interesting though, breaking above that 70 threshold that denotes the overbought area here. So typically that's regarded as
Okay, so
market here for Apple. So now we can also
looks like pulse alerts are still stuck on yesterday. So
those come in near about 310 and about 300 or so. Those are the heavy trading concentration areas.
all right, so we don't have any current pulse alerts. Okay.
Something I think many were hoping would become like that new big-time name, and maybe it still will, is SpaceX. Volatility is extreme at the moment in this name, but it's made the
which I write a lot about, is strategy diffusion. I feel like every quarter we get on the call, Mark Zuckerberg's doing something new, and that destroys.
All right, Meta's down quite a bit. All right, did I think I took Meta off, didn't I? Yes, I did. Thankfully. All right, so we were taking some profits off into strength, things like Snowflake, Broadcom over the last week or so. Apple's turning back up. We were taking profits off the table. It's a good thing because a lot of these stocks dropped off, obviously, this morning. Most of you, unless you're living under a rock, you're aware of it. Defensive stocks are in play. Looking at Apple for a break to the upside. Watch Apple. Okay, we got Catalyst. We're looking for an opening range breakout. Not much time left in the day.
Let's see what happens. Today it is selling off, down 5.5%, part of the broader tech sell-off. Laura, thank you for joining us. We appreciate it, as always. Laura Martin from Needham.
Speaking of prices, oil prices are on the rise today. There's a look at WTI back above 81 as tensions between the U.S. and Iran ramp up. We'll discuss whether pipelines might be a more sustainable solution for countries that are trying to bypass the Strait of Hormuz.
Plus, President Trump's crypto empire could stand in the way of a digital asset bill that's headed for a vote in the Senate. We'll discuss that one when Squawk on the Street returns.
Apple. Okay, what is the Apple call walls now? Let's see, call walls on Apple. Let me go over to Money Magic's channel. Make sure you're always checking out Money Magic's channels. Okay, Apple. What do you got? 335 and 340 now, huh? 335 gets above 335, could run. End of August, yeah. Okay. Amazon. Nice work there, dollar. Teamwork. All right, so Apple. Apple. What do we say? 335. 335 call wall. Where the hell did you go? Oh, there you are. Okay. 335. Apple. If it gets above the 335 call wall, you know what happens there. Okay. $335. Watching 335. All right. Okay. Overhead is the after hours level. Okay. 337 thereabouts was the pre-market high.
Take a look at the market this morning. There's a look at the NDX.
337. Did I see 335? 337.
To shave some losses. Dow's getting supported by some defensive names like Travelers, UNH, Johnson & Johnson, and Merck. Yields with a little bit of relief here. VIX was 19 and change. Now back to 18.
Yeah, I mean, there's still some good groups, as you said. Energy's going strong, and the defensives, and a little bit of industrials as well, but not enough to boost the indexes, with the NASDAQ down 1.5% on tech. Time now for a news update. Mackenzie Segalos has it for us. Mackenzie.
Ontario's Ministry of Natural Resources reported over 180 active fires across the province this morning as the wildfires in Canada continue to burn. Smoke now blanketing large parts of the U.S. from the upper Midwest to New England. In Washington, D.C., air pollution levels soared to some of the worst ever recorded. The locations with the highest air quality index scores include Grand Rapids and the Chicago suburbs. A federal appeals court sided with the Trump administration in a case brought by the New York Times, ruling that a policy requiring government escorts for journalists at the Pentagon could stand. It was a 2-1 decision in a 3-judge panel. The majority opinion said the Pentagon is likely to succeed in its argument that the escort requirement doesn't defy the First Amendment. And the head of the FAA says the agency needs another $10 billion from Congress to reform the antiquated U.S. air traffic control system. That's according to Reuters, which cites FAA Administrator Brian Bedford as saying that the agency is already deploying the first $12.5 billion approved by Congress. Carl, I'm sending it back to you.
Thanks so much. Still ahead, $60 billion in deals set to be announced at this U.S.-Iraq Business Summit today, and they include agreements around pipelines. We'll discuss whether those deals might help countries bypass the Strait of Hormuz when Squawk on the Street continues.
All right, I hope everyone's having a good day. It is Friday. Looking for Apple to get above 335. 335 could run. Apple. Dealers. All right, so we're starting to bounce a bit. S&P 500. Okay, opening range high. We're back above that. It is 11:33 on the East Coast. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. I hope you're having a good day. I trust you are. Nice bounce so far. Okay, what are my SPY put flies doing? Do I want to add to those? What I'm going to do here? SPY put flies. I took the ones that expired today. I had a limit order. I missed out on about $80, $75. My limit, I didn't adjust it, and unfortunately, I got taken out on the gap down this morning. Those put flies went in the money. It was very close to the money on the closest wing. That was the 740 wing. I had the 740, 735, 730. Those did very well. Okay, let's see. Butterfly. What's that doing? Okay, that's fine. S&P still sitting here. What's the SPY doing? SPY. Okay, we're right at 745. Okay, I have the 745, 740, 735. Let's see, those are going. I'm going to go ahead and take these off. And reposition at a higher price, or at a lower price, I should say. Okay, so let me do 30. Let me do 35 and see if I can get out at $35 per contract. I bought these for cheap, so good for today. Limit $35.
Welcome back. $60 billion in deals expected to be announced at this U.S. Iraq Business Summit today, including some agreements around pipelines. Pippa Stevens has more on that this morning. Hi again, Pippa.
Good morning, Carl. So this accelerated investment coming as Gulf nations rush to create
$40 limit. Okay, $40 limit. See if I get filled.
nations in terms of alternative export routes. As part of this U.S.-Iraq $60 billion initiative, according to Commerce,
I did start to scale into September VIX calls. A spread, 20-25 call spread for September, with VIX dropping down to the lows this morning. We took them off at the highs.
Entry into southern Iraq. Company also exploring potential pipeline opportunities, including from Iraq to the Syrian coast. Although an executive telling me it's still early days and there are no dollar figures on this yet. Now, this comes as the UAE plans to double its export capacity out of Fujairah, with Saudi Arabia reportedly considering expanding its east-west pipeline that runs to Yanbu on the Red Sea. Now, pipelines create more options, but they come with their own vulnerabilities. Back in April, Iran targeted Aramco's east-west pipeline, temporarily cutting capacity by 700,000 barrels per day. Now, overall, Goldman Sachs expects 7.3 million barrels per day in new pipeline capacity by the end of 2028. The firm noting median construction time is 2.5 years, with single-country pipelines relatively fast to build, but inter-country ones are more difficult. Guys?
Yeah, I mean, I think that's what's so interesting about what's happening now is that the region is going to be totally different as a result of this war, and just so much more sort of ready and less vulnerable to something like the shutdown of Hormuz. I guess the question, Pippa, is how long that takes. How long it takes to build these workarounds and stand them up so that they can absorb the amount of oil that comes through the strait.
So it's clear that redundancy is going to be what happens going forward, so that there's no one choke point that is so vulnerable. But to your point, it's going to take a very long time because the pipelines are really just the first step. Then you have
All right, NVIDIA is starting to move here. I didn't add to NVIDIA, did I? No, I did not. Okay. NVIDIA looks like it wants to run. NVIDIA. Okay, so dollar's probably already been in this. So this is already starting to move back up towards the high of the day. High of the day is up here. Okay, high of the day is up there. Whoops.
We have seen this before. There is the blueprint. The East pipeline was built back in the 1980s in response to the Iran-Iraq war.
Here on fire.
For a long time, people said, well, that wasn't
These talking heads.
investment on Aramco's part. It was very expensive. But now that pipeline has been a vital workaround. So I think we're going to see a lot of changes. It will start with pipelines and then trickle through to other things like ports and even.
Okay, NVIDIA looks like it could get back to the high of the day.
Yeah, I mean, it's going to be much more.
Volume coming in.
There'll be more options, that's for sure. Thank you, Pippa Stevens. When we come back, UFC president and CEO Dana White is with us. We'll discuss the growth of the.
Okay, there goes Broadcom. Chips are actually catching a bid. Micron's catching a bid. Okay, all right, let's see what AMD looks like. AMD, they're all doing the same thing. They're all bouncing. AMD, LRCX. Okay, Micron is a 3-week pullback enough? I think any bounce to the 50-day is going to get rejected. That's just me. OPEX, if you're trading anything today, my belief, not that it matters, my belief is that it's short-lived. That OPEX, unfortunately, we got to wait until after OPEX on Monday to see what fills in, if these stocks can hold and maintain these levels, because doing a swing here, just the odds are too against us. The trend is down. The short-term trend is down right now. Yeah, we might get a bounce, but I think the bounce might get rejected. So we got stocks like the semis catching a bid. We got Apple with an upgrade. Intel's, everything's doing, all these chips are doing the same thing. Intel, they're all doing the same thing. So that looks good. Okay. Micron, AMD, Intel, LRCX, NVIDIA, SMH, SKHY. Yeah, if chips follow through next week, that would be a big tell, in my opinion. But they just feel like momentum plays. Highly risky. Highly risky. All right. Netflix above the opening range high, which is pretty good. Netflix is seeing a lot of activity here. Okay, Google. Watch Google.
Live sports remains one of the most important parts of the media business right now, and UFC has become a major player in that landscape. The company expanding globally and domestically, including the UFC's recent event at the White House. Joining us here at Post 9 is UFC President and CEO Dana White. Welcome. It's good to have you.
Good morning.
I mean, we were just talking about how crazy
Dana White.
Night was.
Dana White.
You know, the weather, how it ended up. Fight. What has it meant for your business?
Yeah, I mean, it's been big. I mean, you were there live. People that were there live, it's tough to explain to other people. It was like a special one-of-one event, but on TV it was incredible too. So, you know, just the hype around it, and you know, you couldn't write a better script for what happened that night. Storm is about to hit us, breaks, splits in half, and goes around us. The American who's in the main event on the White House lawn is a 6-1 underdog. He wins in spectacular fashion against a guy nobody thought he could beat. So it was an incredible night.
I know those chants of USA, you know, from the military that was there. It is hard to describe. But you say you won't do it again because it costs too much.
Yeah, it's a little expensive. But
I like Dana White. Him and Joe Rogan, the two of them.
I believe take the brand to a whole nother level, and not just
Two guys I wouldn't F around with.
Everybody was talking. I mean, the president flew to the G7 summit the next day, and all the world leaders were talking about the fight.
They were asking about the fight.
Yeah. There's video of them all before they even started talking about what they were supposed to be talking about. They were talking about the fight.
Because I do feel like that is the question with UFC. You've had this incredible run and signed this multi-billion-dollar contract with Paramount, which is a few months in, and it's like
Netflix. Okay, just scanning. Okay, Nvidia is above its opening range high. Nvidia, these chips. Looks like day trader momentum. Nice little bounce here. So if you're going to buy something like this right here, put a stop right below this. If this starts to take off to the upside, then you can move your stop up a bit. There's a shot at us taking out the high, or testing the high, I should say, to rephrase. Home Depot with a nice bounce. Okay, let's go take a look at Home Depot. Okay, nice bounce on Home Depot. Did fade a little bit. This is I have October calls, so I'm not really that concerned about it. I believe this is going to be much higher. The weather really hasn't gotten bad yet.
But that was the biggest gate we had ever done, and then we just broke that gate record last weekend with Conor McGregor. The business and the sport continue to go like this, and we haven't even scratched the surface of how big the UFC is.
I mean, the Conor numbers were huge. 16 million viewers, according to Paramount Plus. Record-breaking 8 million peak concurrent streams. How much of the sport is dependent on someone like a Conor McGregor who now got injured again?
Well, every sport is star-driven. I mean, when you think about the NBA with Michael Jordan, I mean, I always talk about this, the baseball. I'm not a huge baseball fan, but I'll watch here and there. And you know, Ohtani, whenever this guy's playing, I'm always interested and I always want to hear it. But every sport is star-driven. My job is to go out and find and build new stars.
Can you talk about Power Slap and what it's doing? I mean, some of your metrics, I understand, are beating records. Yes?
Yeah. The numbers that we pull on, we have the highest sports clip.
Okay, watching Google here. Google's a little sneaky. I don't see too many mentions about Google. Opening range high overhead. We gap down. Yeah, stocks like that, it's kind of hard to do anything with. It looked like it was going to finish above the 50-day yesterday, and then we got whacked and everything dropped off.
It's hard not to watch.
Yeah. Well, I think what's even more fascinating that people don't understand, it's not just like, oh, wow, this is shocking, but people are actually clicking in to follow. We have more followers than most of these sports. We'll actually beat Major League Baseball in followers by the end of
Google.
Yeah.
You're also getting into boxing. I see you've trashed boxing for a long time.
I did, and
what's the
now it's time to put my money where my mouth is. I keep telling everybody about on the boxing side, judge what we do at the end of this year. What we've already done, the big stars that we've signed, the big fights that we're starting to put on, we're going to make a huge impact in boxing too. Basically,
all right, Google trying to go here. Google.
Every way two people could possibly fight.
All right, we're coming into the lunch hour. Let's see if there's any momentum, any buys that are going to become obvious. The heat map is still really crimson red, so you want to be careful. Energy still number one. Utilities creeping up to number two. Real estate dropping to number three. That was number one earlier. Consumer staples is, it's up 0.2%. Same thing with healthcare, industrials. Speaking of industrials, what is Caterpillar doing? Did Caterpillar bounce? It's bouncing, but it needs to get back above the 50-day. Okay, so I see a lot of risky type of entries. Okay, so, you look at Caterpillar and you say, oh, geez, I got to jump into this. Keep in mind, this is trending down on the short term. So the likelihood is, okay, we could bounce most likely going to get rejected overhead. So you have to keep an eye on these if you're going to take an entry. Especially wouldn't do it right now because it's at the high of the day. But a big dip, it got bought. All right, so anything that you bought in the first hour, first half an hour, when the market's reversed, most of those positions have been played out. You can see what happened here. Markets went sideways, and that's pretty much everything. SPY did the same thing to a certain degree. NVIDIA, different sectors. Let's see, Microsoft. Okay, didn't recover yet. Okay, Microsoft's starting to recover. Let's see, materials, communications. What I'm looking for is outliers, the ones that aren't doing what the rest are doing. XLV, XLF. XLF, XLI. Okay, you see this has stayed green all day, XLI, so that's a good signal. XLP, still green, but faded quite a bit. XLU, XLY, XL, XRT.
Yes, we roll. We're going through it. Yeah, well, we talk about this generation of CEOs being seasoned by crisis. You've been through
XLK.
It's like nothing surprises you now. Nothing surprises me, especially in this.
XLK rebuild. Okay, so this looks pretty good. The rest, everything else is kind of fading. XLK is catching a bid. That's an interesting dynamic, right? SMH, you see that?
I don't think it's a bad thing when the president of the United States shows up at your event, no matter what your event is. I mean, I think it was a big deal when he showed up at the college football championship. I hear
Going to the World Cup finals.
Yeah, I think he's going to the World Cup finals, and I think it's great when the
But it
president.
doesn't make you
I can't believe the World Cup finals in New Jersey, Rutherford. That's wild. It's going to be crazy.
I mean, so you're always going to have people that believe that, but it's not true. I mean, I don't imagine. I mean, it doesn't matter what administration it was. If the president of the United States calls me and says, "Hey, we want to do something," I'm going to do it.
Yeah. Can't imagine.
Yeah, it's just like Kane from England. You know, if the president wants to play golf with you, you play president. It doesn't matter who the president is. People bitching about that. It's so stupid. You're representing your country. Of course, you're going to. You put your politics aside. You play golf. No big deal. People are too politicized. Semiconductors look pretty good here, right? All right, so NVIDIA, Google, Tech, NVIDIA. Okay, still going here. Nice trade, dollar. I didn't join you. I already have some NVIDIA, but those are September, so I'm not really that concerned right now. The other reason for buying September, October options is what happened today, what happened yesterday, the pullback. You're more insulated the further out in time you are.
Because of COVID, there are tons of markets that we haven't been to in a long time. We're going back to Philly for the first time in a while. So, yeah, this
Dana White speaking. He's pretty cool. I like Dana.
The media rights is a huge revenue driver, but the promotions, to your point, is probably a big growing one.
Yeah, and for Paramount now, for us, what even makes the business more exciting, and when we think about growth over the next 7 years, is pay-per-view. Pay-per-view is now gone. So what you can buy Paramount for the year was the cost for one pay-per-view. So when you think about that, first of all, we have completely delivered for Paramount. I mean, I'll let them speak for themselves, but
Skydance, Paramount. Let's see if they're getting a pop off of his conversation. Semiconductors, you can see that's starting to go some more. So that's one way to play it, is just to buy SMH, right? Buy some SMH or SOXL. Okay, coming off the low. That's not a bad idea, actually, SOXL. SOXL.
Television deal where these guys are so excited to have our product. And
Should I wait until next week? SOXL.
get behind it, and my job is you sign a $7.7 billion television deal and kick back and say we made it. I now have to deliver for Paramount, and then 5 years out we'll be looking down the barrel of a new television deal, and
it'll be bigger.
I am very.
What do you think?
I am very, as you guys say on this show, I'm very bullish about our business over the next 7 years.
Well, we appreciate you taking the time to come in and talk us through it.
Thanks for having me.
Thank you. It's always good to see you. Dana White, the president and CEO of UFC.
When we come back, the president's crypto empire might stand in the way of a digital asset bill that is headed for a vote. We'll get to that when we come right back after this break.
SOXL. This looks really good as an entry. 3 weeks into a downtrend. The 200 is just below, so we could come down and touch the 200-day before we actually turn. Just be aware of it. But this looks pretty bullish right now. SOXL. Okay, SOXL is on the move. SOXL looks good. Semiconductors ripping here. SMH. SMH has a 99% risk relative strength rate, and that's really wild. Huh.
Welcome back. The president's crypto empire might pose a threat to the digital asset bill that's headed for a vote. Let's get to Emily Wilkins in D.C. with more. Hey, Emily.
Hey, Carl. Well, yeah, look, Senate leadership, they really want to have a vote on this rules of the road crypto bill in the next few weeks before they break for their August recess. Big question right now, whether they're going to be able to get enough Democratic support to pass. And that is increasingly hinging on whether the bill is going to put in place some strict limits on the president's ability to profit from crypto. Now, Democrats, they've been pushing for this ethics language for months, but it's become even more pressing just in the last 2 weeks when President Trump's financial disclosures showed him making roughly $1.2 billion from crypto-related ventures alone during his first year in office. Spoke yesterday with Senator Mark Warner. He supports the goals of the broader bill, but he said that it is critical for lawmakers to limit the ability for elected officials, including the president, to profit from crypto.
The president has made billions and his family off of this. We're going to suddenly go forward and say, elected officials can take advantage of that situation going forward. I think that would be pretty outrageous.
Senator Bernie Moreno, who met with
Okay, so if all of Congress, including the senators, say
although it would not apply that restriction to other members of the family, including, of course, Trump's family.
will no longer participate in buying. Yeah, I could say, yeah, it's okay. Whatever. What's Vinny talking about?
So we're keeping a close eye out for that to see how Democrats and industry respond and exactly what kind of vote we might expect later this month or in early August. Guys?
Emily, as you gauge the calendar that remains before the recess, is this priority number one?
I wouldn't call it priority number one. You do have things that need to get done, like that major defense authorization bill. There's going to be a push to make sure that there's no sort of government shutdown at the end of September, that they push that fight until after the November elections. But I will say that when you speak with Senate Majority Leader John Pittman about this bill, he seems very eager to find a way to get it on the floor. And remember,
Okay, nice rally.
is a big donor to a lot of lawmakers, and that is factoring in to some degree as many of these members are getting set for the general election.
As obviously we monitor the roll call as well after the death of Senator Graham.
I was just going to say, Olivia Cantrell from PIMCO, who we look to on Washington, did say that, he was seen as a Trump whisperer, and he was a big advocate and had a megaphone for a lot of these policies. And so they were kind of pondering what any kind of legislation, including clarity, would mean under this new sad reality.
Next week, busy with some industrials and Tesla,
earnings.
ServiceNow, Intel. Not much Fed speak.
Yeah, IBM earnings, Alphabet earnings. We'll talk to CEOs like Charles Schwab and Hasbro. Get a pulse on what's happening in corporate America with AI and with the consumer.
Let's get to Dom Shu in for the judge.
Have a good weekend.
Oh, it's 12 o'clock already. Wow. Semiconductors still surging here.
Big news out of China sending shivers through that tech trade. The investment committee at the ready to bring it all down, including the fallout. Joining me for the hour are Steve Weiss, Jenny Harrington, and Kevin Simpson right here at the New York Stock Exchange. Let's get a check on the markets overall right now. You're seeing a down day, fractionally so. The Dow Industrial's off about just about 0.1%. It's about 52,526. The S&P though down 0.5%, sitting right below the 7,500 mark, and the Nasdaq Composite, the tech-heavier index, down about 1% right now. The semiconductor trade, the real pain point again, as China rolls out a powerful new AI model. Now to the scorecard for the semis, as you can kind of see here. It's moving a little to the downside. NVIDIA shares, AMD, the lot are going to the downside right now. That's driving the momentum ETF on pace for its worst week since April of 2025. The DRAM ETF on pace for its worst week since inception. And the SOX ETF is now in a quote-unquote bear market, off 20% from its recent highs. All of these things are happening at once, but it has become the epicenter of that momentum AI tech overall trade. So let's go to the committee for what's going on right now. And maybe I'll start, Steve, with you. The sentiment, we've seen this before, just not to the degree recently that we've seen over the past week and a half with the chip trade. Is this finally the rollover, or are we just going to buy it after it goes down a little bit more again because the valuations become more compelling?
Yeah, so there are multiple points to that question. First of all, it's not just been a week and a half, it's been a longer time. We've seen huge volatility in the semi-trade, but they keep making lower highs, which if you look at from a technical standpoint is troubling. In terms of what drove it, the market always talks about that the market would stay irrational for longer than you could stay solvent. That works both on the upside and then when you're coming down on the downside. Upside in terms of being short, downside in terms of being long. So where I think we are is that the market is beginning to pull forward. And I've said this repeatedly on the show, the end of the cycle. If everybody's saying the cycle is going to be over, and I'm not talking about they'll never spend again, I'm talking about peak spending only. The market has not been anticipating peak spending. It's been trading like spending is going to continue to increase. We saw a hint of that on Meta News, where they say we're going to increase by $40 billion. But that's what's anticipated. And then you take some of the, in other words, they were anticipating the market spending will keep going and make new peak. The others, and what's been the controlling narrative over the last month or so, is that, okay, everybody's saying we got a year or two, and I'm not going to be the last one out. So the ones that were in the earliest are the sellers, and then you've got the nervous hands, the weak holders who came at the end of a momentum trade, right? And they're the fastest ones to sell because they're booking losses. Now, here's where I'd say where we are. I don't think it's over completely. I'm not sure the reset is over either. China, which you're bringing up as a new point, is not a new point. I referenced it this week. I referenced it last week. You have to be sleeping not to have known that China has much cheaper models, whereas tokens have gotten very expensive here, and much more effective AI. So the market, meaning the buyers like the Metas and everybody else, have been going to that. So that is an issue. But what's not talked about, even though, again, I mentioned it on Wednesday, and what we seem to be, sleepwalking past, is the risk of higher inflation and the war in Iran, which is not going to end. This is my view, and my view is very well informed on this. It's not going to end until we do much more significant damage, which will include damage to the energy infrastructure, which will drive up oil prices, drive up inflation, and that, of course, will be bad for real stocks.
That's like a non-virtuous cycle, by the way, what you're kind of talking about right now. Kevin, do you feel the same way about whether or not, I only bring it up because Bank of America kind of put out some commentary on that semiconductor trade right now. Basically, they're saying, we see correction as a summer reset, not a fundamental reversal, and remain positive on leading compute, that's NVIDIA, Broadcom, memory, Micron, networking, Marvell, CPUs, AMD and Intel, and semi-cap, that's, Lam Research, Applied Materials, the ASML type names. Do we feel as though this is the pause that refreshes? It doesn't seem like a pause right now. It really feels like in some ways people want to get out of this trade.
Yeah, pause always feels like that when you're in the middle of it, but I don't think that changes Steve's narrative at all. In fact, I think it's pretty congruent to what I'm expecting, because we were in a period, Dom, where it was just like if you mentioned artificial intelligence, you were rewarded. The stocks were moving higher. I think a lot of these have been validated by earnings growth. But what I would say is we're in the most important earnings season for several years right now, because we know the numbers are going to be really, really good. Even your Taiwan semi was fantastic, but the problem is they're spending a little bit more, even though the guides are good. If we're at or near this peak spending period, it becomes problematic that every single trade isn't going to work. So I think what we're going to see this earnings season is a have and a have-not story, and those companies that can execute, that can deliver a return on investment for all of this money that's being spent, they'll be rewarded. And if you come up just a little bit short, not on your earnings, but on your guide, I think it gets slammed.
All right, so I want to bring up another piece of commentary because we want to kind of frame this around how this debate is playing out to the downside predominantly today. You've also got Wolf Research on semis and momentum. They say how the next bounce in semis unfolds will be extremely telling as longer-term momentum is cresting and on the verge of breaking following the parabolic advance. We'll need to see a powerful acceleration to reverse these headwinds. If not, this is the key point, the early stages of a topping process are likely upon us. Jenny, does that seem to resonate? A lot of people have called a lot of tops over the course of the past 10 years that have not really come to fruition. But is this time different? Famous last words.
Yeah, so, I hate talking about feelings, but it feels like we're in that topping process. And I think the reason it feels that way to me is because I'm not looking at just the semis. I'm looking at this from a much broader perspective. And I think to think about the semis, you have to think about everything else that's going on. So, for example, DVY, which is a dividend ETF that I like to reference just kind of as a poster child for everything else, it's up like 0.1% or something today. And it's up 15% on the year. And what their top holdings are things like Verizon, Kinder Morgan, Dominion, General Mills, Target. And so the way I'm seeing this is that there's valuation talk and valuation work really creeping back into what's going on. And the speculation trade to infinity and beyond, speculation, putting a price on stocks, that's fading while valuation is coming back in. I've also been thinking of it, Dom, in terms of what if we're at a peak moment in stock friendliness? And that would mean, not that things are going to get terrible, but if we think forward for the next year, like, do you really think corporate taxes are going to get lower?
Okay, we're watching semis.
Regulatory environment going to get better and easier? Probably not, especially if we get a
NVIDIA just off the high. Apple pulling back now.
Our earnings going to get significantly better. And to Kevin's point, Kevin said we know the numbers are going to be good. We know those numbers are going to be good. Analysts adjusted the S&P up to 24% year over year a couple weeks ago as Q1 earnings finished up. So we know these are good, and now we have these big cash cows converting into cash guzzlers. So what if we're at this moment where it's kind of as good as it gets for now? Then what does that mean for the future? What that means for the future is long-dated cash flows are less valuable today, and short-dated cash flows are more valuable today. And so you've got short-dated cash flow being more valuable. I think that halo, heavy asset, low obsolescence, still holds. And I also think you need to pay attention to where there's a target on the back of a company. So what's in the government or what's in society's crosshairs? And I think you want to get away from that. And if you look again at those stocks that I mentioned that are in the DVY ETF, which are the kinds of things I invest in, they're kind of like in the epicenter of the things that you'd want. They have heavy assets, they've got low targets, they've got high cash flow. So I feel like there's a topping in the semi because of what I see going on outside of it.
I'm not willing to say that earnings are going to be good. In the absolute, they'll show good growth. They'll be good for any company, but will they be good enough for the market? That's the question.
That's the case.
And as we've seen with past quarters like Broadcom, great numbers, not just good numbers, great numbers. But guess what? They weren't good enough. In the aftermath of Micron reporting phenomenal numbers, just not.
All right, SOXL surging some more here. Okay, Tesla's on the move. Watch Tesla here. Tesla going.
So the expectations running into many of these prints, even though they're going to keep reporting double-digit earnings growth.
So is it the expectation going into the print?
Okay, S&P turning back up. All right, Tesla's on the move. Let's see. Do I have any Tesla expiring today? I just want to make sure I don't miss anything here. Tesla.
So we really don't know what's driving it. So the
Tesla.
thing is, all the stuff you read, interesting.
Tesla, I have a sell order in on Tesla. No, I don't have anything expiring today. Good. Good.
And where you think it's going, not try to bet where others think it's going.
Right. And
so I sold Micron. I believe there was more upside to it, but not at that point in time. Guess what? I made enough money. So why put that at risk?
Okay, Intel about to break higher here. Intel breaking higher.
Pick up the chips and go home.
Okay, so to that point, if you are, this is a trading desk right now. There are some shorter-term tactical views that we take, and there are longer-term strategic ones. Because you brought up Buzz Lightyear and to infinity and beyond, the Barclays team seems to feel
Chips
like
going.
Buzz Lightyear to infinity and beyond trade over the longer term. The comments are interesting. They talk a little bit.
Nice move here. Okay, good.
They say, while tech volatility may persist in the near term, we believe that the reset in positioning should ultimately prove healthy, creating more attractive entry points for long-term investors targeting the structural AI theme. So maybe this is just a time where some of the weaker hands are getting out and creating a longer-term opportunity for people who can wait 3, 5, 7, 10 years. Is that a good assessment or not?
I think it's a dangerous assessment to put a broad brush on that. And I think you can look at the tech index over the last quarter, and then bring it down to that level where tech was up, 31% for the quarter. You had Micron up 244% for the year, and you have Salesforce down 31% for the year. And I think even within that AI space, as we go forward 3 and 5 years out, it's going to be very much the same, where you need to buckle down and do your valuation homework. I don't think you can bank on just speculation and saying AI for everyone, AI forever, AI to infinity and beyond. If it has AI attached, I'm going to buy it. I think that trade is done, gone. And I think there's real granularity coming in. And I think there is an increasing demand to see, or there will be an increasing demand to see return on the investment that these companies are making. So I don't think you can paint that broad brush. I just want to beef on something else. But one of the things that I've been really frustrated about is looking at as some of these stocks have really started falling off, looking at the analyst recommendations. So you look at SpaceX right now, and you've got every single analyst with a buy. I think there's maybe one that says it's a performer or a hold, and the valuation targets are crazy, $1,200 and stuff. Or you can look at Netflix, And on CNBC Pro, it says there's 52 analysts covering Netflix. Not one of them even has a like underperform on it. No sells, and the lowest price target says it's $80, and the average price target is like 112. And so I think there's going to be this moment of reckoning where people need to realize, like, you have to make money to actually be rewarded. And so I really think, I don't think you can just broad brush and say, it's all under.
Okay, so one of you guys is not broad brushing it. Kevin is not broad brushing it at all, because Kevin, you actually added to a position in NVIDIA, a stock that at one point, and maybe still arguably is, the poster child of the kind of AI revolution, industrial revolution that we're in right now. You added to it, and by the way, you're not the only one out there feeling that way, because it trades at a forward multiple of 20 times earnings on a 12-month forward basis. Some would argue that it's almost a value stock at that point. Is there a reason why you can't be opportunistic about buying this trade if there are valuation, at least tailwinds for some of these stocks?
I mean, you using the word value investment in NVIDIA is like music to my ears, so I appreciate that, Don. I'll take the other side that Jenny just brought in with respect to Barclays, because I'm not sure that they're painting a broad brush. I think they're looking at this and saying, as things get a little bit more sane in certain trades, there are opportunities. And I'll pivot specifically to our NVIDIA position here. The stock was 230, 6 weeks ago, 4 weeks ago. Here we're back down in the 200 range. And I do look at this as a company that's in a maturation process, maybe a la Apple over its history.
Just doing a little bit of analysis here.
A lot of money over this name. You can put 5 cents into NVIDIA, and then it's worth $5 million 2 years later. We're looking at it now as a true investment longer term. So they have an $80 billion share buyback. They're paying a dividend, which is close to a 0.5% yield. Not enough yet for your dividend strategy, but enough for ours from a dividend growth perspective. And then if you look at what they're doing under the surface, this is almost at $100 billion a quarter in revenue. So I think that Jenny's point about which stocks are going to be specifically winners and losers is spot on. I'll just take Barclays back a little bit and say I don't know that they were painting a broad brush, or at least I was thinking or talking my book as I was reading it. So I think there are great opportunities here. And if you step in when there's problem, when things are under pressure, that's where you make money.
Steve, I want to go back to a point that you made about whether or not you made this money in a memory name like Micron. There might be more to be had, but you want to protect what you've got, and you take that, you raise the cash, and you deploy it somewhere else at some point. One other place I'm curious that you raised cash in has been an ancillary play on that AI revolution on the industrial side, and that's Caterpillar specifically. And I want to talk about the trade that you did, because you've sold that Caterpillar stake. And by the way, just from a valuation standpoint, I just want to bring it up for relativity's sake.
Right.
Different industries, right? Micron and NVIDIA versus Caterpillar. But Caterpillar right now trades at around 35 times forward expectations versus NVIDIA's 21 times forward expectations. How much do investors really have to toggle around with just where to take profits from and where to deploy them to?
Look, that's insanity. And I said if I owned the stock, I would sell. I sold most of it, by the way. And, I guess maybe even close to a month ago, a number of weeks ago, this is tag end. And to me, 35 times forward 12 is insanity for a highly cyclical, capital-intensive company. It's just lunacy. It should be in the mid-teens. And that's because you get a premium to its historical. Now, what we don't know is how long this is going to be. But what we do know it's a cyclical company. Always has been, always will be. There are different cycles that drive it. And that's the same thing with Micron. So Micron, I don't think it's going away. I just think the market's lost track of how this stock trades historically and why it trades that way, which is a commodity company. And they add capacity, CAT's adding capacity, and eventually dries up. Now, what we don't know is how much pre-ordering has happened. And this applies to CAT and Micron and all the others. What we do know is Meta came out and said, hey, we're going to get into the cloud business. Now, is that because they see a tremendous opportunity in cloud, or is it because they bought too much? And now they want to put what they bought too much. So we're going to come back to the same cycle with all these semis where there was over-ordering.
All right, SOXL at the highs.
So it's like when I allocated all the IPOs when I was at Lehman, and funds would put in an order for 10% of the book, knowing they're only getting 2%, right, of what they wanted. So it's the same type of phenomenon. It's the same phenomenon in every single industry. If supply is tight, you order more than you need. And if you get it, great news prize. CAT specifically, it's just basic. I'm not saying the end is over for the stock. I do expect to report good quarter.
Big move on Meta here.
Valuation was just
Meta, big move. Watch Meta. Nice reversal. Meta ripping here. Meta. Okay, I don't know what's going on with Meta. That's a nice rip, though. Oh, they're talking about it on CNBC. That's why.
Apple has been on a quiet run versus on a relative basis compared to the Mag 7. It at one point briefly retook the most valuable company in the world kind of level. We're watching the $5 trillion market cap level at this point. This is not the first time that Apple has been talked about as a relative value within Mag 7 and a so-called maybe even safety trade. Right, for some of those things.
That's why money's going to, in my view. Nothing changed in fundamentals in Apple. They're still way behind in AI with no plan that we know about to get there. It's still a consumer.
That's not true. That's not true. They're using Gemini.
It's still slow growth. It's money looking for a home and then making a story out of it. So that, to me, it's pure and simple. That's what it is.
Kevin, you have a story on Apple, though, because you've done some work in trading positions around it. What exactly have you done with your Apple?
To Steve's point, there's a lot of money going into it. The 2.5 billion devices is no joke. And if we can deliver the AI on these 2.5 billion devices, that's why this stock is working. So I don't think we're near the end at 330. But what we did, Dom, is we wrote a covered call on the position. So we've got a 350 strike. We still got $20 of upside. We brought in a nice premium. We covered half.
VIX, we got 65,000 of the August 26 calls. Trading today for $1.10.
If it goes up and we're out at 350 on half of it, well, heck, this thing was $300 also a few weeks ago. So I mean, I love the name. We've been in and out of this for the past 15 years. I always talk about the fact that I love the company. I don't always love where it's trading at. So it's getting up against the multiples that you get a little nervous here. But I think the next cycle with respect to the flip phone, what they're doing with China with AI, there's a lot to like about Apple. And I would not be abandoning it here. The covered call isn't a bearish statement. It's just harvesting a little volatility.
It's just smart.
Thank you.
You're welcome.
Well, especially when volatility is at a premium in certain parts of the market right now, you can be opportunistic with it. Other places you can be opportunistic are outside of that Mag 7 hyperscaler trade, but having an exposure to it. And Jenny, I'll turn to you for this one because you've been active as well. You've put on a position in a certain real estate company investment trust that is kind of tied to communications and to wireless and to everything else. Talk to us about that.
Right. So we added American Tower, AMT, which has a 4.2% dividend yield, generates $4.5 billion cash. But interestingly, Dom, we didn't add it to our dividend strategy. We added it to our disciplined growth strategy because there's a decent earnings growth trajectory ahead for it. So what they have is they have 150 cell phone towers in 22 countries. And you see that the stock's traded down like 45% since its peak in 2021. That had some to do with the T-Mobile Sprint merger. And then there is another layer of pressure on it that came as, and we saw this, by the way, the same thing that I'm going to talk about when I added Comcast to the dividend strategy a few weeks ago. But with the SpaceX IPO, there is so much focus on Starlink and how Starlink's so amazing, which, by the way, it is. But how that was just going to take over all the traditional forms of broadband and wireless, and it was going to get rid of towers. It's not. So far, Starlink's really a complement. I mean, even professionally for us at Gilman Hill, we view Starlink as a complement, but it's certainly not a replacement. It's just there's physics involved that make it not trustworthy or not dependable quite enough. So you've got this stock that was on sale. You've got a huge free cash flow yield. You've got huge dividend. It's trading at 14 times FFO. It, again, fits into this, into kind of the middle of the Venn diagram of all the things we're looking at. So it's not like, hey, let's go hit a home run. It's just here's a stock that's going to mint cash. It's going to be highly necessary for probably decades to come.
By the way, we're just getting started. We mentioned a couple of the names that we're going to delve further into, like Netflix, like SpaceX and everything. But coming up is our chart of the day. Netflix, again, under pressure on its earnings report, but one halftime committee member, as we alluded to, is buying the pullback. Those details ahead. Halftime is back after this commercial break in 2 minutes' time.
All righty. Meta, nice little pop there, getting mentioned on CNBC. Let's see if it holds it. Tesla just turned back down. All right.
All right, welcome back. We've got a news alert on shares of Meta platforms, which are moving off their lows of the session right now. Let's bring in our own Pippa Stevens. Pippa, what can you tell us?
That's right, Dom. So Meta is reportedly in talks to lease computing power to Anthropic. This is according to the New York Times, in a deal that could potentially be worth $10 billion over 2 years. Now, this does, according to the report, mark a potential step toward a new AI business for the social networking company. And again, this could be worth some $10 billion over 2 years, Dom.
All right, Pippa Stevens, thank you very much for the news update there. I'm going to go to you for this one, Steve, because you had just alluded to Meta, the excess compute, the leasing, the neo cloud type stuff. The reaction here, I mean, is this something that we should maybe focus a little bit more on? Hyperscalers now giving out that capacity, not giving, I should say, financially benefiting from it.
Yeah, I don't know how many others have it, but think of what that's going to do to data centers. Think about what it's going to do to others, which is that it's going to lower prices, right? Now, we don't know, while this is a good headline, and it's
All right, Meta looks like it's going to continue. It's got a nice, a nice catalyst. Meta.
We should create a new metric. Net interest margins for net financials and net compute margins for these hyperscalers.
That's a good one. So that's really the question. How many others have done this, and does that back into the chain where you lower your price, that you're willing to pay for compute? So
everybody on the desk owns Meta platforms, by the way. So Jenny, what about you?
Here's my bottom line on it. What I like is that we see Mark Zuckerberg being financially savvy, and I like that it's a statement of him maximizing returns. I don't really need too much more on that for this move.
Well, if not maximize returns, cutting his losses.
Okay.
Right? But either way,
same thing.
My view is he's playing chess while Microsoft is playing checkers.
I think that's right.
Okay, we'll find out with earnings what the guide of what their CapEx looks like, because if that comes down, then you know that this is a problem where they've overspent, and then that could be something that has a ripple effect across.
Yeah, but there's so many companies that have by accident, right, tripped into a great business. Now, I'm not underselling Zuckerberg because he's brilliant, but think of what he's done, the business that he's created since Facebook launched. And going to cloud is brilliant. There's going to be so much need for cloud.
And you also see him maturing and being flexible over and over. He became flexible when he's like, okay, fine, we're going to pivot to efficiency. And the maturity that he's shown over the past 20 years is pretty exceptional. So I like seeing this. It's just a positive direction.
Next to go is my largest position.
Perfect. So from one mega cap comm services company to another one that's very much in the headlines today, let's talk about Netflix. It is our On pace for its worst day, by the way, going back to April 2022, following its earnings report. Let's get the news and the context with Mackenzie Sagalos on that big drop. Mac, what can you tell us?
So, Dom, at least 17 firms cutting their price targets on Netflix after the company reported slowing revenue growth and a weaker Q3 outlook, which would mark a third straight quarter of deceleration. The debate here really centers on engagement. Netflix says total viewing hours rose 2% in the first half of the year, slightly faster than 2025, but JP Morgan says that viewing fell in the US and Canada. Wolf calls the broader picture a murky mosaic and cut its 2027 revenue outlook, really suggesting that the slowdown could last longer than investors had hoped. And that's why Bernstein is focused on whether live programming can offset the weakness by driving outsized signups and ad revenue. There's also an M&A overhang, Citi saying investors are still pricing in the risk of a major acquisition despite record buybacks by Netflix. So Bank of America, they may sum it up best. The quarter changes neither the bull nor the bear thesis, really leaving the stock without an obvious catalyst. Shares are down nearly 50% over the past year and 7.5% right now, Dom.
All right, Mac, thank you very much for the update on Netflix, currently down 7.5%, off its session lows, by the way. One halftime committee member in Malcolm Etheridge actually just bought the pullback in Netflix, added to the position. He joins us now. Malcolm, why Netflix today on this dip, and are you scared that there could be bigger dips to come in the coming months?
Hey, Dom. So we talked about this on the show yesterday, and the thing that I really liked about Netflix initially was the fact that, one, they've already gotten past that WBD distraction. They finally sort of decoupled themselves from that, and that was initially the pressure on the shares. However, they've increased prices over the last 2 years, and they've also increased the paid subscribers by 40 to 50 million people over that same time. So we're seeing the street and the actual consumer going in two completely different directions. So to me, this is a chance to own a really great company that exists in a lot of people's lives and is not going away anytime soon, that has pricing power. They've shown us that because I just mentioned the price increases. And it's the ability to own it at about a 45 to 50% discount from its most recent highs. And so to me, the sell-off following the earnings, I completely get it. The Bears really wanted to hear something positive about the engagement numbers to make them change their mind, and instead they got the opposite. Netflix basically said, instead of telling you how bad our engagement numbers are in the near future, we're just going to eliminate that report and only tell you about it once a year, which is not what you want to hear. However, they did the same thing last year when they said they weren't going to tell us about their paid subscribers anymore, and the market seems to have forgotten about that metric altogether, and we can kind of estimate what it looks like. So to me, this looks like a great opportunity to be buying if you are a long-term minded investor, because this is not another semiconductor company that's going to be up 80% in a month, but it's an opportunity to own a really quality company that's basically a utility at this point for a very cheap price in comparison to what you'd have had to pay for it about a year ago.
All right, Malcolm Etheridge, thank you very much for joining us to give us the case for why you bought the dip. We appreciate it. Have a nice weekend, sir. All right, let's go to Kevin, because you actually earlier this week sold some of your position going into this earnings print. Why, and would you maybe take profits on that kind of position and then reposition for a higher on this particular pullback?
So we sold some on Tuesday, Dom, at 74. I wish we had sold it all. I like Malcolm's entry point here. I love the long-term thesis on the stock. But when it comes to streaming, content does matter. So let's just think about Your Friends and Neighbors, Boys, Dutton Ranch, House of Dragon, The Bear. These are shows that people are watching. None of them are on Netflix. So for the time being, I think they need to straighten out the content if we're going to see the stock get back on the right trajectory. How can they do that? Well, I think live sports is the easy answer. So you think about NBC and what they own, the property of NFL football, NBA, the Olympics. Imagine if Netflix was to pivot and own those properties. Now you've got something where the eyeballs are not only going to be a viewer like Monday Night Football. Imagine if that was
I mean, they're kind of already putting that marker out there, right? So
I exited the rest of my position earlier in the week. And the reason why I did it, and I mentioned that, look, I could be wrong with the quarter. You typically have quarters where they bounce back after that quarter. I would just, frankly, edit what Malcolm said, which is that this is where he said this is a good time to buy it. This is another good time to buy it because it's continued to miss, And the issue is, and they said this very clearly, we're worried about growth. That was my concern, or remains my concern. Competitive landscape has been enhanced quite a bit. I think that, if Malcolm wants to park money, there are other places to park it. I think this is dead money for at least the rest of the year and maybe longer. Now, if they do try to engage in a bidding war for sports, good sports, that's going to limit their ability to, number one, get back money to shareholders and to get other content. And see other content, not the sports that people can sign up with for a trial, or 1 week trial. It's the constant contact that you're streaming repeatedly, the 10-episode series and so forth, that keeps viewers engaged. So I think it's dead money. Yes, it's great business, solid business. Yes, it's utility, but you don't get paid like utility, as Jenny will tell you.
Yeah.
So I just don't see any point buying it here.
What do you think,
I
Jenny?
don't think it's utility. And I think what Steve said the competitive landscape has been enhanced. I think that's a very kind, very gentle phrasing of what's gone on. I would say the competitive threat is dramatically increased versus any time in Netflix's history. So today, content can be created more cheaply, more easily, more robustly, thanks to the amazing AI generation tools behind it. And that is a significant competitive threat to Netflix. It's trading at about 18, 19 times, right? Market's at about 20 times. It should have a bigger discount to the market because this thing's under threat. Like, however you cut it, it's under threat. Unlike Disney, and I hate going into Netflix Disney, so I really don't want to drag there, but just Disney's content, for example, is more of a library. They're not totally dependent from a content perspective on creating new content. Netflix is much more dependent on new content creation. So they're competing in a very competitive space already. And then in the worst part of that, I think, which is new content creation, is what drives viewers. Everywhere I go, even sitting on the desk, sometimes people are like, oh, I stopped, I cut off my Netflix. I'm just not using it. I'm just not watching it. There's so many other places to go for interesting things to watch. So I think it deserves a multiple, I don't know, of like 15 times or 14 times, but it deserves a discounted multiple. That's where I might ever consider it again, but still with roughly a market multiple, at best it's dead money.
There are some folks who believe that higher multiple could be commanded if they get the capital budgeting correct between the pivot between content, movies, and studios versus that live sports component and what the ROI is on investing in both of those vis-a-vis your AI creation and everything else. So that's going to be something
that's a completely different analysis than is subscription growth accelerating. They've got very, very low churn. Churn's almost, 2.5%, 2.3% is negligible. But where's the growth come from? You see, their issue is that they've had to shortchange the American consumer where it started in terms of viewing to go global, right? So they have to dilute their budget globally, and you may not have the same growth over there as you have here.
All right, guys, big conversation. We need to have more time for that one. Coming up next, though, Mike Santoli joins us now with his midday word. Keep it right here. We'll be back after this.
All right. Adobe trying to get back up to the highs. Netflix is hanging out at the highs of the session. NVIDIA Looks like it's okay. SOXL, just off the highs. If you're just joining us, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Friday, July the 17th, 12:39 p.m. Markets have bounced very nicely. Meta, I still have some Meta calls left. Let me just check in on Meta. I was just taking some notes there. Got kind of quiet for a few minutes. Let's see, Meta. Okay.
Breaching security at NBC's Today Show has pleaded not guilty to hate crime charges. Police say 41-year-old Andrew Truelove entered a restricted area at Rockefeller Center, asked for Al Roker, then confronted Craig Melvin while shouting a racial slur. No one was hurt. Bail was set at $10,000 and protection orders were issued for both hosts. Coca-Cola says a cyber attack has temporarily shut down Fairlife milk production in the U.S. The company says an unauthorized third-party accessed Fairlife's production systems in what it believes was a ransomware event. The company says product quality and safety were not affected, and Fairlife operations in Canada are running normally. And Britain is getting a new prime minister. Andy Burnham, the former mayor of Greater Manchester, has been named leader of the governing Labour Party and is expected to take office Monday. He replaces Keir Starmer, who is stepping down after a rebellion inside his own party and weak election results. Burnham says he wants to move power away from London and focus on the economy, public services, and restoring trust.
What's Cheesecake Factory doing? Just saw a note on Cheesecake. Cheesecake Factory breaking out again. All right, this has been on the watch list and looking good. Back below its opening range high.
So what exactly do you think is going to be that next possible step beyond what we've seen with the sell-off today?
The most evident thing.
Seagate Technologies taking the #1 spot on the NASDAQ. Almost a bullish engulfing candle at the moment. That would be nice to see some of these memory and chip-related names produce. Okay, so Micron's about to produce a bullish engulfing candle. It looks like it already has.
It's net defensive. A little bit of pharma doing okay and things like that. I do think you have to give credit to this market for not fully losing its composure. I've been questioning for a while how much we can expect of this to continue, where you're not going to have
Micron, bullish engulfing. Many of these chips are producing bullish engulfing candles.
sort of make it a little messier. So give it credit. We first hit 7,500 on the S&P May 14th. Keep talking about that. Cerebrus IPO day. Lots of other good stuff going on. And I think the big question the market's been struggling with is, have we overplayed the AI hardware bottleneck trade? Now that we've dialed back on that, do we have another answer?
To that point, and I'll leave it with this, the DRAM ETF is now up 3.5% on the day. So
Wow, that's pretty cool. DRAM is another one.
And SanDisk has as well, and all those others. All right, Mike Santoli, we'll see you on Closing Bell Overtime later on this afternoon. All right, coming up next, our top calls of the day. Keep it right here.
Okay, Amazon turning back up. Okay, looks like NVIDIA wants to go here. It keeps ticking higher. Microsoft turning back up. All of the New York FANGs looking a little better now. Okay, these are all looking better. New York FANG components. Check out your New York FANG components. Many of them are bid. Especially Microsoft, Amazon. Apple. What's SPY, those put flies doing? SPY, put flies. Okay, those are right. Netflix, pushing a bit higher. Netflix. Micron, okay, bullish engulfing candles, semis. Micron, looking good. Micron, wow, they're really buying the crap out of Micron.
Let's get to our calls of the day right now. We're going to start with one on the hospitality and leisure side of things. That's Marriott. It's reiterated overweight over at Morgan Stanley. The target goes up to $380. It was $353 over at Morgan Stanley. Jenny, you're a Marriott owner.
Yeah, it seems like every week someone's loving Marriott.
Wow, wow. Bullish engulfing.
425%, and we'll probably own it for the next 10, 15 years too. It's as Steve says, a permanent compounder, and they've got earnings growth at mid-teens. It's driven by the global demand for travel. There's 618,000 new rooms coming on in development. It's just a great company, great story. A little expensive, but again, something that you ride out those valuation rates.
All right, let's stick with the consumer here. Dick's Sporting Goods reiterated a top pick at BTIG with a $300 target price, and Steve Weiss owns Dick's Sporting Goods.
Well, I do own it. I do like the position quite a bit. I kind of read that report because I don't know how you get to 300 on this. But if that's a long-term target, they can do it. Look, this is one of one in terms of national franchise, in terms of buying power, in terms of being a destination for sporting goods. You still want to go and try most of them out and don't buy as much on Amazon or other online, although they have a great online interface. So if you're doing it, you go right to Dick's.
Yeah.
Wow, look at the short covering on Micron getting clobbered. The bear is getting clobbered for once. Oh, boy.
Kevin, you're a Chevron guy.
Yeah, it seems like a stretch, but I think they can get there. They're one of the most disciplined capital allocators in the energy space. There's a handful of names that you can go with. We love Chevron, growing production, fortress balance sheet, and a growing active dividend.
And you know what? Yesterday there was an article out saying that they're like Chevron's trying to figure out ways to get oil out of Iraq, and working around the Gulf of Hormuz, the Strait of Hormuz, which is just out of Iraq. Around Iraq, yeah. Like they are savvy and clever and quick.
All right, coming up on your show here, the options action with Oliver Rennick tracking some big
Okay,
trades.
NVIDIA's going here. NVIDIA.
Trades coming up next. Keep it right here.
NVIDIA's going to go. NVIDIA's going to blow. NVIDIA next. NVIDIA next. IBM. Let me look at IBM. IBM. From everything I know, IBM is probably one of the only firms that are producing quantum computers. Am I wrong? If I'm wrong, just throw it in the room if you know better. You can do some research, I guess, real quick. Let's see. Is IBM the only producer of quantum machines to date? Or are there others? Okay, so we got Google Quantum, we got IONQ, Rigetti, D-Wave, IQM, other developers. IBM is a prominent leader, okay? Largest fleet of deployed quantum systems. Many other companies are actively developing or producing their own. Q is looking better. Okay, NVIDIA. Okay, NVIDIA looking good. All right, so they're buying the dip. They're buying the dip. Okay, nice move. Back up to the highs of the day. Good trade. Netflix making more highs here, about to cross over 70. Netflix about to cross 70. Okay, NVIDIA looking good. NVIDIA is going. Okay, what do I have on NVIDIA? I have some, I think I said I had September. No, I have something later, right? Yeah, September's. Okay, I have September's. Ooh, that's looking good. NVIDIA is looking much, much better. Thank you very much. Oh boy. All right, so Meta's about to break out. Meta's about to break out here. Watch Meta. Meta's about to go. Meta. Okay, we're up against the highs. We're back above the 200-day. IBM working. Good, good, good. Okay, all the New York Fang's looking a hell of a lot better now. Apple's the only one that doesn't have a green candle on my reversal for now. Everything else has green candles. Amazon turning up. There goes Google. Google. Meta breaking higher. About to take out the high of the day. Meta. Amazon, Google, Meta, News. Oh, Microsoft, Nvidia, Netflix, Tesla. Broadcom.
All right, welcome back to the halftime report. Let's get today's options action. Oliver Rennick is at the SIBO Global Markets platform in Chicago. What's the floor saying? What's the options action today, Oliver?
Retail traders in Wall Street have something in common this morning, Dom. They are both underwater on SpaceX. The banks that chose to issue an extra $11 billion after the stock's strong start a little over a month ago, and the traders who stormed into bullish call options are in the same boat today, with SpaceX trading 9% below its IPO price of $135. The NASDAQ 100 was just 0.5% off its all-time high last month when SpaceX peaked. And a 9-day straight rout in the stock is giving fodder to bears who said the market couldn't handle all that supply. What's amazing is these traders aren't going down without a fight. 80% of today's almost $500 million in SpaceX options premium is tied to puts, but over half of that is being sold. And risk takers are diving right back into, brace yourself, Dom, the 330 strike calls expiring next week. Those need SpaceX to rally 164%, and right now are the most popular contract by volume.
All right, Oliver
Wow.
Rennick with that big movement there in SpaceX options. We appreciate that. Let's talk a little bit more because we had brought it up in the A block of the show way back in the first 10 minutes, but SpaceX will get into a little bit more. Steve, what exactly does the options action and the trading today tell you about what you think SpaceX should be worth?
Well, I don't think anybody can tell you what it should be worth. I think that Elon Musk can tell you what it should be worth because you don't have the typical metrics to base on. Look, I think at this point, SpaceX is it's a great company. It's a true innovator, and like Musk has done with Tesla and others, he's establishing the market. However, that doesn't mean it's going to be a great stock. It's still an immature stock. But
what do you think, Kevin? I just want to say, Kevin,
we own the stock. I think long term it's going to be in really good shape. We've got to get through this lockup period in the summer.
Yeah. It's going to be a while for SpaceX. It'll be a solid investment.
Thank you very much for that. Coming up, final trades. Keep it right here.
Unless it turns into an Oracle, of course. Oracle is up a bit off the low. Oracle trading 128. Oracle's a disaster. That has to get its shit together. Okay, Broadcom making new highs, driving higher. The chip's doing well. Take your pick, or get into some DRAM or SOXL or semiconductors. DRAM's up over 3% on the day. 4% now. 4%. Wow, DRAM plus 4% on the day. Jeez. Gee willikers. DRAM. DRAM. DRAM, not DRAN. DRAM. Okay. 4 3/4%. We'll have a bullish engulfing. Okay, NVIDIA, a little bit of profit taking. Apple turned back down just now. Meta breaking higher. Okay, watch Meta. This looks like it wants to go. Release the hounds. Meta looks good. Nice reversal off the low. Big hammer or hanging man candle, more technically speaking, when it's inside a price action. That looks good. Got news, got a catalyst. We got earnings next week. Anthropic and Meta in a deal. Talks to potentially $10 billion compute lease deal with Anthropic.
China's export economy is booming, their iron business should do well.
And Mr. Stephen Weiss.
United Health, they had a great quarter. I think it continues to move higher. Steve Hemsley is a star. Wayne, CFO, tremendous.
All right, that does it for the halftime report. Thanks for joining us. Have a great weekend. I'll see you at 3 p.m. Eastern time on Closing Bell. The exchange with Contessa Brewer starts right now.
Dom, thank you, and thank you for joining us here on the exchange. I'm Contessa Brewer and for Kelly Evans today. Stocks are off the lows this hour, but still we're looking sharply down on these new AI jitters. This is courtesy of China and that ongoing weakness in the semis trade. The SOX semis ETF was down as much as 3% earlier today, but now just lower slightly. It's still down 8% for the week and on track for the worst week since last April's tariff downswing. And look at the Mag 7 now, also broadly lower. You've got Meta as our biggest decline.
Meta continuation.
2%. There are new reports out today. It may lease computing power to Anthropic in a potential $10 billion
Meta breaking out.
deal. And take a look at SpaceX. We're seeing it back now down to 126. That's way below its IPO price of 135. It follows a second scrapped launch of the Starship rocket and continued growth in short interest. Let's begin here, though, with the latest news adding pressure to the AI
Oracle, a nice little rally here. Oracle, sending news on Oracle. Oracle, what's this little pop here? Oracle.
Is live in Shanghai with the very latest. And Eunice, we begin with you.
Oracle Paradox.
Thanks so much, Contessa. Well, that startup is called Moonshot, and it released the world's largest open-weight AI model. So that means that anyone can download it and customize it. And in terms of the size, it's 2.8 trillion parameters. So that means that it's basically trained on a lot of input data. And in theory, it means that the model is better. Another big feature, the company says it has 1 million token context window. So that just means that when you use it, you can put a lot of text and other stuff into the window in order to ask it complicated questions. So because of that, there are third-party benchmarks who have rated it very highly. Arena AI ranks it first for building web interfaces. Moonshot itself says that this AI model called Kimi K3 is comparable to models from Anthropic, OpenAI. It says that it outperforms its Chinese rivals like ZAI on coding tasks, and that affected the stock prices of some of those Chinese companies in Hong Kong today. The release also coincided with a big AI conference here. President Xi was here for a keynote speech. He was delivering a message about how the open weight model and that open source in general is a much better way to go as compared to the U.S. In fact, he took a veiled swipe at the U.S.'s model, saying that the proprietary AI models are really not necessarily something to go by. He said that AI development should not be a solar performance. And he also praised what's seen here as China's version of the U.S.'s Pax Silica initiative. So this is called the WAICO. It's a group launched last year, but didn't see much membership until this week when 29 countries, including Russia, Brazil, Serbia from Europe, joined. U.S. did not. And also, it's all about sharing technology as well as expertise in AI, and ultimately with the goal to be able to promote global AI rules and standards. So this is the first time that President Xi had attended this conference, and it was also the first time when he addressed AI safety concerns, saying that the AI must be secure and controllable. So really very interesting, Contessa. I think, though, that an important point to make is that when China says openness, it's not always very clear by what they mean, because at this conference, we did not see Anthropic, we did not see OpenAI or any of the major US labs. And also, those same labs generally are not allowed to operate here.
So the question remains, open to whom? Eunice, thank you for that. Let's get to Kate Rooney with how this latest news is shaking up the AI race here in the U.S. Kate.
Hey, Contessa. So the rise of these powerful Chinese models that Eunice was talking about, it does highlight a longer-term risk for Anthropic and OpenAI, especially as these companies look to go public. I did speak with cybersecurity sources this morning who told me the biggest threat right now to Anthropic and to OpenAI is basically China copying American versions of this technology. It's known as distillation. That appears to have happened here. There is evidence from people I'm talking to that Moonshot used Anthropic's AI models to train this new model called Kimi K3. Right now, there's almost
Meta at the highs.
There's really not a way to regulate it. There's this whole
Semiconductors continue to ramp higher.
into question the tactic of gating American models, as we saw with Anthropic's Fable and OpenAI's newest model, sort of waiting to release it to a broader public due to cybersecurity concerns. One person told me on that topic, horses left the barn. Some behind the scenes are arguing that if Chinese models are this good, there is no point in really holding back American versions for cybersecurity reasons. In the longer term, though, American AI bulls are warning that state and federal moves to regulate AI, as well as the growing data center backlash, could
Meta still pushing.
American labs. You have former White House AI czar David Sachs responding.
Semiconductors continue to ramp up. Semiconductors, look at that opening range breakout. Semiconductors dipped back to the opening range and then it took off to the races.
Got names like NVIDIA, chip names weaker today, although it is a more muted reaction if you think back to what we saw with DeepSeek. The threat from Chinese models seems to be a bit more priced in than it was last year when DeepSeek really did shake the market, Contessa.
All right, so Kate, we're going to see you a little bit later on the show with the CEO of Databricks to weigh in on all of this as well. It's interesting, if China wants to be the head of the race, is it also influencing in any way on social media and the like this backlash to data centers? I have seen some questions raised about whether China is in there and on TikTok, on Snapchat and the like, sort of trying to get Americans to turn against the building of data centers so that it can have the upper hand.
You've definitely seen it on social media. There's a question of whether this is a grassroots pure pushback. You do hear that on a local level, that AI in general, whether it's the data center backlash or the jobs disruption as a technology, is just not all that popular right now. And folks I talk to, even in the investment community, talk about that as a major headwind to these companies going public, and also being able to build out the compute that they want to do and have these huge ambitions. If it's just not a popular technology, that's a big issue for them. They're very much trying to shape the narrative and improve that PR issue, but work in progress.
All right, so Kate, we're going to see you just a bit later. Right now, let's get to a news alert on Apple. Mackenzie Sagalos has that for us. Mackenzie, what are you learning?
So, Contessa, Apple and the Justice Department are in early talks to settle the government's antitrust lawsuit against the iPhone maker, according to Bloomberg. Now, these discussions, according to that report, are active but still preliminary, and there's no guarantee of a deal. Apple reportedly making multiple settlement offers this year while no trial date has been set. The case dates back to 2024 when the Biden-era Justice Department accused Apple of using its control over the iPhone ecosystem to shut out competitors, including rival digital wallets, smartwatches, messaging services, cloud gaming apps, and these so-called super apps like a WeChat in China. Now, Apple lost its effort to dismiss the lawsuit last year, but has since addressed several of the government's complaints. Apple did not immediately respond to a request for comment, and those shares initially popped on the headline, but now trading lower than they were before, down about 1%, Contessa.
All right, Mackenzie, thank you for that. Let's get back to that AI trade and what comes next as the model battle is just heating up here. Ray Wang is the CEO of Constellation Research. Ray, great to see you today. I understand you're getting ready to fly high out there, so thanks for making some time for us. Here's my question. Does Moonshot come out and really make this about
China versus US and who's winning that race? Or does it become more of an issue about pricing for US companies?
The contest that's basically on two fronts. You're right on pricing. It's about open source models versus closed source models, but it's also choosing between Team China and Team US. At the end of the day, it's like, do you choose the Cisco router or do you choose the Huawei router? And it really depends on what side of that fence you are, because I'm not choosing the Huawei router if I'm in the US, and if I'm in China, I'm not choosing the Cisco router. And that's what we're going to end up with. But it is putting pressure on US AI companies, and that's really
what's Western Digital doing? Western Digital.
As you guys were speaking about earlier.
I don't know, but given all the speculation and the criticism and the skepticism around how much AI costs, how much is being invested in the AI race, doesn't cost matter? I mean, if you're an American company and you can get these kind of results at significantly cheaper prices, would you?
You would, but the problem is you have a national security issue if you're going to be using a Chinese model in the long run. And I think that's going to be one of the issues. But it does come to the point that we've been training, we've been spending billions in some
Western Digital, SOXL.
models, and the Chinese are basically
These are climbing very quickly.
and getting away with it. And it's not like we can enforce that. And so I think in the long run, there's going to have to be bigger differentiation in the models, but we also want more of the world to use our models.
Intel, high of the day. Intel.
China is setting up.
Intel, high of the day. Cruising higher, looks good.
Trying to get an adoption war going on, trying to get everyone on the Chinese open source models, and hopefully get companies like Microsoft to distribute those models for them.
Tesla.
Hardware constraints, compute
All right.
constraints. Does this suggest
Looking good. Tesla. Hammer at the low here. Hammer.
I don't think there's necessarily workaround. In general, I think this is going to be a blip, kind of like when we saw DeepSeek was going to take over everything that was going on here. But I think it is a warning shot to our AI companies, the American AI companies, that they need to get their cost structure in line, and we've got to be able to get to more efficiencies. But that's going to happen. We're going to see power costs come down. We're going to see token costs come down. We're going to see coding be more efficient. We were just at a conference.
Tesla still going. Let's see what I have on Tesla. Tesla's working nicely here. Tesla.
So I think this is going to happen over time. But right now, we're just reacting to the noise. But it's really not the signal.
Oh, yeah. Tesla got December calls. That's right. Tesla.
I just heard Eunice, you and my colleague, talking a little bit about how Xi Jinping is rallying the troops and bringing together a coalition of companies to sort of counter U.S. dominance in this space. What has to happen for the U.S. to remain?
What's COR1M at now? COR1M is at $5, 5.44. Let's take a look at COR1M. COR1M. Okay, it's off the best levels of the session. It hit 7. Got very close to 8 this morning. So you can see how OPEX could have the positive impact that we're looking for. Yes, it does have a negative impact in that a lot of these options are going to expire, but it's also bringing the correlation closer in proximity to each other, rather than the index being really low and call options being really high vol, and having that disparity or dispersion that pushes us down. Lately, it's been below 4. So you can see MACD is crossing on the daily over there on the right. So this is looking, momentum is starting to turn. That's a good sign. All right, so buying the dip today, just scale in a little bit at a time. But buying the dip in semis seems to be working pretty well. NVIDIA is at the highs of the session right now. Okay, NVIDIA pushing a bit higher. That's the high of the session. We've just pushed through it right there. Okay. Very nice. Broke that downtrend. Consolidated for a little bit. Broke it out again. Would be so cool to see a bullish engulfing. They got too much ground to cover, but it would be nice. So SOXL looking good though. SOXL, 3-time semi bull. Can we get above yesterday's high and start heading back toward the 50-day? That's the gamble. NIMO is at -3, so it's pretty flat at the moment. We're at standard deviation 1, VWAP, SPY, standard deviation 1. Now that's anchored VWAP, goes back to April of last year on the tariff scare. I guess if I were to do the April low this year, would be well above it. I'll leave it the way it is right now. Okay, so the market's recovered nicely. NVIDIA still pushing higher. AMD. Okay, these are pushing higher. AMD. Okay, potential for a head and shoulders top. Thank you. I did buy on the dip VIX. I did buy some September 2025 call spreads for the same reason we were buying in them 2 weeks ago, anticipating this COR1M would resolve. I thought it would do it before OPEX, but we got it today, so we took profits at the high of the day. VIX hit the high of the day right at the open and faded. Okay, so we sold into this right here. For those of you in the VIX calls, hopefully you followed suit. I bought back on the dip about an hour ago, I guess, or more, about an hour and a half ago, I guess, around 11 o'clock or so, 12 o'clock. So I bought the 20-25 call spread just in case we get some kind of crazy action next week. We weren't anticipating. We're actually anticipating it, just, you know what I mean.
Welcome back to the exchange. Stocks ending the week on a negative note as the broad market rally takes a backseat to what has become sort of an AI reckoning. Chips sell off, and the SOX semis ETF is entering now a bear market. Other areas of the market, though, are picking up the slack, including healthcare and financials. Is this a trend that's continuing? Is it time to just rebalance the portfolio? Joining me now, Lizanne Saunders, Chief Investment Strategist at the Schwab Center for Financial Research. Lizanne, great to see you today.
You too. Thanks for having me.
Tell me your big thesis when you're watching the rise of China AI, the falling of these semis. How are you thinking about where the money gets to work the hardest?
Well, we're in a rapid fire rotation kind of market, and I think that's a function of the half-life of regime changes has basically crashed. And, there's so much short-term attention span money in the market between systematics and the long-short hedge fund community and the commodity trading advisors and the retail trader that these moves happen quite rapidly. And I think the latest shift is one or continued away from some of the prior leaders like the semis. Prior to that, it was movement away from the hyperscalers. And for whatever reason, there's been this push into more classically defensive areas like healthcare, some of the dividend areas, and then maybe because of the strength of earnings out of the blocks, you've given that lift to financials. But I think these rotations are likely to persist.
Yeah, I mean, you're pointing out here that over the past year, only 12% of S&P stocks have outperformed the index itself. But in the last month, 65% have. Right. What does that indicate to you?
Yeah, it's another way of looking at breadth. We often look at breadth with percentage of whether it's a sector or an index overall trading at above 50-day moving average or 200-day moving average. I also like to look at that participation. It goes back to, and it's unfortunate to use sort of a wartime analogy, but when there's only a few generals on the front line, soldiers have fallen back, that's not a very strong front. Even if some of the generals retreat, but you've got more of the soldiers on the front line, that's arguably more of a front. It does tell you, though, that at the index level, you can have a lot of calm because of these rotations churn under the surface. But there is a lot of rapid fire pedaling under the surface. To me, it's an environment where in the tease to this, you talked about rebalancing. I think that is such an important discipline right now for investors that might want to consider portfolio-based rebalancing or volatility-based rebalancing as opposed to doing it based on the calendar. Take advantage of these rotations by maybe upping the frequency where you're trimming from some of the winners and adding to maybe where there's been weakness.
Okay, can you give me some examples? Like which sectors are you looking at that are opportunities right now?
Well, I think healthcare continues to show interesting opportunities. Industrials is sort of peripheral way to play the AI boom. Materials is another way to kind of play the increasing commodity cycle. That said, I think factor-based investing based on characteristics, is a better strategy, or at least should be of an overlay to more monolithic sector-based investing. And I think factors like high interest coverage, given sticky rates on the high side, strong balance sheet, ample cash flow, profitability, positive earnings revisions, stability and profit margins. I think that's the better way to approach picking ideas in this environment, as opposed to the more monolithic cohorts like Mag 7 or even sectors.
Lizanne Saunders, thanks for the advice. Appreciate your time today.
My pleasure.
All right, so we're looking at new numbers showing more Americans changing their spending habits to make ends meet. And Steve Leisman has results from CNBC's latest All-America Economic Survey. Steve, good to have you here.
Yes, thanks very much. Despite, a decline in gas prices, ordinary Americans have kept watching their spending at even greater percentages and say they're cutting back in response to high prices. The CNBC All-America Economic Survey of 1,000 voters nationwide finding that 47% are spending less, and on essentials like groceries, medical care, that's up 6 points from just in April. Those spending less on out-of-home entertainment, 66%, up 5 points. The margin of error in this poll is 3.1%. Those using the credit card more because of high prices, up 6 points to 37. Even traveling less, it's still a good number of people who say they're going to travel, but that's up 5 points. I think Contessa knows a thing or two about that. We'll talk about that in a second. But first, I want to show you who is spending less. Women, 18 to 49, 60%. Those with lowest income Americans, 60%. There's a partisan thing on this. Look at the Democrats versus Republicans. Republicans less likely to say they're going to spend less. But what could be driving spending? Look at the bottom right tile we have right there. Only 35% of those Americans earning $100,000 more are responding to higher prices by spending less. Now, which party best addresses America's pressing concerns? Well, when it comes to the top five, Democrats have 4 of the 5, plus 7 on the issue of cost of food and groceries. That's the number one issue. Plus 3 on protecting democracy. Huge lead for Republicans on the issue of immigration and border security. Lead for Democrats on housing, and a big lead for them on the cost of health care. 5 more issues we asked about. Republicans more in front on there. Iran, plus 2. Cost of energy, taxes, plus 9. Jobs and unemployment still gets a plus 4. On a separate issue, we asked if Americans support the Trump administration's decision to take stakes in private companies. 19% say it's appropriate, but 49%, well, they don't like it very much. 32% say they have no opinion. That's a big number. We don't often poll with issues like this. Obviously, we get into these down and dirty business issues. Americans aren't paying total attention, but you can read all of these results online at CNBC.com. There's 3 stories there and the full survey.
All right, so I do want to talk about travel, but first I did want to get your macro sense. The street is factoring in a booming economy. And you've got these people saying, we're cutting back. We're not just cutting back on discretionary. We're cutting back on essentials. How do you coincide that?
I really think, to say K-shaped is cliche at this point, maybe with a K, though, because it's real. I really do think we have these 2 worlds. What I like about this poll, Contessa, is I think this poll brings in a different world from the one that you and
Microsoft still climbing off the low. Microsoft climbing off the low. Opening range high is still overhead. A lot of stocks are doing the same thing. We got a doji on Microsoft. Look forward to get above the 50-day next week would be nice.
People have had 5 years of higher prices. They've had another year of exacerbated higher prices where they thought things were going to get better because of the tariffs and because of the Middle East conflict. And they're like, okay, it's time for us to make a change. What I thought was so interesting about that is I was just asking those questions in this survey because I was like, let's just do it one more time. I think we know we're out of this. But no, they were up 5 and 6 points on each one of those things. So they may not be done adjusting. And again, you look at Americans with $30,000, $50,000 of income, they're having a different experience from those who are watching our show here. Of course, we hope low-income Americans are watching the show because we think it's a better way to have a higher income.
The interesting thing is for investors, that lower segment of the economic ladder
Right.
does represent an investment opportunity, whether it's Dollar Tree and Dollar General.
Right.
When was having a conversation with Priceline, and they own the fact that they are the place to go for those who are budget minded. And I said, what's the opportunity here if people are feeling pinched? They said, yeah, we think we can make inroads with those making 100,000 plus to be the go-to travel destination. And by the way, across the board, whether it's
That's Micron. Micron higher. Micron did make new highs, almost back to 1,000. Only got 100 points to 100 points to go. But nice bullish engulfing candle over here on the right. Let me just adjust this so it's straight. Okay, that looks better. That looks better.
Americans clearly are putting aside their money, and they don't care how much gas prices are or whatever. They are going on a vacation. It may not be a vacation to Europe, but they're going on vacation.
We're going to have talked to people in some resort areas that say their business is off. Either
Was it
flat or
124?
down a little bit because of the high gas prices. People see that, maybe they cut back a little bit.
Hard to believe it's Friday already. This week flew by.
They're paid by somebody someplace, and part of what has to happen is figure out where. Our national retail sales numbers are pretty good, but some of that is obviously coming out of somewhere. If you're paying $20 more at the gas station, it's $20 less for something.
Because like Wynn Resorts will say, we would rather have lower occupancy numbers at higher rates than dilute our population with lower rates. That you can still make the same amount of money if you don't have the same mass crowd of people in the rooms.
Interesting. Well, I think the clear thing, business is on their toes.
Yesterday we had a pretty good close on the equal weight index. And here we are, just barely a blip lower. Inside day, if you just look at the bulk of the trading today, we did hit a new high, pulled back in this morning. That's really wild when you think about the S&P 500. Look at the difference between the S&P 500 and the equal weight. All right, here's the S&P. It was down below the 50-day, recovering. Okay, so too early to figure out what this means, but RSP is barely moved. Equal weight barely moved. So that's stupendous. That is awesome. Okay, here's another version of the S&P equal weight. This is the SPX EW. Number of stocks trading by the 20-day. Okay. Technically, we're in the upper half. We're in the upper 50%. We're trying to turn back up. Probably by next week, we turn back up. So this is looking pretty good. So if I left you kind of nervous yesterday, because I kept talking about taking profits into strength, take profits into strength over and over and over ad nauseum, if I scared you a little bit, that wasn't my intent. My intent was to force you maybe to reduce your exposure at a minimum. Take a look at your positions. Make sure you didn't have today's options expiration date. Maybe you moved something out to August. Maybe you took some profits off and reduced your exposure. That was the whole intent. That if this does turn into more than what happened today, you're prepared. Okay, so anyway, I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's 1:27 p.m. We're coming into the last couple hours of the July OPEX. All right. So Micron, nice bullish engulfing candle on Micron. Today's pullback is a great example of why I like buying pullbacks and not chasing. Every once in a while we'll chase something. We'll buy something at the high of the day, but I'll definitely scale in. Look at Micron. Looks good. Now, I'm anticipating that we do get rejected Monday or Tuesday. So if we do follow through into Monday, I'll be very quick to take profits. I don't have Micron personally, but I have SOXL. Okay. So SOXL. SOXL. I don't have DRAM either. I have XOXL. So 150 might be a rejection point, the 9 EMA, the 21 day, the 5 EMA, 50 day. Got a lot of spaghetti overhead.
So it looks like we're turning a corner here. Netflix is hitting its lowest level in nearly 2 years after
Meta.
slower revenue growth for the third
Meta turning back up again.
right now. Investors are really worried about this slight decline in operating margin and the softer free cash flow. They have real questions about where the growth is going to come from. Shares having their worst day since April, now down 50% from last summer's high. Meantime, today's a big day for options expiration. Oliver Rennick is standing by at the CBOE with a closer look. Hello, Oliver.
Hey, Contessa, that's right. Today's monthly options expiry makes whatever happens today arguably even more important, as one major reason why the S&P 500 has held a 2-month-long range is because of the consistent hedging activity by market makers that causes dip buying in a very big way, including today. The most commonly traded level on SPY the past 3 months was 747. That's almost exactly where it's trading right now. If today's expiry causes traders to roll into new contracts below that strike, it could very reasonably shift the trading range down into the next month. But bulls, I think, have one other thing going for them, and that is a firming in the bond market that's also supported by bullish options flows into TLT, where twice as many calls are being bought than puts. If treasuries also keep acting as a hedge, that is one big factor traders may not have to.
Yeah, yields pulling back is a big thing.
All right, Oliver, thank you for joining us from Chicago. Let's get to Mackenzie Sigalos now for a CNBC News update. Mackenzie. Contessa, the late Senator Lindsey Graham's funeral will be held in Washington, D.C. next Tuesday. According to a spokesperson, 2 more services will follow in South Carolina on Wednesday. Several foreign leaders, including Israeli Prime Minister Benjamin Netanyahu, are expected to attend the D.C. service. More than 5,000 cases of cyclosporiasis have now been reported in Michigan. That's up nearly 700 cases from yesterday. Federal health officials have identified lettuce from Mexico served at a Taco Bell location in 5 different states as a source of the widespread outbreak. And a 7.3 magnitude earthquake struck near the coast of southern Mexico today, triggering a tsunami threat in the region. The powerful quake was felt in nearby Guatemala and El Salvador. Authorities say no immediate damage was reported. Contessa?
Mackenzie Sigalos, thank you very much. You know, that parasitic thing is it's just crazy, top of mind. We had coworkers here who were skipping the free salad at lunch yesterday because of worries about parasites. It's not good for Taco Bell. Parent yum, right?
I'm not going back anytime soon.
Okay. Coming up, OpenAI and Anthropic expected to go public in the not-too-distant future. Another name in the pipeline is data analytics software maker.
Okay, Snowflake turning the corner. Do I want to get back in? No, I told you I wanted to get back in Snowflake when we get back above the 50-day, right? No. That's the wrong one. That's Broadcom. Snowflake, nice reversal. Still got a lot of work to do for Broadcom, but a nice bounce nonetheless. So I decided to go with SOXL for the time being. Microsoft looks okay. Microsoft. Nice reversal on Microsoft. Would love to see Microsoft above the 50-day next week. So that's no hurry. No hurry. Nice recovery. The indice is making a nice recovery. So that, at least giving us a reprieve. We're back above the 50-day. This could have got really ugly. Didn't happen. We lucked out. Yields dropping a bit. That's helping out. U.S. 10-year bonds moving higher. Let's see, U.S. 10-year. Okay, so 10-year bouncing, but it did pull back. So maybe next week we can have the 10-year back below the 50-day. TLT, long bond, the 20s and the 30s. We got twice as many calls being bought as puts. That's a good sign. We got a lot of puts selling. A lot of puts selling in the tech group down below. So that's also supportive. We've got purple down below and And our GEX screen here, let's see. Okay, mostly purple, not a lot of red, right? Let me zoom out a little bit here. Zoom out. A little bit of red right below. Okay, so the way to read this, resistance overhead, the purple is resistance, and support down below. In between, a lot of volatility, which you would expect, right? You'd expect the volatility after what we had to deal with overnight. I kept looking at futures last night. I just had to turn it off. I said, you know what? Enough. Take a break. Have a beer. Market's going to be fine. And as luck would have it, we had a nice buy this morning. So if you acted on it, good. Those were quick trades for me. So if you missed trades this morning, that's the way it goes sometimes. They were very fast trades. Half an hour in one case, 15 minutes in another. So, yeah, big rip off the low this morning. You can see right there. Big rip. Hedge flows turned up quickly. Okay, hedge flows are trending. Note that the hedge flows are trending, starting to taper off a little bit right now as we run into resistance. Okay, we got up to 7,500. That's pretty cool. All right, I need to take a couple minute break. I'll be right back.
AI labs. Let's get into it in today's Tech Check. Ali Ghodsi is the CEO of Databricks, which is currently fundraising at a $188 billion valuation. And Kate Rooney is probably worth somewhat in the neighborhood of $188 billion as well. Kate, I toss it over to you.
Just below that. Good does it. Well, Ali, it's so good to see you. Perfect day to have you and get your take on all of this. Thanks so much for being here.
My pleasure.
Great to see you. So we do want to start with the funding round, though. This is big news. You guys are firmly one of the most valuable companies in Silicon Valley. $188 billion valuation now. What does it say about where we are, maybe in the AI race? You guys are a little bit different than the frontier labs. And where are you going to be spending that new cash?
Yeah, so, we've been seeing acceleration of revenue in every region, Europe, Asia, Americas, and every product. So, this has been going on for 6 or 7 quarters, accelerating revenue. So I think that's why the valuation looks the way it does. The question is, why is it accelerating? And, it's across the board. And it's really what's happening is that it's basically, you can think of it like this. Every company on the planet doubled their headcount. They just don't know it yet because they hired all these agents. And the agents are doing stuff. It's not always perfect, but they're starting to use more services. They're starting using more tools. And one of those main tools they use is Databricks behind the scenes. So the agents are asking more questions from Databricks. We're consumption-based revenue, so then our consumption accelerates thanks to that. So that's kind of big picture what's happening, but that's not why we did the fundraise. The reason we did the fundraise is that this summer we had our big conference, Data and AI Summit. We had 30,000 people that came to it live at Moscone Center. And there we announced something we didn't think was going to be a big deal. We told them that, hey, in our Unity AI Gateway product that we launched, you can control the spend of AI. You can use open source models. You can use proprietary models. We actually give you capacity for OpenAI, Anthropic, Gemini, Grok, and open source models. And this exploded. People want to use this gateway to set budgets, and they want to use open source. And so we're just...
You're on the ground floor as we're talking about open source. Sorry to interrupt you, but it's such a big headline today with Kimi. I would love to get your take on what you're seeing. You're somebody who's offering access to these Chinese models in some cases. What do you make of the capabilities of Kimi? And how much of a threat is that to the frontier labs as we now look at almost trillion-dollar valuations?
Well, I think the frontier labs are amazing, and they're going to continue doing great. And but what happened basically is that everybody wants to do cost controls, and they want to control their budgets. Because as one executive of a Fortune 500 told me, his costs of AI are increasing exponentially. His revenue is not increasing exponentially. So if this continues, he will go bankrupt. So he has to do something. So then open source is how they want to, for the really difficult questions, let's ask the frontier American models and pay a lot for it. But for most of these mundane tasks that you're doing, like, hey, take this field out of Salesforce and, summarize it and enter it into Workday, use a cheap open source model. So that's what they want to do. But we are hosting these open source models like Kimi. We actually offer it to our customers, and we're running out of GPUs everywhere. We ran out of GPUs, almost in Asia. There's like every country wants these GPUs: Japan, Korea, United States, India. So we just needed to go get a lot of these, and that requires a lot of funding. So that's actually what triggered this fundraise for us, because we were inundated with these requests. We need to get GPUs. GPUs are costly to get. People are expecting that you pay for these. So that's really what triggered the fundraise in the first place. But then, of course, Kimi 3 being released, I think, is a game changer. It's now you have
a game changer. What do you mean by game changer? And what is the impact? I wonder if it's overblown. It seems like there's this knee-jerk reaction today responding to Kimi. Are people just late to the game, or what do you make of the reaction today in particular?
It's like, with everything else. It's been kind of happening slowly, but then Kimi 3 really is, a significant jump in quality of an AI model. So, it's really like the only models that are now above it, I would say, is Fable from Anthropic and maybe 5.6 from OpenAI, but those are expensive models. So now you have a quite cheap model that's on par, and it's better than any other models except maybe those two. Or to put it in perspective, you can think of it, and this is roughly right, is that the size of the model is maybe its intelligence. Before this, we had 1 trillion parameter intelligence model. Now this is like almost 3 trillion parameters at 2.8. So now that's a really big model that's really, really intelligent. And it's fully free. So any vendor can start hosting it. So we are hosting it, anyone can host it. So it's just a game changer in terms of people who want to have really good intelligence and they want the cost to be low. I think that Frontier Labs are still ahead, and they're doing great, and they're going to continue doing great. But it's just more option, it's more competition, and it also means more margin compression. Like, how much can you make on these AI models? Well, that margin compresses now because there's now more offerings that are going to be very price competitive. So I do think it's a game changer. And as I said, the big picture is all the companies we work with are freaking out about their AI costs. So that's the big picture. So like combined all of this together, I think it's a really impactful change.
Quick wrap while we still have you, Ali. Any update on your own IPO? We've got a lot of other companies in the pipeline. We had SpaceX. When are you thinking about going public?
Well, we will go public, but right now we're just heads down trying to just keep up with the demands, to be honest. Like right now, it's like this GPU scramble, making sure that we can have all these open source models. And then, some of our own products or other products that are also, taking off, really fast. Our Genie product lets you basically ask any analytical question. Like, anything numerical you want to know about your business, it's really, really good at that. So, a product like that is being used by product group to answer, any questions that they have about their products. Like, so we're just keeping up with the demand. We will go public when the time is right, but right now we're just heads down trying to keep up.
Ali, it's great to see you. Thank you so much for walking through that. And Contessa, we'll send it back over to you.
All right, Kate, thank you. Ali, thank you for the insight. Appreciate that. All right, coming up on The Exchange, CNBC investigates how criminals are using their phones at major retailers to exploit technology that really is supposed to keep your data secure. Tap, pay, and steal, coming up.
Very interesting. I'll have to sit around and watch what they have to say about that. Tap, pay, and steal, huh?
82.29 barrel WTI up 4.2%, barrel Brent 87.82, Brent crude up by about 4.3%. Among the economic reports out this morning, housing starts in the U.S. surged in June after a sharp drop a month earlier, driven by a rebound in apartment construction. Among some of the home building names, we do have shares of Toll Brothers today. They are trading lower. We've got Toll now down by just about 2.4%. Lennar lower by 2.8%. Pulte Home trading down by 2.3%. Round 2 of the Open Championship underway at the Royal Brookdale Golf Club in Southport, England. Last check, we do have Lucas Herbert of Australia, 8 under par, sitting atop the leaderboard. I'm Charlie Pellet. That's the Bloomberg Business Flash. Now back to Smoky, Washington. Once again, Joe Matthew with the Daily Lives.
Smoky indeed, Charlie Pellet, though. Of course, you had to experience that in New York yesterday. Millions across the country, frankly, are experiencing it due to those wildfires in Canada and northern Minnesota as well. It is truly quite a moment that we are in. Speaking of moments that we are in, remember the DeepSeek moment from last year? And this concern that China was going to make advances on cheaper artificial intelligence and the things that power it and potentially disrupt the U.S. companies involved in this space. Well, now apparently we're in a Kimmy moment, or perhaps a Moonshot moment, as we have fresh reporting today, Joe, on a surprise breakthrough from Moonshot, which is a Chinese AI startup, and its new model, the Kimmy K3, which the company says rivals the strongest offerings from OpenAI and Anthropic.
Well, it could be bad with something called Kitty. It sounds so not threatening, but indeed, this massive new AI model has just gone to the top of the heap here, beating Anthropic's Fable 5, OpenAI's GPT 5.6 Sol, and front-end coding tests run by AI evaluator Arena. This has upset the space once again. We call it a moonshot. It's maybe another Sputnik moment for China. And that's why we want to spend some time with Shep, who's with us right now in our studio. Mike Shepard, Senior Editor, Technology and Strategic Industries. This all comes down to the U.S.-China AI race. And if you ask Anthropic, they say China's taken technology from us to lead the way. But of course, that doesn't prevent them from winning. How important is this development?
Yeah, this really is another, as you said, moonshot moment, DeepSeek moment, Sputnik moment. You can call it what that's a big deal, but it really is another step level change in China's effort to not only keep up with the U.S., but really assert its own global dominance in this space. And yesterday we did see Xi Jinping, the president of China, lay out his vision and his country's vision for trying to assert that leadership worldwide.
Restaurants, grocery stores, taxis,
accessible approach for artificial intelligence. One would be available more widely to the global south, which has long been felt left behind by technological advances in the past, and AI is no exception there. And this development really just punctuated that argument for Xi.
So is this evidence that export controls that are meant in part to hold China back in strategic technology like artificial intelligence aren't working as effectively as the administration?
Well, it's a great question, Kelly, because the U.S. really has cracked down on making the cutting-edge chips needed to power the training and actual operation of advanced frontier models as they're known. And to some extent, yeah, that has worked. We haven't seen nearly as many NVIDIA chips get to China. Some have managed to sneak through smuggling and other matters, but we really don't see, vast data centers powered by NVIDIA chips in China. But one of the issues that the top labs in Silicon Valley have raised is that, look, in China, they're essentially taking our models, running them improperly at a mass scale through a process known as distillation, and then using the results to build rival chatbots that undercut us on cost, and that means that all that we have spent here in the U.S. To build those data centers here is actually backing China's developments.
Moonshot says it's going to release Kenny as an open weight model before the end of this month. How does that separate it from these sort of frontier models that we talk about so often?
Well, this really gets to the different approaches that China and the U.S. have kind of picked so far. The labs here in the U.S. have really pushed what's called a closed weight model. In other words, they keep the program, the software, the product on their servers, or on servers that they lease or rent. And you pay to access it through an API or through a website. And sort of like if you sign up for Claude, that's kind of what you're doing. With something like DeepSeek's R1 or with the newer product from Moonshot, K3, you actually be able to download the model on your own server. Now, what that would mean, Joe, in this case, though, if you wanted to get K3, you and I would have to put together probably $500,000 to $1 million to buy a server.
Is that right?
To run it. So
do you need Blackwell to run this?
You would need some really powerful server space. If not Blackwell, then maybe a whole lot of Huawei chips, for instance, maybe many more stacked up. But the idea is that you would then be able to download and run it. Now, some of the other weight models have been distilled or broken down for smaller, very specific purposes don't require nearly as much server space. But just in this particular instance, you would get a lot of volume of computing power used.
Well, I know I asked you about export controls on chips, but we also saw the slapping on of export controls for some of these models over concern that they could be jailbroken. Do we have a sense as to whether Kimi or frankly any AI model coming out of China has those kind of capabilities or have been able to copy the cyber capabilities of US models?
And this is one of the most urgent questions surrounding this. And this is why Anthropic really reined in the distribution of Mythos back in April, and why the government really tapped the brakes in June on wider releases of fabled Mythos file. That has since, those restrictions have since been pulled back. But you also see actually in China discussions of the same kinds of restrictions on models developed there. They are also worried about security and safety, and this is something that came up in Xi Jinping's speech yesterday, that they want to make sure that there are some guardrails in place. Of course, just like here in the U.S., what those guardrails look like, how they take shape, which companies they target, and what kinds of capabilities are they specifically seeking to rein in, that also remains unclear too. We're going to have to see how that develops. Xi Jinping also called for more cooperation on AI. And now, with the president's speech last night, not exactly the U.S. president's speech last night, that was not exactly an olive branch to China. And it really risked precluding any kind of cooperation in this area.
All right, our senior editor for technology and strategic industries, Michael Shepard, thank you so much, as always, for joining us. And of course, these concerns around potentially cheaper Chinese AI undercutting U.S. companies and U.S. capex in this space is what led chip stocks to be near a bear market at one point in the session. We rebounded a bit, though the stock is still down just about a tenth of 1%. Where we're seeing larger moves today, though, is in the oil spaces. WTI and Brent are both up in the ballpark of 4.5% on what is escalating strikes between the U.S. and Iran in the Middle East. And that's where we go next as we turn to Rebecca Babin, a senior equity trader and managing director at CIBC Private Wealth. Rebecca, welcome back to Bloomberg TV and radio. Right now, we're around $88 on Brent, 82 on WTI. If we continue to see this escalation and widening of targets that are being hit, how high could these numbers go?
Thanks, Katie. So I think when we look at the escalation, we need to be really careful of how it plays out. I think the way we go back to, I would say, over $100 a barrel in crude is if the Houthis engage in this conflict, which they have not done so far, and start to target flows that are being rerouted from the Strait of Hormuz into the Red Sea through the port of Yanbu. That would be a very significant escalation and would definitely cause crude to re-rate higher, I think closer to that $95 to $100 a barrel. The second thing that we could see that would spark a rally back to those prices would be if Iran starts to target regional energy infrastructure, including refineries, which they had hit at the beginning of the conflict, or other kind of production facilities. LNG facilities have also been targeted. So I think those are the two kind of flags that the market is looking for, or two signals to say, okay, we need to reprice higher than this high 80s into the kind of high 90s, low 100s. At this point, I think, unless we see that, I think we stay within this kind of 80 to 90 range. And the market has become a little bit conditioned to the fact that these negotiations and escalations can be ebbs and flows and transits and can be dialed back very quickly. And then when they do dial back, the market immediately goes from pricing scarcity, which we're starting to see now, to pricing surplus, which is what we did about 2 weeks ago when we traded back down to around 70.
Everyone's talking about crack spreads at home like they're energy analysts these days, Rebecca, and I'm curious your thoughts on gasoline. We're at $3.98 today. I suspect we wake up to $4 a gallon next week. Is that going to be the price for the summer? And when you look at diesel, do we hold over $5?
Yeah, so you're so right. The crack spreads are the kind of hot topic these days. And listen, there's a reason for it. We have lost about 5% of our refinery utilization through the course of this conflict, as well as in Russia, as well as China reducing their refining utilization. So we have in products here a situation where supply is reduced, demand hasn't come off the way you would have expected with the kind of prices we've seen, and we don't have the buffers that we have in crude in place for products. So yes, I do think at least over the course of the next month, when summer driving season is still in full effect, prices will be around $4 gasoline and $5 diesel. I don't see that reverting quickly, even if we start to see some flows come through Hormuz, just because the Russia constraints have really put another kind of tightening screw into the product market. And the U.S. refiners are running flat out, 96% right now. They are doing everything they can to supply the market and take advantage of these crack spreads. We just don't have a lot of spare slack in the refining system, so I don't see those backing off at least till late fall, and if flows start to resume through Hormuz.
Well, I'm glad you mentioned Russia, Rebecca, because obviously they've seen a number of refineries hit by Ukrainian drones. They banned exporting diesel as a result, and now we have a live conversation on Capitol Hill of a reinvigorated push to pass a Russia sanctions package due to the death of the architect of that, late Senator Lindsey Graham, which would allow for the president to tariff up to 100% countries that purchase Russian energy products. If that goes through and you therefore see less of a desire to buy Russian crude and products on the market, what could the impact of that be?
That's a great question. And the way I frame this is Russia, even under the most stringent sanctions package, was able to get crude out to the market through their shadow fleet. So it does sound extreme when we read the headline, and it would absolutely tighten the market. We've had some Russian sanction waivers in place throughout this conflict. They've since been unwound. This would be more aggressive. It would tighten the market, but I don't think it would completely take Russian exports to zero. I think they would continue to find ways to get barrels in the market, and there are buyers that will buy discounted crude, China and India in particular. One reason China has dialed back its imports of crude has been the fact that there aren't as many discounted barrels of Russian crude available. They used to get these discounts under this when they were sanctioned of the kind of dark barrels, and they haven't been able to access that. So it would absolutely tighten the market. I would say probably add another $5 a premium into the price, but it wouldn't necessarily mean we see a full
Low tick alert line is 800.
Has become fairly resilient under sanctions regimes, and it all comes down to enforcement, and you have to be willing to spend the money to enforce those sanctions.
It's great to have you back on the program, Rebecca. The Senior Equity Trader, Managing Director, CIBC Private Wealth, Rebecca Babin. Thank you so much for the insights. And when you look at the stocks involved here, Kaylee, think back to what Rebecca said about the refiners. Marathon and Valero both hitting all-time highs today, even as the integrated oils pull back. This could be a real trend for them for months going forward.
Yeah, it certainly could. And of course, we'll have a clearer look on what the ultimate close of the trade today looks like in the late edition of Balance of Power from a smoky Washington here on.
In a world with rising uncertainty, staying invested with confidence can be hard. Defined outcome ETFs deliver an innovative new approach, seeking downside protection with upside opportunity. The world's first and largest suite of defined outcome ETFs joins the relentless expertise and rigor of Goldman Sachs. Defined outcomes, relentless innovation. Innovator ETFs from Goldman Sachs Asset Management.
An ETF for your cash? That's genius. ProShares Genius Money Market ETF, IQMM, the largest money market ETF in the world. Learn more at ProShares.com/IQMM.
Fortune Investments was built by investors for investors and has helped thousands build wealth through real estate. Our flagship income plus fund has outperformed its peers at average over the last 1, 3, and 5 years, with positive returns of 95% a month since inception. And for those seeking passive income, the fund currently has an after-tax yield of more than 6%, so you keep more of what you earn. Visit IncomePlusFund.com. Learn how Fortune can enhance Relentless innovation has changed the way we invest. Innovator ETFs from Goldman Sachs Asset Management brings you SFLR, seeking to protect from deep market declines while aiming to provide unlimited upside potential. Defined outcomes, relentless innovation. Are you investing in municipal bonds that will fund roads and bridges? Think of Assured Guarantee's bond insurance as your guardrail. Assured Guarantee, a stronger bond.
Behind every great golf shot is great equipment powered by advances in technology and smarter manufacturing. AI-assisted design expands the sweet spot on club faces. X-ray vision helps ensure consistency in every golf ball. And AT&T Business helps manufacturers connect operations across the factory floor and supply chain, giving teams the visibility to make faster, smarter decisions, so players can prepare for the most important shot. The next one.
We got a big week coming up in politics.
The race season's underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg this weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Trading day is about to start.
You're already looking for that edge.
European Trading brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Alex.
And I'm Tom Higgins. This is your opening trade.
Only back. Bringing you the latest business news wherever and whenever it happens. I'm Scarlett Food, reporting from America's biggest military shipyard. This is Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Nasser and Tim Stenbeck, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Carol Nasser, along with Bloomberg News credit reporter Emily Garfeo. Emily in for Tim, who is off on this Friday. And you are joining us on a day where we see chip stocks poised for a bear market, the AI trade continuing to unwind. I'm obsessed with, yes, there's news locally, right? And companies that we watch here in the U.S., but there's also some news coming out of China, and I really want to get to the bottom of it.
It definitely feels like the market was waiting for a DeepSeek moment 2.0. And are we in it right now? I'm going to ask multiple guests this hour, Carol.
It's definitely a theme for us on this Friday as we get ready to wrap up the trading week. So more in just a moment. Also, from the C-suite, as we like to do on a Friday, Samantha Greenberg, CFO over at AlphaSense, she's going to join us with her Amina Tretman, who writes the CFO briefing newsletter that comes out every weekend. We're going to talk agentic momentum and also being a platform that makes AI useful in finance. We know a little bit about that.
And we're wrapping up the World Cup. It's not over yet, but as it wraps up this weekend, it's been a ratings boom here for Telemundo. We'll find out by how much from Miguel Lorenzo, Senior VP of Sports Content at NBC Universal, Telemundo Enterprises. Maybe we'll get his game prediction as well.
Our Sebastian Escobar saying that so many people, he caught something read from AP that everybody is tuning in, even if you don't speak Spanish, because you just love the coverage that Telemundo has been doing. All right, we're going to get to it. There's a lot coming your way over the next 60 minutes here on the Business Week. Let's let you know. Go to check in the trade. Here's Charlie.
What's going on? Not too long ago. The worries though right now.
Stand just under 2 hours to go ahead of the close. Right now on the S&P 500 index, looking at a drop there of just about 0.8%. Now industrials, they are
S&P back back to VWAP. S&P back to VWAP. Wait for prices to get back above the moving averages and for those to turn back up. Hanging on to the 50-day.
by about 0.8%. Crude, major story there. We've got West Texas ending at 82.37 a barrel, up by 4.3%. Traders certainly keeping an eye on developments in the Middle East. Brent crude, 87.93, up by 4.4%. All of this with gasoline heading back to $4 a gallon. Semiconductor shares, as I mentioned, trading lower. Again, fears are feeding on the stocks. Right now, that index is down by 0.7%. Among some of those semiconductor names, right now we've got Qualcomm down 0.2%. Applied Materials down 4.5%. Intel lower by 0.6%. Interestingly, though, Micron up by 3.4%. Round 2 of the Open Championship underway at the Royal Brookdale Golf Club in Southport, England. Now we have Lucas Herbert leading on the topping the leaderboard at 8 under par. Herbert, by the way, from Australia. I'm Charlie Pellet at Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along here with Emily Grafeno in for Tim. All right, so let's get to it. There's a lot of stuff going on. As I said, I'm obsessed with some of the news out of China. A surprise breakthrough from Chinese AI startup Moonshot rippling through global markets. We're seeing that play out. It started overnight in Asia. Semiconductor stocks, Charlie just talked about it, sharply lower. We're kind of thinking, is this another deep seek moment? President Xi Jinping also overnight his first appearance at China's premier AI summit, lending his support to the country's push to become a global leader in AI. And you've also got Alphabet tanking. There's another story kind of at play here.
Right, shares of Alphabet tanking as Google is months behind on schedule on delivering Gemini 3.5 Pro, its most powerful flagship AI model. It's trying to improve its capabilities, particularly in codings. And then the credit markets are also reacting to this AI trade. We got to talk about credit, Carol.
The bonds sold by hyperscalers to fuel their AI ambitions have become a drag on investor portfolios, with falling prices and wider spreads to negative total returns. That is certainly your role. I feel like it's a lot, but it is always when it comes to what's going on with AI. We wanted to check in once again with Mandeep Singh. He's Bloomberg Intelligence Global Head of Technology Research. Mandeep, I know we have the same conversation with you over and over again, but there's stuff that keeps coming at us. SK Hynix ADRs too are bouncing around. The Kospi route feels like nervousness continues to grow increasingly out of this AI trade. Is it fundamentally based? Is it valuation based? Is it just a little bit of fear of people being on the wrong side of the trade? You watch the fundamentals. You always remind us what matters. So how do you see it?
Yeah, I would agree with your assessment that it is fundamentals that are still holding up, and it's the valuations and the nervousness around positioning is what is driving this sort of volatility. And look, we know AI being expensive has been raised as a concern by a lot of companies lately. So it doesn't surprise me that a model like QB3, which is an open rate model, much cheaper to use, is gaining traction. And there are companies out there that have explored using this model, notably Cursor, which is a company that XAI and SpaceX bought. They use QB3 under the covers. And so from that perspective, open source will have some sort of adoption, but fundamentally nothing has changed. Everyone wants to use LLMs. It's just that they were expensive. That's why we had concerns around memory pricing. And, now we're talking about open source adoption, but I don't think fundamentally anything has changed. It's just a function of how folks were positioned when it comes to the valuations, and certain sectors have gone parabolic within the tech space, and we're seeing a drawdown.
Benji, tell us about this new Chinese AI model, because as Carol and I were discussing just a few minutes ago, it wasn't too long ago in markets that we had that deep seek moment, that scare when a new model from a different country comes out and spooks the market. Is this just a deep seek 2.0? Is there something different about Moonshot? And when you look at the market right now, is it really reflecting the same type of fear that we saw when the deep seek model was released a little over a year ago?
Yeah, look at how far we have come since that deep seek moment. We had a company like Anthropic grow from, $9 billion revenue run rate to $47 billion run rate in 6 months. So that's despite deep seek. And so, look, open source gaining traction is something that has carried forward, I should stand corrected, it's open weight, not open source. But all these companies are looking for ways to reduce their inference pricing, which is very expensive for frontier models, and using compute constraint. Those are the things that reflect the fundamentals. Everything else around, nervousness around DeepSeek and new types of models just shows that there is a lot of investment being made. Companies are exploring how to reduce their costs, but they want to consume more capacity and deploy as much of LLM functionality as they can. So from that perspective, the fundamentals are still good, and that's what's reflected in the revenue run rates of these companies. And the demand that we have seen, in terms of the backlog. And we will hear more from hyperscalers when they report, over the next 2 weeks in terms of how they're guiding around their CapEx numbers.
All right, so we're gonna talk a little bit more too about the China angle with a member of two of our AI team in just a moment. But I want to talk about one of the hyperscalers. And as you said, we got to watch and see what they say on earnings. But we've been watching shares of Alphabet. Stock has been down almost 3.7%. It's closed today, down right now, still about 3%. Talk to us about this news. We highlighted yesterday late the delay of that Google Gemini launch. What do we need to know about this? What does it indicate for Alphabet more broadly for the AI story?
Yeah, this is such a fast-moving space that if you have a delay in the release of your model and your competitors have rolled out, new models that are getting a lot of attention, like Kimi 3 did with, some of the new functionality in terms of coding agents and established use cases, that is where Alphabet, because maybe they lost, some of their key researchers on the LLM side, that may have had an impact. I don't know the reason for the delay, but for a company like Alphabet that has a lot going for them in terms of the chip side and the cloud business, a delay of the model is certainly a setback. I do think they will release something soon, but for now, I think that it's right to see that getting reflected because you can't afford to, not be on the frontier if you're a hyperscaler.
All right, so Mandeep, a good buddy, you're watching the World Cup this week and turns to you and says, Mandeep, what the heck's going on? Like, should I pull all my AI investments? What would you say?
No, I think you just got to ride out these volatile phases. And look, there may be some changes in terms of what's going on in the memory complex. If Apple is they're looking to get CXMT qualified for use, that is a big deal. Now, those are the type of things that have a bearing on the market. But on the demand side, when it comes to LLMs and the need to deploy LLMs and inference tokens, that I think will hold good because everyone knows that there are established use cases around these LLMs.
All right, so I'm going to read that as Mandeep Singh saying, take a chill pill for a little bit, everybody. All right, Mandeep, thank you as always. Have a great weekend. Mandeep Singh, he's Bloomberg Intelligence Global Head of Technology Research. We lean on him so much, and we did a lot this week because of the news flow. Hey, we're going to stay on tech, Emily and I, and the AI bill, trade, and threats and concerns. I want to go a little bit more into what is going on when it comes to China and AI. I'm perplexed, and I know Mandeep just addressed it. Let's get to a member of our team on the AI March. That is Seth Fiegerman. He is Bloomberg News AI editor. Seth, good to have you here with us. We just talked with Mandeep about the trade today, the news out of China, President Xi kind of being all in, no surprise, right, when it comes to building up China's presence in AI and moving along. The AI racing nervousness from you and the team's reporting, what's your take on all of this? What are you hearing from those in the industry?
Yeah, I think a lot of the narrative for the last year.
Okay, Apple turning back up. Apple turning back up. Okay, there goes Apple.
Top US AI firms. We weren't really seeing any of these firms compete what they call the frontier, the absolute cutting edge of AI technology. And so I think part of what's jarring about this announcement, at least at first blush, is whether Kimi and Moonshot are now at that level. I think there's mixed reactions in the industry so far. We continue to report this out. And there's a joke sort of that, it takes the worst under review in the models the day it comes out. You get to kind of live with it and see how it kind of socializes and gets used day by day. But it's clear that the capabilities of this model from what they publicly disclosed match or exceed those models from US firms that were recently as a month or two ago. So essentially the question is China 6 to 12 months behind as some have thought, or is it really just 1 or 2 months behind? The difference could be pretty monumental.
And talk about just what makes the product so competitive, because it's not just competitive on price, right? They're going for more of a premium, kind of high quality model and looking to attract buyers who maybe aren't as price sensitive.
Yeah, this is, as you said, priced like a premium model. I think it's the most expensive model that we've seen come out from China at this point, certainly on the open weight side. It's comparable to some of the mid-tier offerings from Anthropic, but the startup models is a little bit different than what you see with DeepSeek and others, where it's really and fully a pricing game. What this is more saying this model can compete on the more advanced tasks, the agentic tasks, doing coding, for example, which has become really the lucrative and key selling point for AI technology right now. And again, it comes at a moment when we're hearing more and more that there's cost consciousness emerging among developers and businesses of how much they're spending on AI models. And I think there's a growing awareness that maybe you don't have to bet entirely on one model. Maybe you kind of have a little bit of a buffet of models that you rely on, and you can use different ones for different tasks. You may not need the absolute top of the line ones for every task that we can save costs. So if the prices are a premium way and it starts to draw away customers who might have turned to top of the line offerings for those AI agentic tasks, that could be a meaningful hit to some of these US firms.
Seth Figurman, you guys follow this stuff inside and out, but I keep thinking about the EV race and the EV industry. Now, China is now what we are talking about, kind of nonstop, high end, low end, more affordable. And so I do wonder, China's lead when it comes to EVs, is that kind of a lesson for the US and kind of for everybody who's looking to stake their place when it comes to AI?
You know, anytime you mention it again, I think there's a sense of that China is following a playbook that it's used in other industries, that it's flooding the market with more affordable models. And at least until today, the thinking was it didn't have to have the best model. It could still siphon away meaningful market share and potentially destabilize or undercut U.S. firms who are trying to make as much money as they can to offset their heavy investments here. But with this model, I think the question becomes not just whether they undercut you on price, but whether they actually are able to create
S&P is still fading. Okay, back below the 50-day. Looks like a lot of people are going to get trapped if this rolls over like I think it might. SPY.
I don't think anyone yet thinks that China has surpassed the U.S. But the narrative until today had been that we thought China was a bit further behind than they might have been. Now again, this is early days. This model just came out. People need to play with it. And one of the challenges throughout AI is that there's not always agreed upon benchmarks and leaderboards to really say this one is definitively better or worse than that one. But the initial tests that they publicize seem to suggest that it ranks near the top of models out there, but still behind the most recent offerings from OpenAI and Anthropic that came out in the last couple of months. So again, China has not surpassed the U.S., but it is certainly competing there closer neck than we might have thought.
Listen, the team, though, reminding us that Airbnb runs a mix of Chinese open source models along with Western vendors. Pinterest touted their utility. Even Microsoft, one of OpenAI's biggest backers, CEO Satya Nadella saying he's considering using DeepSeek models in its Copilot co-work product. So yeah, I get it, and I feel like there is now the discussion of where are cheaper models, and you're right, not everybody needs the top of the line because it's expensive. Having said that, are there security issues? Where's the U.S. government? Do companies need to be concerned that the government is going to maybe clamp down on this?
Yeah, I mean, I think there's a couple different ways to answer that question. One is that the Trump administration, if they do feel that China is on the cusp of overtaking the U.S., might decide that that in itself is a national security concern and weigh whether it makes sense to have more restrictions there. The other is, and this comes more from the AI labs in the U.S. and certain companies like Anthropic, that a lot of this year has been defined by models that are more advanced than, say, cybersecurity capabilities and what the risks are there. And the belief is that, well, if Anthropic is the market leader,
Netflix pushing a bit higher.
kind of set precedents around what's
NVIDIA pulled back.
be offered, and ultimately they can deploy their models to trusted partners first before other bad actors might exploit them. If we enter a world where China has one or more models that are more advanced or equally advanced than what we have from, say, Anthropic, would they follow those same precautions? And if they don't, what might be the
All right, what's VIX doing? VIX. VIX turning back up. We bought some VIX 2025 call spreads earlier. Morning session, I guess around 10:30 or so. RSP also reversed. Oh, sick commercial. All right, we continue to lose this support level right in here. Mm-hmm. Okay, just watching the markets. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. There was a point there where it looked like we might bounce, but we're pretty negative at the moment. Tick cumulative is turned down. We got down volume leading. Stocks are reversing. We got 142 stocks advancing. The rest are declining out of 500. About 360 stocks declining. That's a flip from yesterday. Yesterday we had 350 stocks advancing. The Q's only 27 stocks advancing. 73 are declining. Apple trying to turn back up.
We're also looking at wild swings hitting chip makers. Right now, the SOX, the Philadelphia Stock Exchange, semiconductor index is down 1.5%. Briefly, it was positive earlier in the session. S&P, putting it all in context, now showing a loss of 1%, again on track for a losing week. We've got NASDAQ down 1.3%, with the NASDAQ 100 index full of big tech names down by 1.3%. The Bloomberg Mag 7 index also trading lower today, down by 1.8%. The VIX now above 18, a 10-year at 4.53%, the 2-year 4.16%. Gold is up $35 the ounce to $4,012. Spot gold up 0.9%. West Texas Intermediate crude continues to push higher as traders keep an eye on Middle East developments. WTI now up 4.7%, 82.62 a barrel. Barrel of Brent, the global benchmark, 88.13 right now, up by 4.6%. Apple and the U.S. Justice Department are in early discussions about settling a 2024 lawsuit that alleges the iPhone maker violated antitrust laws. Mark Gurman says the discussions are active, but there's no guarantee that the two sides will reach an agreement. Apple shares today, they are trading down by 0.2%. Meta Platforms in early discussions to lease computing power from its data centers to Anthropic. It's an agreement with an arrangement that could be worth as much as $10 billion over 2 years. That according to the New York Times. Meta Platforms, part of a broader tech sell-off, down now by 2.5%. Round 2 of the Open Championship on the way at the Royal Birkdale Golf Club in Southport, England. Atop the leaderboard right now, Australia's Lucas Herbert at 8 under par. Recapping stocks lower, S&P down now by 0.9%. I'm Charlie Pellet. Emily and Carol, that is a Bloomberg Business Flash.
All right, got to Charlie. Thank you so much. Well, Bloomberg's Nina Trentman recently writing in the CFO Briefing newsletter about global IPOs being strong in recent months. It's certainly something, right, we've been talking about a lot, how the IPO market has come back, and then SpaceX didn't help or hurt.
And it's more coming down the pipeline as well.
Yeah.
Potentially, there are planned ones, Anthropic, OpenAI. I mean, those are the big ones.
Yeah, so look, the market has finally opened up. She pointed out first-time share sales through July 10th up 250% from the prior year period, according to data compiled here at Bloomberg. One company that might be moving and working toward that is AlphaSense. It is market intelligence, an AI search platform whose CFO, Samantha Greenberg, was recently highlighted in the newsletter talking about it. So let's get to it. Let's get more. Samantha joins us right now. She is, again, AlphaSense CFO. She joins us from New York. She had leadership and portfolio management roles at Citadel, Goldman Sachs, Paulson & Co. She also founded the investment firm Margate Capital Management, growing it into the third largest female-run hedge fund in the United States. So, Samantha, great to have you here. Also with us is Nina Trentman, Bloomberg News senior editor of the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO/briefing. Welcome, everybody. Happy Friday. Samantha, I want to kick it off with you. And we do want to talk about that possible IPO. But first up, you guys say your platform makes AI useful in finance. Talk to us about that. That is something certainly near and dear to us here at Bloomberg. Remind us, too, exactly what you do.
Yeah, the quick answer is we are an AI market intelligence platform, and we're vertically integrated, which means we solve the full stack of automating research all in one place. We've aggregated and indexed the world's most valuable business content. We build a context graph on top of that. We build the AI orchestration layer and tools for reasoning and synthesis, and workflow agents that agentically perform entire research workflows in one click. And importantly, and this is a theme we're seeing in how the markets have acted recently as concerns around the cost of AI have emerged, because we AlphaSense from the full stack, we're able to optimize the system so that AI harness tools, context graph, and data.
S&P losing ground.
And that not only makes searches and research smarter, it's a much more token efficient solution. And lastly, today we serve around 70% of the S&P 500, half the Fortune 500, 7,800 customers across all segments of the economy.
Yeah, Samantha, nice to have you. I'm just wondering, you just closed another funding round. How much more should we expect before you're considering an IPO? I know that that it's on the agenda for the company at some point.
Yeah, So we are, so as you noted, we recently announced a $350 million fundraise, nearly double the valuation of our last round. We also announced a large partnership with Accenture, where our AI market intelligence and workflow automation will be available to Accenture's enterprise transformation clients. And sharing our excitement about that partnership, Accenture became a large investor in the fundraise. And so today we are focused on accelerating our product roadmap, expanding rapidly internationally, and continuing to drive innovation, and just really pleased that that product innovation and momentum are recognized by these top tier investors. And lastly, we recently announced Super Analyst, which we believe is the next step change in the value and impact of our platform.
Just to follow up on that public markets idea that we put out, and you and I have talked about this before. I'm wondering, sort of in this current environment, of course, there's a lot of companies that have AI products and that are offering those to enterprise clients. I'm wondering, if you were to be a public company, what would that do to your relationships with customers?
Yes, great question. So, you and I have spoken about the ingredients that companies consider in coming public. There has to be really compelling commercial logic, and then totally outside of companies' control, it's what's happening in the regulatory backdrop, macro market conditions, and so on. So on the commercial logic side, we, like many other companies, I'm sure it's not lost on you all as a financial audience, that the number of public companies is down 50% from the 1990s, and that's because companies like Alphasense had no trouble accessing capital in the private markets and are getting larger and larger in the private markets. But as you think about where we sit,
as Contessa was mentioning, with the governor here in New York, people feel like data centers are going to raise the cost of energy and just raise the cost of everything else. How do you balance that?
That is a huge priority. We have seen more on the data center side, just an enormous amount of demand for new electricity. Our utilities are now saying you have to pay for those power plants yourself. So if you need 300 megawatts, you have to pay ahead so that that capital cost does not get spread across the entire rate base, and the companies that are coming in pay ahead. That also puts less risk on the ratepayers. But the demand is quite large, and we need to understand how many of these are real. Sometimes we see 6 different sites in Phoenix that are chasing the same data center deal, and we're not clear, are all of these going to get built out or not? With TSMC, we see the demand, and we have the firm contracts. We understand what is coming.
When you have a business of this scale in a city like Phoenix, what is the responsibility and just the opportunity for you to have to navigate geopolitical concerns as well? I mean, and to pay attention to tensions between Taiwan and China and what President Trump says about tariffs.
We follow foreign relations very closely. If you look at foreign policy benefiting the middle class, it's hard to think of a better example than Phoenix, Arizona, when I'm talking about those 10,000 construction workers, almost all of whom make more than the mayor of Phoenix in their salary. I mean, it's life-changing jobs. You're seeing our electrician and sheet metal union halls building new facilities to train all of these workers. And it's not just a ticket to the middle class, it's a ticket to the upper middle class. TSMC has a technician apprenticeship program that the city helps fund, and students get on-the-job training while they get credit from our local community college. These jobs pay dramatically more than what these individuals were making before. In some cases, they're buying their first home, they're giving up the second job.
Yeah.
It's changing people's lives for the better, and that is a result of foreign policy.
So Kate, we're asking you some tough questions. I'm going to leave on a bright note. I was at a gathering of CEOs a couple weeks ago. They said Phoenix is one of the more business-friendly cities that they've operated in. So congratulations to you and your administration.
Thank you so much.
Kate Gallego, thank you very much for joining us, Mayor. Nice to talk to you. Voice AI is moving from the call center to the front lines of healthcare. Infinitus is automating patient, provider, and payer calls, to spot problems earlier to cut the costs of administration, reshaping the healthcare workforce. The CEO joins us next.
The private credit markets remain quite open alongside public credit markets.
So wait, so then are you tapping private credit?
We have in the past. For now, and as you look at our financing history over the last year, we primarily looked to equity finance the business, like the $350 million fundraising.
Samantha, one thing we talked about is your plans to expand internationally and use some of the funds that you raised for that. What does that entail, and which markets do you think are the additional ones that you want to tackle?
Yeah, great question. We are expanding in hubs and markets like London, Singapore, India, opening facilities in Sydney, Australia. So I joke that even AI companies have actual facilities, and so we are rapidly expanding in any number of different markets internationally, and that also includes our go-to-market engine and our customer success and sales engineering motion, as well as product and engineering.
What's your CapEx spend? And I'm just curious how that is impacting you or the cost structure of that.
Yeah, so as an AI native company, our capital expenditures are fairly low.
Okay.
Most of our R&D spend, which is quite significant, goes directly into building and shipping product.
Okay, that makes sense. Just to kind of clear it out when we are talking so much about AI and anything related. Nina, just to wrap up, we've got about a minute or so.
I'm just curious, thinking about the current market situation that we talked about earlier. I'm wondering, of course, you have a business that gives you a little bit of visibility into contracts a little longer. I'm wondering, sort of like, what are the implications that you see from these market volatility related to AI? Does it impact your business, and if so, how?
Yeah, I think that's such a great question, Nina. So one of the things you can see loud and clear in the market action this week, but in the last couple of months generally, I would say the thing that jumps out is that this era of AI at all costs is over. And in fact, enterprises are demanding evidence that their AI spend is actually producing returns. And there's this laser focus now, almost like we've not been in a target reality versus where we were 6 to 8 months ago, where there's laser focus on systems.
All right, let's take a look at big insurer Travelers, part of the Dow component here, up 8% on earnings today, on track for its best day since October 2024. The property and casualty insurer just blew past Wall Street expectations, doubled the EPS that the street was expecting. It had strong underwriting this quarter, much lighter than expected catastrophe losses, better reserve development. That means the money it set aside to pay out on old claims, it just didn't need as much of it, and robust investment returns. And these results after Morgan Stanley and TD Cowen hit Travelers with downgrades recently, the latter noting that the stock's recent rally is at odds with deteriorating industry fundamentals. That means the prices that they're charging for property insurance, especially for homeowners, personal homeowners, is moderating somewhat. But look, Travelers stocks have more than doubled value in the last 3 years. So it's a company that's on fire. From property insurers to health insurers, United Health is just rallying after its blowout quarter. CVS Health and Cigna are also moving higher. And look, AI is coming into play across the insurance industry in every single factor. It's becoming one of the biggest forces that is reshaping insurance and healthcare. One company at the forefront is Equities Systems. It builds AI voice agents that automate phone calls between patients, providers, and insurers, and handles everything from prior authorizations to patient follow-ups. Joining us now is Equities Systems CEO Ankit Jain. It's great to talk to you today. Okay, so first of all, you know I cover travel and leisure and gaming, and in every company that I cover, automating the communications between customers and the company is de rigueur. So what sets you apart?
Well, thanks for having me. One of the things that we think about a lot in healthcare is the context of the patient journey. The patient journey starts from the first time that the patient imagines something is not feeling right. They go to Google or ChatGPT and ask a simple question. Then maybe they talk to their doctor who prescribes a medication, sends it to the pharmacy, and then you go through the whole prior authorization process. For each of those entities, their journey starts at that first interaction with the patient. It's What we're doing is building the context layer and the automated communication layer to make that as seamless as possible so that the care can be delivered as efficiently and as effectively as possible.
Megan, I got to say to you, there's a lot of backlash when it comes to AI nationally for various reasons. People are worried about it taking their jobs or kind of doing what social media is already doing to their kids. I think there's also one other thing that a lot of us are irritated with, those automated agents. I got to be honest with you. When you call in somewhere and you try to talk to the agent, you want one thing and it just keeps asking if you want something different, or you give it the information, then when you get to the person, you still have to give them the information again. I think that drives everybody crazy. I think it's a consensus thing. Can this software eliminate that?
You know, I'm so glad you brought that up because we've been burdened with bad technology, and we've been burdened by this fear that AI is here to take our jobs away. I think in healthcare, you've got two really interesting opportunities. The first, we have a huge scarcity of healthcare workers. Imagine every time you go to a place like an ER, you wait for 2 to 3 hours just to meet a triage nurse. We have the opportunity now to unlock those nurses who are doing routine, tedious tasks by having AI do those tasks so those nurses can help the patients that need help.
What do you mean? Like the initial questionnaires would be done by AI instead of a human being?
Well, it could be the initial questionnaire, but it could also be the work that many of those nurses are doing when they're not on the floor, filling out paperwork for prior authorizations, calling patients to check in on them for adherence. Those are nursing hours that could be redirected to things that affect all of us on a day-to-day basis. So that scarcity in healthcare can really be turned around to abundance using AI.
Who's already signed on with you?
Well, we're supporting 8 of the 10 largest pharmaceutical manufacturers for their patient support and access programs. The ability to have free or subsidized drugs. Also, 3 of the 4 largest national insurers are using us to give benefits to their members and their provider networks.
You know, we've been following this China moonshot story and the pressure that Chinese technology, AI technology, might put on American companies. Would you move to a Chinese AI model if it were cheaper? And if so, it would have to be significantly cheaper to get you to move away from, I don't know who you've been using for your AI, but would you consider that?
Well, I think the thing that we think about at Infinitus is not just about a single model. It's about a whole suite of models. We want to use the right model, the right level of intelligence for the right problem. So the decision whether to use Model A or Model B isn't about the source of where it is from. It's more about does it meet our security and compliance requirements, both national as well as what our customers need. And second, does it have the right intelligence to cost ratio? The problem with the frontier models today, especially those that are closed source from the US, is that they're extremely intelligent, but they're very expensive. And we can't use one model for everything. So you have to be able to balance price for performance as well as the data security requirements.
So, Andrew, one last question. Is this proprietary? Is it white label? Is everybody going to use it? Or the idea is to sell it to one company? And if I'm the consumer, if I'm the person going to see a doctor needing help, how will I know that this technology is not only working today, where will I see the improvements going forward?
Well, we're seeing an incredible amount of improvements in how communication is making some of these very frictionful processes frictionless, whether it's prior authorizations, the timing for them reducing so that patients can get on therapy faster, or having the right amount of post-discharge follow-up.
Apple pushing higher.
Stay on therapy as long as they need to be there. Making sure that if you really think about the patient journey and the care that they need, the technology should enable that. It should uplift the workers that are helping to make patients healthier every single day.
All right, and Ken Jane, CEO of Infinitus, thank you for coming on. Really fascinating technology. Appreciate your time. All right, time now to get over to Mackenzie Sagalos for a CNBC News update. Mac.
Frank, a federal appeals court ruled that New Jersey's assault weapons ban on semi-automatic rifles is unconstitutional. It marks the first time an appeals court has said that a state's ban on the weapons violated the Second Amendment. The issue is already in front of the Supreme Court, which agreed last month to review rulings that upheld similar bans in Illinois and Connecticut. The FAA.
Be careful trying to time a bottom in the indices. Wait for the moving averages to turn up and price to move above. Make a few candles, higher highs, higher lows. For now, we just keep following the moving averages lower. Still in a bearish trend, back below the 50-day.
before later softening his tone. Trump will also be at Sunday's match where he's expected to hand the trophy to the winner. Right?
You know what? I mean, if your team has a chance to win the World Cup, I think you probably much rather. So.
You got to show up.
Tagalos, thank you very much. All right, take a look at this mystery chart. Earnings grew more than 40% year over year, and shares are up nearly 50% this year. Can this company continue to deliver? That may be much more coming up next.
All right. Making a new low, S&P making a new low. You could buy some put flies. I would go at least 740, 735, 730 maybe, a couple of weeks out. If we do pull back a little bit more, maybe even 735, 730, 725. Or you could do 740, 730, 720, 10 wide. VIX calls, let's see what that looks like. VIX calls. All right, I bought the 20, 25 call spread. Those are already up. Lots of volatility. Oh, boy. VIX still pushing higher. Apple on the move here. Apple moving higher. Apple moving higher. Okay, pre-market highs were around 335. Actually, they were much higher. They were 337.
All right, welcome back to Power Lunch. Take a look at the IYT, the iShares Transportation ETF. You can see here it's down today, but still within 8% of the 52-week high. As investors, they're kind of leaning into that so-called halo trade. Investors are favoring real economy stocks as questions build about the return on the investment of artificial intelligence. And even today, concerns about new Chinese AI models. Few stocks to watch here. JB Hunt higher on earnings after reporting 10% growth in its intermodal or container business. Containers, they move most consumer goods here in the U.S., so kind of a bullish sign on the economy. UBS also gaining on those consumer expectations, and Union Pacific also near a 52-week high as rising trucking rates are moving more volume to the rails. And one more stock here, XPO, one of the big winners in the entire space, as industrial-focused LTL trucking stocks have surged all year long on confidence that U.S. manufacturing will remain strong.
It has been a rough week for gaming stocks. Prediction markets, meantime, hotter than ever, but it might actually be another sports book that is giving DraftKings and Flutter, which owns FanDuel, a run for their money. Note from UBS today highlights Bet365 as the biggest competitor that the sports books have to watch out for. Now, Bet365 is a privately held British company, but a giant globally in this space. And in the United States, it's currently available in 17 states. UBS highlights that regulatory questions could pose a threat to the current state of prediction markets, while Bet365 is just scaling quickly on traditional sports books. Let's take a look at Flutter and DraftKings year to date, and you can see, I mean, Flutter's down more than 15%, and you've got DraftKings down. Well, this is showing today's moves, but DraftKings is down about 25%.
All right, Apple's on the move here.
It's just been a really rough ride for them against the advance of these prediction markets.
You know, I know you cover this space extensively, so I know prediction markets.
Apple, third bullish day in a row.
Everything online, whether it's prediction or betting, are taken away from real casinos. I was in Atlantic City a few weeks ago, and I got to say, I used to live there and I worked there at the NBC affiliate there many years ago. I was shocked. I was shocked by the changes, and I got to just be honest, the decline there. It doesn't seem like people are really going there.
I think that in states where iGaming is legal, there have been some questions about iGaming, which is digital on your phone. Is it cannibalizing brick and mortar? But part of this has to do with gas prices and how expensive it is to drive to your casino and whether you have discretionary cash left for the slot machines.
Yeah, love Atlantic City, but it just seems like online prediction markets, gambling, it's taken away from the real casinos.
Still ahead, the Odyssey arrives.
Watching Apple here.
Big Christopher Nolan's $250 million epic already breaking IMAX records. Will the Odyssey sail to a monster box office weekend? We'll talk about it next.
Pre-market highs are around 337. Cheap 0-day. Cheap 0-day calls potentially. Where'd you go? All right, so we've got an hour and 9 minutes to go.
$200 a share. Trader bought over 10,000 of the July 24th weekly options. Those expire in just 7 days. The 205 strike calls. They paid an average debit of about $2.90 on those calls. So the break even on this, where the trader starts to profits above 207.90 over the next week. That's about 2% above the current share price in NVIDIA. So you don't need that big of a move, even though he's given himself only a week in this. Now over 30,000 contracts have traded on that strike. So while the stock is still down in the day, on the option side of it, it still feels like there's a lot of bullish momentum with all this call.
Apple.
Bounced off a session lows.
All right, yeah, I can't count how many times people have said.
This bounce will give you an opportunity to buy some put flies. I like buying put flies on a bounce, not at the low of the day. Puts in general, I generally don't buy puts at the low of the day. I'll wait for a bounce back to resistance. I would go out at least to 2 weeks, 3 weeks. If we don't drop next week, if we start to rally next week, then you can take them off with not much of a loss. They won't be that expensive. They'll probably be about 10, 15 cents.
Those high-end computing power that trains and runs AI models. Now, that excess compute that Meta has, they came out recently and said they're looking for ways to kind of start monetizing some of that CapEx spend. And this might be one of the areas. So it's been a pretty volatile trade. We've had a good base in COR1M that it's tested that $70 repeatedly over the last several hold on this reversal today. But we did here also, and this was out in the September monthly option series. So 63 days to expiration. Trader bought 5,000 of the September 90 strike calls early on in the session when the stock was down. They paid an average debit of about $5.60. So the break even of 95.60 over the next 2 months is about 30% higher than the current share price in there. So they're going to need a big
Netflix. What are you doing, Netflix? Okay.
But remember, this stock was above $96 a share just over a week ago. So it's pulled back pretty significantly, like I said, this month.
NVIDIA back down to opening range.
Yeah, and that sort of a recovery intraday here, as we say on COR1M, up 1% right now. I don't know, maybe it's got something to do with the fact that Nebius, some of the other neo clouds were trading significantly higher as well today, outperforming the broader market. But that's COR1M. Let's shift over to Microsoft. This is down today alongside most of the Mag 7, alongside the softwares today. It's now off its recent lows, but still down quite substantially, double digits year to date. So what's catching your eye with this one?
Yeah, it's been under pressure since hitting those all-time highs last July at $555 per share. But we've seen a nice little bump here, up 2.5% so far this week. So it's outperforming a lot of its names. We've seen that rotation out of some of the chip names back into that Mag 7, or recently the Lag 7. And Microsoft's been one of the beneficiaries there. It's still down about 18% this year and off about 29% from those all-time highs that we saw last summer, just a year ago. But they're expected to release earnings in about a week and a half. There's going to be a lot to digest here. How's Copilot doing? How's the enterprise side of their business? Remember, software has been under pressure, and Microsoft's been dragged down with it. What kind of cloud growth are we going to see out of Azure moving forward? Because it lagged its peers last quarter, especially Google Alphabet, and the resurgence that we've seen in AWS. So there's going to be a lot of questions to answer there. But we're finally starting to see some bright spots because valuation on Microsoft has gotten down to multi-year lows at this point. So maybe some dip buying in this name recently. But we did see some bullish activity in here. And this was all the way out in the August monthly cycle. So they'll capture that earnings event in about a week and a half. Trader bought over 15,000 of the August 450 strike calls, far out of the money to the upside. Paid an average debit of about $6 on these calls. So that takes the break even where this trader starts to profit above $456 over the next 35 days. That's about 15% above the current share price. So they're going to need some type of catalyst on this one. The put call ratio, though, is down below 0.4. So a lot of call buying on this name, even though the stock's lower today, and we've seen some gains so far this week in Microsoft, Sam.
Yeah, big couple of weeks for the hyperscalers coming up with these Q2 earnings. What they're going to say about CapEx, what that's going to mean for some of this rotation. Tom, thank you. NVIDIA, COR1M, and Microsoft, the big moves in today's market. We're going to leave it there. Thank you so much for joining us here today on the watch list. I'm Sam Barnes. Download the Schwab Network app available in the Apple App Store. You've got Market on Close up next with Barbie Hayden. Have a great weekend. We'll see you Monday.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your Investor Checking your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Welcome to Schwab Network. Real-time market coverage. It's excellent.
strategy. From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. SchwabNetwork.com.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Intern, this place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab, they can do everything. Invest, trade, get full service wealth management, and anything in between.
Think I'm going to be sick?
We have to buy that now. Schwab.
Invest your way with Schwab.
Hey, Bob.
Hey, Andrew.
Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, that is true?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I programmed that 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Happy Friday. It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden, coming to you live from our Chicago headquarters. Let's take a look at what's coming up on the show today. We're going to discuss the trends in mortgage rates and why many borrowers often overpay for their mortgages. Then we'll take a look at potential red flags you might get to keep an eye out for this earnings season and how they could impact investors. After that, we'll dive into trends in gas prices and the impact of recent crude oil volatility on the price at the pump. As far as what I'm watching today, though, Netflix falling to a new 52-week low after a disappointing outlook given yesterday in its earnings release. The streaming giant also provided an update to how it will share its future engagement numbers. Apple, though, moving slightly higher today after getting upgraded to buy at HSBC in what the firm calls an operational turning point for the company. Bloomberg also reporting today that Apple is in talks to settle its antitrust lawsuit with the DOJ. And SpaceX lower after a late scrub in its latest Starship launch. According to the company, 2 engines will be replaced, and that launch can happen early next week. SpaceX continues to trade below it.
All right, so the indice is just kind of sitting here with everything else, not moving much.
IOBA.
All right, see if we can't get a rally end of day would be nice. Get back above the 50-day would be excellent. S&P currently down below the 50-day, well, right at the 50-day, really. Okay, we just got rejected at VWAP. 50-day, it'd be nice if we closed above. At least we would have 50-50 shot. Bulls win, bears win. We don't know what's going to happen. A move above the 50-day and a close closer to the high of the day would be excellent. All right, so got SPCX. Big move, SPCX popping here. SpaceX popping. SpaceX, big pop here. $5 pop. Okay, here we go. SpaceX. I'm going to add the SpaceX. Something's up. SpaceX. Something is up. Let me go SPCH. SPCH. All right, let me buy some SPCH. Okay. That could just be shorts covering for now. Could be just shorts covering for now. SPCX. Oh, boy. All right, so that was probably just short covering for now. All right, probably wait until next week now. Got a pretty decent flush. What is COR1M at? COR1M currently at 638. Hit 7 and change this morning, so it could get back above 8. Most likely it'll be back above 8 next week. All right, back down to where we came from. All right, so It'd be nice to see like a 3-candle reversal next week. Best that can be expected. That was a little short pop there. Looks like shorts again at it. There's a lot of calls being sold down below, so, or puts rather. Puts being sold down below, supportive. Maybe this area is where we start to see a bounce. Gonna need time, obviously. All right, we're right back down to where that candle started. A lot of call buying in SK Hynix. Today. All right, NVIDIA making new lows, NVIDIA. S&P bounced and failed. A lot of conflicting flows back and forth.
JSPR.
Insurance. SpaceX. That little blip, that was shenanigans. Looks like shenanigans.
JSPR.
SpaceX.
JSPR.
We destroy the economy. We make everybody impoverished, and then we make sure all the homeless people doing drugs in front of the children, and make sure all the school teaching the children how to be a homosexual, and make sure they all teach about the transgender. So that is what important to me. Make sure we have enough subway cars for all the
JSPR.
poor people to travel. Homosexual.
Netflix rolling over. Excuse me, NVIDIA rolling over. Netflix is fine. Netflix is fine. They're right next to each other. Just NVIDIA rolling over. Okay, Apple's still sitting here. No follow through. We're looking for it to pop back up. Nothing yet. Maybe we'll get going end of day. S&P continues the fade. At this point, best to wait until Monday, see how options set up. We'll take a look at it over the weekend as well. By Sunday night futures, we should have a good sense of what to anticipate for the week ahead. OPEX is going to clear the decks. Should help the COR1M maybe get back to 8 to start the week, which would be good for options traders.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live. Subscribe free at schwabnetwork.com. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torches would pass to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren planning for their college educations. Someday it'll be their turn.
S&P bear flag at the moment. Back below the opening range high.
I was so startled to see some of the research that you sent over that says 87% of home buyers in 2025 did not get the lowest mortgage rate available to them. Walk us through how that happens. Well, thank you for having
Can't believe we only have 40 minutes to go. It just feels like we have a couple hours.
should be shopping around aggressively for their mortgage. And then those who do shop around, they're likely to get overwhelmed by the process and just take the first referral they get from their realtor. And this is ultimately costing borrowers thousands of dollars a year. And it's really an area of improvement that we could really see if we put leverage and back into buyers' hands by telling them to shop around.
I mean, $275 a month, that's the monthly breakdown of that number that you just gave for the year. That is a significant amount of money with the higher gas prices that we're facing, food costs as well that could also potentially be rising. As someone who's listening, if they're thinking about getting a home, I mean, what should the process look like if they want to do it right?
They need to get out of that single quote loop. So you should be talking to multiple lenders and getting ideally at least 3 quotes and on the same day, because we see that rates change from day to day. And that is really going to put the power back into your hands, the leverage to bargain and to get that most competitive rate, because you want lenders to compete for your business. And if you don't shop around, you're taking yourself out of that broader market check. And I would make sure your eyes go directly to the APR, the annual percentage rate. That is more important than even the interest rate, because that takes into account those upfront fees that you may be paying for that mortgage.
And Alex, one of the things I found most surprising was that you actually noted that higher income buyers are actually more likely to overpay. Why is it that people with more resources would end up with a worse mortgage deal?
So financial confidence can actually work against you in this situation. So borrowers with higher incomes, they face less anxiety around getting approved for that mortgage. So they're just more likely to take that first offer that they get.
No bounce yet.
And that convenience and that loyalty does come at a cost. You see that they're just shopping less aggressively because they don't feel like they can.
All of the trades happened early in the morning. That quick reversal, you had to be fast. Since about 10:30, we've seen a lot of chop.
And really, I would encourage those higher income borrowers, those older borrowers, really every borrower to really be shopping around aggressively for their mortgage, like if you were shopping around for a car.
And is this a nationwide problem, or are you seeing the spread greater in certain regions of the country?
So we analyzed over 350 metros, and we found that there's no part of the country where borrowers aren't overpaying. So it is a national issue. However, depending on your zip code, you have a higher risk of overpaying for your mortgage. So we find in high-cost coastal markets like Los Angeles and Miami, the total wealth that is lost to mortgage overpayment is highest. So those borrowers are paying more than $100,000 over the life of the loan. But in smaller markets in the western region, Texas, Indiana, those are the places that actually have the widest gaps between the rates that borrowers are locking in and the best available rates. So in those areas, borrowers are leaving a full percentage point on the table, and this is ultimately costing them thousands of dollars every year.
S&P still fading. That's going to be ugly if we close at the low of the day. Ay, ay, ay.
People with higher net worths who aren't shopping around. But let's look more closely at Texas and Indiana, because those states are not a direct foil to each other. We have Texas with a lot of potential natural disaster risk, coastal, Indiana, inland, very different setups here. Why specifically do you think those two states are seeing widespread?
So in those areas, the story is less about higher home prices and urgency when it comes to transaction. It's more likely about access and knowledge. So it's more likely that in these smaller markets, borrowers are going to those local traditional word of mouth recommendations, and they're not doing that broader market check that they could be doing that could lead them to the more competitive rate. So it really does come down to awareness and not shopping around enough for that mortgage.
So when you're shopping around, you already mentioned getting at least 3 should be a part of your process. Is trying to negotiate with your current lender, if you're already a homeowner, should that be a part of this process? Is hiring a mortgage broker an action someone should take, or should you simply be doing it yourself? Is there a best approach here?
So if you have already purchased and you didn't shop around, you do have an opportunity to look into refinancing down the road. So of course you have to look at where rates are at, and if it makes sense to refinance to a lower rate, you want to get at least a 0.75% lower of a rate, and you also want to make sure you're taking into account the break-even point. But let's say that those boxes are checked, then you should be shopping around aggressively for that refinance, and you should be talking to at least 3 lenders, and you should be hitting them against each other and negotiating and trying to lock in that better deal. The best way you can bargain is by having leverage, which is those 3 quotes that you can have to do those negotiations. And if you are still looking into home buying, then that's the time to be aggressively comparison shopping.
And Alex, are there any warning signs that a borrower should be looking out for that they are perhaps about to overpay at a higher rate than what they could qualify for?
Well, when you are getting those quotes, make sure that the interest rate or the APR they're showing you does take into account either discount points or not. So sometimes the interest rate that you're advertised, you have to pay for that lower interest rate. So I would make sure that you're asking questions around discount points, and if this is truly the rate that you're going to get without having to pay for those. I would also ask about lender credits and other incentives that might be available with a particular lender versus another. And again, by having that leverage, by knowing what that lender is going to charge you, you can go to another lender and ask them if they can meet you there or do better.
And obviously there's different types
SPY.
of conventional loan borrowers, we've got government-backed loans. Are you seeing any difference?
All right, let's see here. What do I have now, SPY-wise?
So every lender has different cost structure, business models, especially when it comes to conventional loans. And we do find in our research that if you're getting a conventional loan, the likelihood of overpaying for your mortgage is higher. And that just comes down to there's more loan pricing variation when it comes to conventional mortgages compared to those government-backed programs. And so you're just more likely to fall into the trap of overpaying with a conventional loan because there is more of that variation in pricing, and lenders have more flexibility in how much they want to charge you for that loan.
All right, so don't be lazy, shop around, don't get too comfortable, make sure you're not overpaying. Alex, really appreciate you bringing the data and some insight to us. For anyone looking at borrowing or refinancing, that's Alex Gailey, data analyst over at Bankrate. Coming up next, we're going to discuss the potential red flags on the horizon for this earnings season and how investors should be approaching them. Market on Close, we'll be right back.
HPAI. LCID.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
I'm Diane King Hall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Welcome back to Market on Close. I'm Marley Caden. Travelers is rallying to a record high today after a big beat on the bottom line. The insurance giant posted adjusted earnings per share of $10.04. That was nearly double the street's estimates.
Okay, starting to bounce now. Starting to see a bounce. Maybe we get a short covering rally. Very quick short covering rally.
Seeing a nice 3% boost on the session for these insurers. I do want to dive into earnings, though, with our next guest and talk about some red flags that should perhaps be on your radar. Joining us now, Sid Chiraria, founder of SC Marwar Capital. Sid, great to have you back on the show here. Let's start big picture. When we are talking about red flags to keep an eye out for this earnings season, what's top of mind for you?
Yeah, I think, Molly, it's great to be back again. Thanks for having me. I think a key principle of mine is when times are very good, that's precisely when an investor should play defense. If you recall, sort of 20 years ago, the banks in 2006 were reporting record profits. The balance sheets were great, the net income margins were great, credit losses were low, and the market optimism was great, and it resembles periods before previous financial drawdowns, such as crashes in 2000 or 2007. So a couple of things come to my mind as I read earnings reports, and the last quarter and this quarter. Sort of, I see companies. I'm not going to mention any specific companies, but like a company A inflating reporting results by reducing inventory reserve, allowance for doubtful reserves, which boosts profit. You have company B extending estimated useful life of plant and machinery from 4 years to 20 years.
NVIDIA turning back up.
To 20 years to 30 years, which is the largest asset class in PP&E. Then you have company C, which is quietly chased as auditor, and you have a CEO aggressively selling stock, aggressively capitalizing software costs. You have a company D, which is doing a lot of bolt-on acquisitions, related party transactions to obfuscate the core business. I raise these red flags because during a bull market, it's very easy to get away with some of these things, but in hindsight, they become quite obvious that the real.
We might pin right in this area.
The balance sheet and cash flow statement, and not the top line numbers.
Look at some of these creative accounting methods, perhaps, that should be on watch here. What about companies reporting adjusted earnings? I mean, most
S&P.
reporting adjusted earnings. How should investors be looking at that? How skeptical should they be of those adjustments?
I never pay attention to adjusted earnings. That's like, asking a barber if you want a haircut. Of course, they're going to tell you. I mean, the adjusted earnings are restructuring charges, stock comps, one-off recurring items, etc. And the focus of an investor should be what is sustainable and what is recurring. So just the EBITDA figures, etc., are not really high-quality figures. The number to focus on is recurring and sustainable cash flow from operations. That's really the key. I think investors need to read in between the lines and go to where the cash flow is.
And so as we look at this and we're looking at cash flow and market focus, obviously, along with that sustainability you just mentioned there, it's this ongoing talk about what companies can sustain their high margins, which ones can't, who's in a cyclical industry, who's not, what is still cyclical is also a part of the conversation right now. How are you approaching looking at how sustainable on sort of an individual basis a company's margins are? Because we keep seeing record after record after record in many of these names.
Yeah, I think 2 points. The first question you ask is the moat of this company.
Let's see if we get a rally out of this. Watching for a rally. S&P short covering rally.
does this company really exist? As we've seen in the past, sort of old modes have disappeared in the 1980s, 2000s. You had fixed like telcos, which disappeared, newspapers, which dominated advertising, which have disappeared. Which have reduced their modes. So when you look at earnings, you got to look at each sector. Say with IT services, you're having the routine work increasingly be automated. So past margins are really an illusion. I mean, you've had Accenture, which is down about 60% from its highs, and each of these companies are highlighting the risks of AI in their AI disclosures, and investors should pay very close attention because that's going to matter very significantly for margins going forward.
Fingers crossed for a little rally, end of day rally.
Whether it's IT service companies, Genpact, Capgemini, Infosys, TCS, each of them are highlighting AI risk disclosures. Similar, you have it in other sectors, the data and proprietary data, FactSet, Morningstar, Restaurant. Each of these companies had high margins in the past, but that's in the past. Now the question investors should ask is, in this new era of AI, are the high margins going to persist given, AI? Is it going to shrink the moat or narrow the moat? Similar with software. Adobe is a company that lots of investors are asking a lot of questions, increasing competition from Gen AI. Should we extrapolate the past margins to the future 5 years? It's going to look like a very different world. So, again, you can do that with the travel industry, whether it's Booking, TripAdvisor, Yelp, you can also look at the hyperscalers, which are significant capex, which we discussed in the last time I was on the episode talking about AI being the biggest build out. But what's happening is, given this huge capex, you're having depreciation. Assumptions of depreciation, etc., and accounting estimates that can distort near-term margins, which might look very different from the future if your capex is not incurring those high or getting the high ROIs. You might have write-downs in the future.
SOXL.
So there's a lot to discuss there. I will also add that today we're seeing peak profitability in the stock market. The S&P 500 net margins about 15% last quarter. This is about 300 basis points higher than sort of long-term averages. Now you might say that long-term averages don't matter because the S&P 500 has been more profitable and more capital light, but that's changing because now the S&P 500 is extremely capital heavy, and so a decline in these long-term margins just back to the average, let's say from 15 to say 12%, may not sound very dramatic, but it represents a 14 to 15% decline in just the profits on the same revenue base. So the challenge is not just looking at peak margins. You might also, investors need to consider high valuations as well in the current market environment.
And Sid, my last question, I know how
S&P, watch for S&P.
Here with earnings, we have gotten some blockbuster numbers.
Looking for S&P to rally off the low. At least move back to VWAP.
From the outside, we're just not seeing red flags. Is the bar too high, or should investors just be looking at companies where the bar is so low that if they can just get barely above it, maybe there's more opportunity there?
Well, the whole trick is investing is supposed to be simple, but it's not. Essentially, a company can report record revenue, earnings, and even raise guidance, yet the stock can decline, because the key question that investors should ask is, what is priced into the stock? So if a great company, great execution, great growth, has those many years of great growth execution priced into the stock today in its valuations, the bar is just set high for higher and higher beats. And we've seen that with NVIDIA or some of the Mag 7 that will lag the market this year. So I think it's really a focus on what is the gap between expectations embedded in the price of the stock and what actually happens. A great company can be a
no bounce yet.
Years of growth, and a struggling
S&P.
Say struggling can be a good investment if the price assumes the problems are permanent, but they're actually temporary.
Got 20 minutes to go.
United UNH, which was having a bit of a crisis year and a half ago, stock like in the mid 250s, and now it's back to closer to its highs, and people are extrapolating the problems as temperament. So really, it's a function of our expectations already priced into the stock. I will say that some of the blowout numbers on having the highest gross margin. It's not a reflection of this company, but just the highest gross margin in its history is 86%. I mean, that's exceptionally high. Even Louis Vuitton doesn't have those gross margins. In 2022, those gross margins were minus 33% on negative figures. So the highest ever annual figure was 59 or 60% back in 2018. So in a bull market, my final message is in a bull market, play defense, because that's the time that defense matters. In a bear market, you play offense, because that's really when the biggest riches are to be had.
Sid, always great to have you on the show. Really appreciate you joining us on this Friday afternoon. I hope you have a wonderful weekend. Sid Chiraria, founder of SC Marwar Capital. Coming up next, we've got Options Corner. Rick Ducat will join me right here in our Chicago studio to take a look at the activity in Uber following a major acquisition for the mobility company. That's next on Market on Close.
Sometimes, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Harley Hayden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable. Wait, had a stroke? Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time. Jim, my financial consultant, I met 20 years ago. Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
I'm Kevin Green, and I track options flow daily, identifying who's buying, who's selling, and how it's going to impact the markets. Watch live on Schwab Network at schwabnetwork.com.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time.
Apple turning back up. S&P starting to turn back up.
Announcing its acquisition offer for Delivery Hero yesterday. The deal values the German delivery company at nearly $15 million and would mark a major expansion to Uber's user base, particularly internationally. The combined company had a combined pro forma gross bookings of $236 billion in 2025. Shares of Uber are down more than 10% so far this year, down an additional 2% so far on the session today on the heels of this potential acquisition news. Do want to welcome in Rick Ducat, our lead market technician, here to take a closer look at Uber today.
S&P turning.
Potential deal here. Rick, I was just mentioning Uber, not our strongest performer so far on the year. How does it stack up against the broader market?
Right, down 19.8% Uber here in purple versus the S&P up 18.4%. The XLI Industrial ETF Uber's technically a part of that, but that's really a kind of a poor comparison here. I definitely wouldn't think of Uber as an industrial company personally here, but not a whole lot of able comparisons here. We've got Lyft, we've got DoorDash, and we've got Grab Holdings, which is a ancillary player in this field here. Uber kind of in the middle, out of this group, but all of them facing similar issues here, it seems. The best
we got 15 minutes to go. 15 minutes to go for the regular session.
An interesting situation here, seeking to expand its international base with a pretty darn
S&P starting to rise.
A huge one. I Lyft on top here. I saw when I was looking up the research for the story. Saw a different headline. The Lyft called themselves "We're the good of Uber." Is what the headline said, but certainly outperforming. As we look at Uber's setup on its own, though, I mean, it's always interesting to look at these names that are such a common part of our daily vernacular, but then to see what the technical setup looks like. Take us through what you're noticing right now.
Yeah, it's always kind of interesting when there's something that you use.
Volume coming in. S&P.
You might think it does based on your personal use here. When we do look at Uber more specifically, 79 stands out as a notable level here, a low point, a breakdown point, and then subsequent highs that we formed recently. Meanwhile, 69 was a low point here and here. That's around where we bottomed out recently. So a very pronounced sideways range has been the prevailing theme of the past couple of quarters here. But beyond that, though, we had our highs just shy of 102, 101.99, connecting some subsequent highs here. From there, we are still within the confines of that downward sloping trend line here. We did have a upward sloping trend line here, starting with our 52-week lows near 67.19. A short-term trend line has been broken to the downside, though, so that brief, rather modest upswing seems to perhaps be in jeopardy here now. When we think about our moving averages next, we have a very pronounced confluence here. Our three shorter-term moving averages, 5-day, 21-day, 63-day, our weekly, quarterly, or monthly and quarterly, all together right on top of each other, near about 73. So this gives us a pretty notable point to watch out.
For the most part, stocks are down.
Strong close above that level would stand out as being more bullish. Meanwhile, a rejection below that level would be more bearish. We are on pace to close below that point right now. So we can also think about RSI, our measure of momentum. We can see that we have this green upward sloping trend line here, but we are actually below that 50 midline. So a bit of a mixed signal there. Look for that to perhaps improve, and for RSI to make new relative highs along with price if the situation does start to improve, or alternately, for a breakdown below that trend line and for price to breach some of its recent relative lows for further directional moves there. So our volume profile study, now we can see here, the bulk of our trading activity recently is between about 70 to 75 roughly. The point of control, our thick red line, 74.36, is the most significant trading activity area on our chart here during the past year. But still,
S&P. All right, we're starting to get some momentum here. S&P catching them. All right.
All right, so Rick, as we're in options corner, what's the options action looking like on Uber today? I mean, not a hugely significant move on the announcement of this deal, down about 2%. But are you seeing an uptick in the options activity?
Not a hugely significant amount of options activity either, but a bit more so than average. 1.13 is the sizzle, which is our current volume compared to the 5-day moving average of volume here. That equates to about 81,000 options.
Volume.
5% of which were calls. The most active open interest month, rather unusually, is January 15th, 2027. The second most is our today's expiration, the July monthly. We can see that as well in terms of any notable trades. One stood out to me, plus 1,500, March 19th, 50 strike puts at a
11 minutes to go. 11 minutes.
Trade here, a bearish play for a bit of a longer term outlook.
All right, with Uber here, we are at 72.39, down about 2.25% on the session. Thanks to Rick Ducat, our lead market technician, for breaking that down for us. Coming up, we're going to take a closer look at the move in oil prices and how that's impacting the price at the pump for you. We've got gas buddy Patrick DeHaan joining us to take a look at the impact of the recent volatility. That's all next on Market Unload.
sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
From the most iconic trading floor in the world, Opening Bell with Nicole Petalides. Stock exchange, the countdown. Stories that make markets move. 5-minute breakdown of the biggest headlines, earnings, global movers, just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com. Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Intern, this place is incredible. It's where I get all your supplies. Fancy coffee, giant place. It's like Schwab. Everything investors need, all in one place. So again,
8 minutes.
do everything. Invest, trade, get full service wealth management, and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Welcome back to Market on Close. I'm Marley Caden, live in our Chicago headquarters to discuss trends in gasoline prices. Let's welcome in our next guest, Patrick DeHaan, the head of petroleum analysis over at Gas Buddy. Patrick, great to have you on the show. I mean, I was talking about
Snowflake on the move. Snowflake.
We've seen gas tick higher for the first time since May on the
Snowflake on the move.
How are you looking at this? Are we about to go higher here? Should we be bracing for more pain at the pump?
Yeah, Marley, we certainly will be bracing for more pain at the pump. We're well above, notably above today, another 3% gain. Oil above that.
S&P continuation.
Keep in mind, just a couple of weeks ago, we were below 70, or at least touching below 70. So the national average, $3.97 a gallon at this moment. It likely will hit that $4 a gallon mark probably early next week. RBOB spot prices for gasoline would indicate that retail prices still have a good amount of catching up to do. So I anticipate, at least with the momentum we have now, the national average could hit $4.10 or $4.15 a gallon. Diesel prices already reaching that $5 a gallon mark as well. Certainly an ominous sign for the U.S. economy. And motors for the next few weeks could continue to feel the pain of rising gas prices. And there's a lot going on right now. It's not just the Strait of Hormuz in the U.S. and Iran, but also increasingly another Ukrainian attack on Russian oil refineries. They are really starting to add up, and that is
NVIDIA with the bounce. Snowflake bouncing. Meta bouncing. Apple looks like it might go for 335.
Patrick, let's dive in to what's happening with the Ukraine and Russia, because I think the conversation right now is heavily dominated by what's happening in the Strait of Hormuz. And I read your article about how the importance of what's going on with Ukraine continuously hitting these Russian refineries. As an American driver who's watching this, why does that matter for them?
Yeah, a lot of Americans simply look at the price of oil without realizing, well, that is worthless to anyone, hence crude oil. It's all about refineries lately, and that's where a lot of the pressure on this equation has come from. A lot of Americans saying, well, oil's at 80, that shouldn't equal $4 a gallon.
Apple pushing more.
Is there that you're right. I mean, that's a very high disconnect. Crack spreads, that is the measure of profitability for refineries. Crack spreads are record levels, meaning that something is happening to limit refining capacity. U.S. refineries are operating at nearly 97% of capacity, given that it's summer driving season. And also then the issue really is focused on Russian refineries. Russia is a pretty large refiner. They export a lot of diesel. 1 out of 9 barrels of diesel globally is produced by Russia.
And keep in mind, because of the attacks on Russia's refineries and the downtime of these facilities, now Russia has had the rare stuff of banning exports of diesel. They're actually importing gasoline as well. That would kind of be like akin to the U.S. needing to rely on everyone else. When we have a lot of our own oil production, the story is all about a lack of refining capacity globally, and a lot of that knocked out not only by Ukrainian attacks, but still, while the focus on the Strait of Hormuz is a oil focus, keep in mind there's a lot of refineries that are blocked as well.
So, Patrick, then how much of what drivers are actually experience is tied to geopolitical risk versus to actual disruptions in oil supplies?
I think most of it right now is coming down to risk. You look at the price of oil, and in normal relationship, if things were not strained at the refining level, that might be something in the ballpark of, $3.25 gasoline in the middle of the summer. Right now, so there's a lot that is, and because of the.
All right, what else? Just taking off the last positions. Oh, let's see. VIX moving back up. VIX off the best levels of the session. VIX. There goes Google. Google on the move. End of day. Google going. Google short covering. There goes Google. Google short covering here.
Later this year, and a lot of whether they get a break in the price of gasoline is more contingent on Ukraine attacking Russian refineries than it is really the price of oil.
And Patrick, is this just broad increases across the nation, or are there parts of the country that are going to feel the increases sooner or harder?
I think for now it's
S&P still climbing.
But there are some areas of concern, the Northeast and the West Coast. These are markets that are more.
S&P is still climbing. Trying to get back above VWAP. I don't know if we're going to make it. I don't know if we'll make it higher, Mondo. Firefly.
They certainly could become far more so if Ukraine continues to knock out Russian refining capacity.
Patrick, always great to talk to you. Really appreciate you bringing your insight and research to this show. Patrick DeHaan, head of petroleum analysis at Gas Buddy. We are nearing the end of our market session. Alex Coffey will be joining us to take a closer look at the action we saw today and also for the week on the whole. That's next on Market Up Close.
Figma trying to break out above yesterday's high. SoFi dipped today. SoFi. Buyers did show up at the 50-day. All right, got a little bit more than a minute and 30 seconds to go. I'm your host, Cousin Benny, coming to you from theclosingprint.com. I hope everyone's having a good evening. Looking forward to the weekend. Me too. All right, let's see what the banks look like. Into the close, the banks, Citigroup. Gap down again, Citigroup. What a dog. JP Morgan. Morgan Stanley. Goldman Sachs. PNC. KRE. All right. Banks taking a break. Watching Apple. 40 seconds to go.
Only on Schwab Network.
20 seconds to go.
Sometimes, you could have done better.
Okay, folks. Weekend video will be out. Weekend video will be out Sunday around 2 p.m. Hope you have a great weekend. Take care. Got a hard stop. And that's the closing bell. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is July 17th, Friday. Closing bell. Markets trying to recover some of the losses. Didn't manage to do that at the end of the day. Closing down 76 handles right at the 50-day. Okay, it would have been better if we closed above the 50-day. The fact that we closed below the 50-day after being briefly above it is not a good sign for the bulls short term. So we'll see how that plays out. I do have some put flies on SPY for next week and the VIX calls for September 2025 call spreads. Have a great evening, everyone. Take care. We'll see you on Sunday. Ciao. Be safe.